that if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26 July. Only on NDTV. India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You got to be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on New York. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open, brought to you from the NDTV Profit Suzlon studios. And it's going to be an interesting morning because on the one hand, there is no abatement to anything, any of the action in the Strait of Hormuz. I'm sure you guys have been up watching the match, so you have to talk about that as well. Okay.
Neeraj, you did.
So if Neeraj is looking a little out of sorts, it's just because he was watching the match up perhaps till late in the night. And yeah,
it was worth it though.
Yeah, it was
the comeback.
Okay, just 10-20 seconds out there. So it's been the Argentinian playbook, right? This whole World Cup, they managed to come back from dire situations and score. I just felt that though England kind of gave it away simply because after scoring that first goal that England did,
the 55th minute.
Yes, they really went into a shell. Argentina was given the playbook to go out and attack, and I think they must have tried or made an attempt of at least, if I'm not wrong, 15 chances. Whether not all 15 would have gone on the post, but I think they wave after wave of Argentinian attack, and then eventually they had to get a hold through. And well, the GOAT effectively assisted twice.
Oh,
in
really?
some sense. Yeah.
Oh, okay.
The first one was an assist, more a pass and then a great goal. The second was clearly his shot, which was headed into the net. So yeah, too technical. But what I'm just saying is that it's great to see the defending champions and Messi in his final World Cup move into the final. So it'll be something that the entire world would maybe stay up and see on Sunday night.
Are you rooting for Argentina?
Yeah. Since the start.
Okay, so I'm rooting for Spain. Let's see who wins. There you go.
No, you have an upper hand. Spain played really good football, but the wave might be with Argentina.
I always pick the underdog.
Okay. Right now, then you will have to pick Argentina.
No, it's Spain.
No, as per the odds, well and truly.
Oh.
So the only thing I wanted to add was that interesting nuggets that our colleague Nimit pulled out going into this match. He correlated the economic situation of these countries and every time they have won a World Cup.
Wow.
So for Argentina, it's always been a pretty bleak situation economically when they have won a World Cup, and they're actually improving this time round. So let's see if that goes through. Every time they've won, they've had triple-digit inflation, a terrible time. This time, under the new leader, things are slightly improving. So, is there a correlation or not is something that we can say. But it's not all about football. Let me just pull up the implied open for India before we move ahead, because at the end of the day, the question is whether Indian markets are going to sustain with what's happening with results on one end, and then you have the geopolitical crisis brewing on the other, and you're seeing a 20-point uptick, pretty much like what you saw yesterday. Meanwhile, US markets closed in the green as inflation fears eased and banking results surprised positively. If you pull up the key indices, you'll see everything up in the green, but it's the Nasdaq that led the pack with a 0.62% uptick. Let's pull up US futures as well. So a couple of things happening in US markets, right? For one, the PPI figures, that's the producer price index figures, were good. Again, inflation cooling off. And on the other, you have good banking results. In fact, Treasury yields also eased as June PPI has dropped to 0.3%. The expectation was that it would be flat. The 10-year is at 4.55%. Oil prices have stayed elevated as the U.S. has resumed its blockade of the Strait of Hormuz, and the Brent is at $85. So it's at least staying over there. Meanwhile, a barrage of strikes have marked the fifth consecutive day of kinetic action against Iran from the U.S. When asked if this is going to continue, the U.S. President Donald Trump says he doesn't believe in deadlines.
Are you giving Iran a deadline before you start bombing Britain?
I don't like giving deadlines, but they pretty much know. They know the story.
So are you meaning
they better behave. The country is booming, and we'll have Iran defeated soon. They'll be defeated very soon. And then I guess it'll be even better. But you know, even during this, it's been amazing. I mean, to think. So I call it a military operation, but call it whatever you want. It's incredible. It's like it hasn't made a dent. A lot of people thought oil would go up to $350 a barrel, and today it's at $79. A couple of days ago, it was at $68. It went up a little bit because I had to take tough action because they did not obey what they're supposed to obey. I mean, they just didn't do it. So we took a little action, but it'll all, when that settles down, I think you're going to have $55 oil, which is all great for what you're doing, maybe less than that.
Okay, let's pull up Asian markets as well as they've been doing this morning. Before we move ahead, in a bit of a mixed bag then, the Nikkei seeing more pain, 3.5% down, the Hang Seng about 1% up, as is the Shanghai, also down in the red. India Open, as we told you, is expected to be flat to positive. Santosh Rao, Head of Research Partner, Manhattan Venture Partners, joining us this morning. Santosh, very good morning to you and great to have you on the show. As always, what do you think is going to be the biggest positive coming out for India from the perspective that emerging market funds are also skewing a bit? If you look at data for June so far, India perhaps has had the most foreign investment compared to its peers. Do you think that's a changing trend, or it's just because of what is happening with one or two stocks?
Yeah, I mean it's good. I mean it was going to happen sooner or later, and it's good that it's happening. But I think it's still too early to say anything. There's so much geopolitical pressure, tension. We don't know where the energy prices are going. Especially if the war spreads to the Houthis start creating problems on the Red Sea. I think we'll have two arteries blocked, and that's going to be a major shift, major hit to the energy market. So we don't know where this is going. The rhetoric is very heated, and I hope it doesn't escalate too much. But at this point, very good that funds are coming back into India or coming into India. That's good, emerging markets. So, but let's wait and see if U.S. is still a good safe haven right now. Markets are great here. The yields are up here. I mean, he might raise rates rather than lower rates, so there's going to be more risk, better returns here than outside. So there are a lot of balls in the air at this point. So I wouldn't rush to any judgment, but so far it's good that funds are flowing into India.
Got it. Yeah. So the question, though, Santosh, and good morning, Alex here, is what happens to crude oil prices, and is that the fulcrum really that's going to determine whether flows continue to come through into India? At least on the one hand, you can say that the flurry of outflows has dissipated somewhat. So do you foresee a situation in the very short term that's going to reverse, or is it likely to continue as we've seen so far till such time as the confidence in the US economy, as you've just been highlighting, starts to wane a little bit?
Yeah. See, I think the thing about energy prices, it has a domino effect. If it goes up, it has an effect across the board. And it has an effect on inflation, which might have an effect on the rates and the dollar and everything. So it's such spillover effect. So we don't want that. And the Fed chair is determined not to have inflation as a big issue. So let's wait and see. To that extent, it affects the international markets. But I think so much funds were flowing out of India. I think it's time it came back, and it's understandable that there are a lot of good values there in India. I don't follow it at that granular level, but at a very high level, I think it's understandable that emerging markets will start getting a flow back. But at this point, I think US is still the place to be, considering that the fundamentals are still good. They're not really affected by so much with this energy issues as the rest of the world, because the US is self-sufficient. But then we need the rest of the world to be in sync with us also. So I think so there is an impact, not immediate, but there is a second-order impact on US as well. So let's wait and see where this goes. Hopefully, things come back to some kind of a normal state where money starts, trade starts going around back to normal.
Santosh, the other piece is whether this whole move towards, the Asian markets, which had this whole AI trade and the leveraged losses that have come into the SK Hynix 3X ETF or otherwise, down massively, right, from those highs. Could it happen that money flows into Asia and into EMs, but flows into India, as you say, and even if it doesn't flow into some of the other markets, because usually EMs tend to see flows as a bucket, right, as a cohort. So could South Korea's loss, if you will, etc., also hurt India, despite the fact that India is still reasonable?
Yeah, I think you can say that. It can have an effect there as well. This whole AI trade, I think it's reaching a point where there are a lot of questions coming up. Yes, AI is good. It's going to be great. It's revolution, technology revolution, all that. But we still don't know. There's still the ROI question. We don't know whether there is return. You just saw New York said they're going to ban data centers. That's going to slow down things. So there are a lot of other effects going on as well. But at the face of it, AI is great, and it's going to help in the end. If Korea loses, India will gain. I don't see why not. But at this point, I don't know the exact correlation. But net, I think it's going to grow. It's going to grow wherever there is demand, wherever it's possible to grow, and India will make it very easy for AI trade to grow, because every country needs that at this point. So it's kind of a tricky question, but I don't know exactly how that will play out. But overall, I think Korea's loss will be India's gain, I think, in the long run.
All right. Thanks so much, Santosh, for taking the time. Pleasure speaking with you as always.
Thank you.
All right, let's talk about what happened in trade yesterday. It was actually quite an interesting session, despite the fact that you had the equity markets that just about ended in the green. Take a look at this, right? There was an intraday plunge where the Nifty 50 lost 134 points in 6 minutes, starting 12:51 p.m. And the broader markets fell in tandem, but actually outperformed the benchmark. Interestingly, it was a couple of heavyweight banking names that saw that same sharp move intraday. The rest of the heavyweights didn't really display that same action, at least from my perspective. HDFC Bank and ICICI Bank had very similar intraday charts, and of course, as a result of which, the Nifty Bank also showcased that same move. There you go. So pull up those two, similar, right? HDFC Bank starker than ICICI Bank, and now pull up the Nifty 50 and you'll see exactly that same move, and pull up the Nifty Bank. All of them at the same time moving down. So it's likely on account of these two heavyweights that you saw that very sharp crack in the benchmark. You had gains in the Nifty Bank that was supported by the PSU banks. The IT index actually started off the day pretty weak, and from that rocky start, it actually ended over 200 points up, and it ended off the low point of the day significantly so, down about 0.6%. But metal, IT, FMCG, realty were all underperforming in trade yesterday. They lost ground. The mid-cap index gaining about 0.4%. Small cap index also up about 0.7%. The breadth was positive at the end of the session, but lower than what it was before that sharp crack that you saw. Ather Energy was a significant gainer on the back of Inomoto's stake increase notification. LTTS and Tata Elxsi were the interesting pair. They actually moved in opposite directions, and on closing yesterday, we had a comparison between the two to say
Why is it that these two companies are moving in different directions?
Yeah, well, and a lot of these sectoral plays could continue being focused today, right? If anything, in today's session, there is this cohort of stocks which will all be in news, so quite amazing. But I think, Alex, you summed it up really well, because what seems to be happening in trade, and by the way, here's an interesting statistic before we get to did you know, because you might actually want to look at it from an investing perspective too. Because a lot of Indian pharma companies cater to that market. The estimated US health spending in 2025 was $5.7 trillion, which was up 7.3% from a year earlier. The projections for 2034 is nearly $9 trillion. So if you are wondering why is it that some of the Indian pharma companies which supply to the US are seeing some crazy bids, it may well be because of this. There's some serious buying and serious supply and serious order flow up ahead for them. Anyway, as the trade setup, as Alex put it, I think very rightly, that buyers are failing to sustain the early gains due to the mild risk-off mood, and that is presumably because of higher oil prices. And therefore, you would want to believe that the index will probably stay soft unless oil prices come under some bit of a check. I mean, we're still at 85, 86. There's no big pullback, or not even a hint of a pullback that has happened into oil prices in the last 2 or 3 days, which is, well, not great news for Indian markets, right? And today, like we said, there will be a lot of the cohort of stocks which will be in focus. So semiconductor stocks, the Adani Group stocks, life insurance names, simply because of, I mean, the Adani Group stocks have two or three large ones have news flow to them. Life insurance, couple of results that the markets may react to. Oil marketing companies might actually have a bit of a read through from MRPL, and we'll kind of talk about that. So keep all of those in mind. And just an alert, the other reason why, aside of individual news flow, that the Adani Group stocks could remain in focus is because Gautam Adani has denied any deal linked to the US indictment dismissal in a sworn affidavit filed 12 hours ago. It's something that was a precursor to something that the US authorities had laid down as a precursor that they will have to file an affidavit. I think that is being done, and they've denied any wrongdoing. So keep an eye out. Yesterday, a lot of these stocks and markets at large were a bit soft. Today, slightly higher. Maybe there might be some reactions to these names as well. So keep in mind, standard disclaimer, of course, the Adani Group owns NDTV and you're watching NDTV Profit. But yeah, lots of cohorts, Tamanna, which are in news this morning.
I would add to that all your EMS players, your Dixon, Amber, Keynes of the world, not just about semiconductor, the mobile PLI is also in play. You have a large number of insurance companies and AMCs that have posted, so watch out for that pack as well. But at the end of the day, it depends on what the core confidence of the market is, because markets have extended their consolidation for another session, trading with Monday's 260-point range before ending marginally higher. Technical indicators continue to point to a sideways trend. Overall trend remains range-bound with no strong directional momentum. 24,000 to 23,950 zone acts as a crucial support. Holding above this zone keeps the bullish structure intact, while a decisive break below it could trigger a deeper consolidation. On the upside, 24,300 remains the immediate hurdle, followed by 24,500 to 24,600. For the Bank Nifty, the index has locked into a strict 1,000-point consolidation bracket. Strong immediate resistance stands firm at 58,200, with core demand safety layered at 57,200 to 56,900. There's an interesting take by CLSA as well on the price action. Lawrence Polanco has authored it. Says Nifty continues to consolidate within this well-defined 23,100 to 24,515 trading range, supports at 23,100 to 23,103, and resistance at 24,500 to 24,515. This shorter-term range sits within a much broader consolidation pattern that has developed since the 2024 highs. Major support at 21,743 to 21,800, resistance at 25,600 to 26,319. So he says that until one of these boundaries is decisively breached, range-bound conditions are likely to persist. Technical backdrop remains considerably more constructive in India's mid and small cap segments. I think that's a story now which is well told. Puneet joining in though for the FNO setup this morning. Good morning, Puneet.
Good morning, Tamanna, and all of you as well. It's been as you rightly mentioned, right? It's been a range-bound kind of a trading session where we are back again at that 24,100, 24,200 mark. So looking for more cues at this point of time. And the implied open, while indicating a mild start in the green, something that we'll watch out for. Today also is the Sensex expiry, so watch out for some volatility that comes through on that front. But the Bank Nifty as well, and a very important next couple of days as well for the index, because you will see big earnings come through on Saturday. So the Bank Nifty as well, let's move on and show that picture as well. At 57,700 currently is hovering between that 57,200 to 58,200 mark, and a decisive trade only above 58,800 could signify the next level of upside. Now, what we've seen, as you mentioned, on some of the insurance names as well as the AMC names, that the earnings have been actually quite good. So you will be expecting some more especially on the commentary for the banks, and might need that leg of performance for the markets as well. On an overall basis, an Argentina-like performance to say the least, because the deposits and the quarterly numbers have actually been, the updates have been quite strong at this point of time. Foreign investors, sold out yesterday as well. The index long also has been very depressed at that 10 to 11% mark, and has actually, inched up below as well now at that 8.3. So 92% shorts being yet held by them in the F&O market. And the open interest distribution also continues to show us the trend that it has been over the last week or so. That 24,000 has the most active put contracts with the highest red candlestick bar on the left of your screen. 24,400, 24,500 are seeing the most active call contracts, and we're still not yet seeing 24,800 being activated. So could be a range-bound kind of move unless earnings triggers come through and follow through as well. And finally, for stock-specific action, you've seen Tata Elxsi, Patanjali Foods, both stocks under pressure yesterday on back of news flows, of course, for both of them, while Hyundai Motors also saw some kind of long build-up. If that follows through, will be something to watch. And for the loser side, you had ABB as well as Kalyan Jewellers, a couple of names. Kalyan Jewellers, after a really, really long time, seeing that short covering kind of build up, but almost up 40 to 50% in a very short period of time is the other key trigger. So overall, these are some of the F&O cues to watch out for, and how the day goes through as well.
And I think Union Bank definitely in focus after its results yesterday, so watch out for that. But I'm starting off with Himadri Chemicals on my watch list. It's a thumbs up from my end. Why? Highest ever quarterly revenue growth driven by specialty products, and a higher share of specialty carbon black and value-added products have supported realizations. Other expenses have impacted the EBITDA margin, but the margin is still within the guided range. PAT margin has remained stable due to other income. They've entered into premium super specialty carbon black segment as well, and are setting up India's first commercial carbon nanotube facility. Here are the core numbers. Net profit 26.3% up move at 230 crores. Revenues are up about 28% at 1432 crores. EBITDA is up 17.6% at 288 crores. And margins are at 20.1% versus 21.9%. That's because of expenses, as we talked about. Other income was at 56.3 crores versus 26.7 crores. And they've approved a capex for 170 crores for manufacturing a new segment of SSCB. They've approved, so this is an important one to look at. ICICI Lombard is the other one on my radar, and you'll hear from the management ahead on the show, on the program today. It's a thumbs down. Net profit is down 46% at 403 crores versus 747 crores. This is a year-on-year figure. Net premium earned is at 5,950 crores versus 5,136 crores. So this is an improvement. Net premium earned has gone up 16%. Solvency ratio is at 2.71 versus 2.67 quarter on quarter. Morgan Stanley has maintained an equal weight with a target price of 1,920. They've said it's a weak quarter and an uncertain earning outlook. Two large losses in the fire segment and an adverse Supreme Court judgment has led to prudent reserve creation hurting profits. The latter development could have further material implications. Core results were also muted, and they see a downside to estimates. So expect perhaps a bit of a negative reaction today. Angel One is the other one. Now, it depends on whether you look at these numbers quarter on quarter or year on year. If you look at them year on year, it's a good set of numbers. Revenue is up 25%. PAT is up 2x at 231 crores, and margins are at 32.7%, which is an uptick of over 1,000 basis points, 1,085 basis points. Ex-IPL spends numbers have beaten estimates. There's a profit before tax growth as well, quarter on quarter. User base is up 3.2% quarter on quarter. Strong growth in wealth management and the AMC assets under management. Citi is maintaining a buy with a target price of 380 rupees. They're saying strong improvement in margin profile and focuses on containing overheads, provide further headroom for margin expansion. So those are the first three on my list.
Very interesting. I've got, so you got ICICI Lombard to look forward to at 10 a.m. So watch out for that as well. We'll be speaking to the management. On my list, I've got HDB Financial. Numbers came out and the PAT growth was actually pretty strong, above estimates. You had a steady uptick in disbursements as well, 16% or thereabouts. And the profitability aided by NIM expansion that has come in 20 basis points higher at 8.4% compared with 8.2% in the previous quarter. Asset quality is improved as well. The ROA is pretty steady, stands at 2.5%. And the valuations are not terribly expensive, but there are, let's face it, several options in the financial space that are significantly cheaper. It currently trades at trailing 2.9 times price to book. But the net profit gaining as much as 38% should give this particular stock a shot in the arm. There is a brokerage note that says just that. In fact, Jefferies on HDB Financials have maintained a buy, slightly hiked their target price to 880 from 845. They say that the PAT is a tad ahead, the NIM is expanded, asset quality is improved, awaiting growth pickup though. This is something to bear in mind. Disbursements are at 16%. For a book the size of HDB Financial, one would assume that they would grow faster than that. So that's the only sort of niggling issue that the company will have to deal with. AUM growth inched up, led by strong growth in consumer, according to Jefferies. NIMs have improved on better yield and should stay range bound. With favorable seasonality in H2, credit cost can surprise positively. Watch out for that one. The second one is also a financial stock in Jana Small Finance Bank. Of course, it faced headwinds on account of its promoter having missed a payment on debt, and so therefore that went into ratings watch. From the perspective of their stake getting sold, potentially getting sold, but the numbers that the company has posted are very, very solid. It's solid growth across metrics. You had an expansion in the net interest margin, which aided the profitability. That happened because their CASA growth was pretty significant and the cost of funds dropping quite substantially to 7.4% compared with 7.97% a year ago. The asset quality is also improved and they've actually seen slippages drop 13% sequentially, over 40% on a year-on-year basis. The advances growth is also well ahead of the system at 26%. I think gold loans growing at 113%, the vehicle loans growing at 78%. So growth in loan book is not really a concern for them, and they've actually upped the ante with regard to profitability as well. The NII growth is 33%, PAT growth is over 50%, gross NPAs have improved on a sequential basis, net NPA is 0.85% and the NIM at 7.5% compared with 7.2%, all positives. And finally, I've picked a brokerage note, HDFC AMC, the numbers came through during market hours. Kotak has weighed in. It's downgraded to add from buy and hiked the target price to 3,000 from 2,950. Strong execution is what they're saying, but that is priced in, and there could be limited upside according to Kotak from this point. So while it's a positive set of numbers, it's largely in the price, is what several brokerages have actually argued. The core earnings growth is in line at 10% year on year, and the equity mix is up 100 basis points sequentially. The margins maintained despite regulatory changes, and the blended yields improved in the quarter gone by. So interesting. I think both of these stocks reacted in trade yesterday, ICICI Pru AMC and HDFC AMC.
Yeah, and the AMC is in focus completely yesterday. The life insurance names,
today,
as Tamanna said, completely in focus today. I think what if we spoke of Angel One as well?
Yeah.
There is an update on Grow also, by the way, which is that Grow has become the largest commodities derivatives player. They also had a con call, but they've become the largest commodities derivatives player by notional average daily turnover, which is that ADTO in quarter one. The reason why I brought it up is because Groww has displaced Angel One as the largest player. So Groww's ADTO, notional ADTO, which is the average daily turnover, notional average daily turnover, is 2.43 lakh crores. It's displaced Angel One's 2.37 lakh crores, and well, that's quite something. So by the way, they also had a con call Groww, where this is Billion Brains Garage Groww, and they've also had a con call. They're saying that MTF book is adding 6 to 7 billion every quarter. They expect it to continue. Cash yields are up 5%. Further sequential gains are expected. No material retail impact seen from RBI's prop trading guarantee tightening. And the wealth RM build out continues with AI-led productivity. So that could be interesting to see if there is some further gains into Groww in the session today. So do watch out for that. Of course, it displaced Angel One, but Angel One has other things as well.
But Groww's name is turning out to be a self-fulfilling prophecy. Because if you look at the performance of this company quarter on quarter since listing, and the scale at which, I don't want to say growing, but the scale at which it is moving up, it is phenomenal.
Yeah, you saw the Citi note as well. They've hiked their target price to 255 from 230.
No, I haven't, but okay. So that's interesting.
And they're saying that the same thing that you're saying, new products can and provide an upside going forward. But they're also cautioning that business momentum might have softened just a tad bit. The growth going forward will be run by the new businesses, seemingly.
Interesting.
Is what they say.
At some point of time, maybe we should try and do this again, because I know that we've done this. My faint memory is that I've done this about how Groww. I mean, since 2020 COVID lows, right? When Zerodha was right up there, and then Angel One became the number one. The landscape has been the same for everybody. How these guys have come in and managed to displace the new age companies and become the number one.
Yeah.
Right? I mean, displacing, let's say, the traditional brokers with a platform which Zerodha did or Angel One did is one thing. But displacing the platform companies while the landscape is the same, I mean, they've done quite something. Yeah. So, pretty interesting. Okay, MRPL is the other one. For itself, MRPL is okay. Remember, it's had a bit of a gain in the last 10 days, if you will, MRPL and Chennai Petro, the refineries effectively. But the MRPL's numbers are out. Revenues are up 60% odd. The EBITDA margin, though, quarter on quarter has slipped about 3.4%. Profit after tax, though, just because of the fact that they've done so well per se, and there is a one-off as well, is at 946 crores versus 117 crores. This is quarter-on-quarter numbers. Throughput went up too, which is a significant volume recovery for MRPL. Just keep in mind, though, as Sumit highlighted in an internal mail, not on screen, that the reported profit after tax includes a one-off income of 470 crores related to the revision of certain petroleum prices. But be that as it may, despite that, the QOQ numbers, the YOY numbers all look very good on a reported basis. The calculated GRMs, though, are about $8.3 per barrel, which are better than expected because there was going to be inventory loss, windfall tax, etc. So the numbers are, I would say, okay-ish relative to the rally that they've had. Maybe they have a bit more spurt, but Sumit believes that there is a bit of a read-through for oil marketing companies as well. So bear that in mind. I wonder if MRPL's performance today will also be a precursor for what Chennai Petro does, because they've tended to move in tandem. So let's wait and watch. Though Chennai Petro may be much better refinery performance, and that's why if you look at the 7-day or a 10-day chart, you will see MRPL having gained, but Chennai Petro having done just that little bit better than MRPL. So bear that in mind. Let's see if there is a relation today. Very quickly, MV4. Okay, this is the 1-month chart for this one. MRPL, Chennai Petro, I think, has done just a tad bit better the last 10-15 days. Okay, very quickly, MV Photovoltaic, revenues up 51%, EBITDA margin at 35 versus 34%, net profit 380 crores versus 188 crores. You can't fault the company for any of these numbers. Module-driven growth supported by record quarterly production volumes and healthy demand. And Jefferies has maintained the buy, but they've hiked the target price to 400 from 360. They are raising their FY27-28 EBITDA guidance, and they are projecting 30% EBITDA CAGR from FY26 to 29 for MV. So watch out for this one as well today, expensive as it may be.
Yeah, just want to quickly pull up some of the mobile PLI names. So it's a 62,800 crore mobile PLI, which has been passed by the cabinet yesterday. One is for semiconductors. This is mobile PLI 2.0. But some interesting things. India is the second largest manufacturer of mobiles in the world now. One of our largest exports has become mobile phones.
Who would have thought?
Yeah, it's a huge change in the last few years. So here's what's happened. Cabinet has of course approved that 62,500 crore rupee mobile PLI scheme. This is the 2.01. And this is what Jeffrey is saying about it. They're saying Dixon was the key beneficiary of PLI 1.0, but they see higher competition now versus calendar year 2021. Initial outlay seems higher, but tenure at 5 years is a tad lower. This scheme, this is the Electronic Component Manufacturing Scheme, or ECMS, has already approved 5 camera modules: Keynes, Syrma, Essox, Uno Minda, Dixon, and 3D Specialty Application, Samsung, Dixon, and Wangda. So you have quite a few which have already been approved. Watch out for some of these today. I thought this strategy note by HSBC was also interesting. I wonder what you guys think, where Harold van der Linde is saying that they've upgraded India to neutral as risks to earnings fall. They've upgraded to neutral from underweight. Sensex 2026 end target is now at 84,000. Lower energy prices and resilience in consumption have lowered the earnings risk. FIIs turn net buyers as recent measures stabilize the currency. Key concern is on the sustainability of these inflows, especially as attention shifts back to AI-linked opportunities. So,
yeah.
I mean, he's talking about a clear turnaround there, and we hope we can get Harold down to speak with us on this. That'll be interesting.
About that. Yeah. He's been a bit constructive too. Just one last thing. I know we've really extended our time, but I just wanted to mention Patanjali, because that's one more other stock. Was down about 14.5% yesterday. Now, as things turn out, GQG still hasn't sold any stake. So that overhang remains, and 700 crores mark for delivery. There was some serious delivery-based selling yesterday.
Yeah.
So let's see if there is further pressure on this.
We had the management on a phoner, and the stock after that management commentary did come off from the low point, which was 18-19%. I think Hiral did that conversation. It should be available on our social media platforms.
Worth listening to for sure.
Yeah.
Just the
they
fact
kept saying that we don't know what's going on because there were so many, rumors swirling about what action, what impact, are there any investigations, etc. They said we don't know what's going on. Everything is fine, business as usual, not on the stock. But could that change today? Could it get worse? Is what you need to see. We'll take a very short break. We have all the big ideas for you this morning on the other side. Parag Thakkar, Kush Bora will be joining in. Stay tuned for all that and more.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit, most
Welcome back. You're watching India Market Open. Just pull up the implied open before we move ahead, and you're seeing an improvement in the kind of start that we could have. Are we finally ready for that kind of a breakout is the question, despite crude still being at 84, 85. Khush Bora and Parag Thakkar in the studios. I think I'm going to go to Parag Bhai first because Khush is bursting to talk about the semi-final.
Even if you go to Parag Bhai, I'll come in.
You can't. Today you can't.
Okay. I know Khush has a lot to talk about.
He's planned his wardrobe and all accordingly. Yeah.
My God.
Is this a
India
football
colors. India colors.
This is very clear na which team I'm supporting for the finals.
India.
Spain. No. Okay, but two clarifications. One, I know there is a very happy lad on the table here. Very happy one. Just can't stop beaming. The other one, जो कल मैंने बोला about Argentina and all that. Let's be honest, my angst was towards FIFA. Everything that they've been doing and under political pressure and whatever. So all kudos to Argentina, all kudos to Messi. Before the start of the tournament, I was all कि हाँ Argentina Messi जीतना चाहिए. Now during the course, whatever has happened, I have switched loyalties. ठीक है, but they're very deserving finalists. Let's put it that way. Goal तो अच्छे मारे हैं उन्होंने. तो congratulations.
Well, congratulations to the Argentinian team. I'm just a Messi fan, but yeah, it's great. It's great to see them.
But a lot of people have actually said that this particular match, it was devoid of controversy. Apart from that one offside rule, which actually I thought it was not offside.
And we have a footballer here.
Yeah, exactly.
So anyway, but. Okay, enough time spent on Argentina. Let's talk about the markets.
Fine. Yeah. No, so, and there is one more clarification, which is, see, yesterday we spoke of stocks, right? कि अच्छा नहीं कर रहे हैं. And I think just about a few days ago, I had said that this mid segment is going to do well, right? So perhaps slightly contrasting views, not really. It's the time frame. I still feel that from a medium to a long-term perspective, mids are going to do very well. It's just that, right now we're in that space where they are not. In fact, if the team can bring up the advanced decline chart for yesterday, I'll show you something interesting, which, Alex, I'm sure, pointed out in the closing show. At the start, we had about 400 to 500. Yeah, that's the one. Thank you. 400 stocks declining. During the course of the day, it just constantly kept going up. The day prior, it was, I think, about 2,000 stocks to declines. So, funny things happening in stocks right now. Hence, I say, thoda light raho. It's okay. Tight stop losses rakho. Okay, so that's the thing on how stocks are behaving right now in the market. Now, very interesting, similar behavior on the Nifty as well. Consolidation on 23,800 to 24,300 wala jo hum range baat kar rahe hain. Sorry, market still respecting that. The good thing is we are testing the upper end of the range and not the lower end, right? 20-day moving average still being respected. 50-day moving average to test hi nahi hua hai abhi tak, right? That's a good thing. There is range contraction, typically followed by big moves and range expansion. So in the coming days, we could get that. This year, we've had big moves on the downside. This time, it could be different and we could have a big up move. Reasons for that? Like I said, consolidation with testing the upper range. FIIs are at 92% short. That itself is not a great number, but with the slightest trigger, you could have a big positive up move, right? So I'm still very constructive for Nifty 24,500, 24,900 kind of levels in some weeks to come. But like I said, my bias remains positive on the Nifty. You could go long near 24,000 mark and 23,800, 23,700. That remains your stop loss.
Just a very quick follow-up to what you saw around 1250, and if you look at the intraday chart for the Nifty 50, and if you look at ICICI Bank and HDFC Bank, they seem to be the culprit. So did you spot anything?
I think this has to do something with the positioning. Because we've got just 2 days left and all these banks will be giving out earnings. So maybe if someone had a view and they wanted to switch, they didn't want to take the the expiry day as the day to make that move. Perhaps they've taken a non-expiry quiet day and a relatively quieter time of the day, to make that adjustment. I don't think there is anything sinister or wrong with it. The Bank Nifty and the HDFC Bank ICICI Bank setup, so largely positive.
Just a quick word, Parag Bhai, on the whole host of BFSI results that have come. A lot of insurance names, some AMC names. What was your initial thought on it?
So Union Bank was very good, 16 bips margin improvement. So my view is it should trade at one time at least on FY28, which is 205 to 215 kind of thing. I think yesterday closed at around 173. And the guidance for NIM expansion is also very good. So I would say that worst is behind for Union Bank very clearly. Then ICICI Pru Life, their VNB margin improved to 26.7% because their protection business and annuity business grew very smartly. So that is one. There, the stock is completely undervalued at one time price to embedded value. It can go to 1.2 times, which means it can go to 600, 615. The only overhang is this Prudential would want to sell its 21% stake to buy a stake in Bharti. So that overhang remains. But numbers-wise, result-wise and valuation-wise, it looks very attractive.
Okay. And your picks this morning, Kush?
Yeah, after a while, I'm going with only two stocks, both of them on the long side, but because, like I said, stocks are all over the place, no point dishing out too many. Two which do have strength, Alembic Pharma and Lloyd's Metal. Again, these are stocks that we've discussed in the past also, did very well yesterday as well. So Alembic Pharma for targets of 875 and 900 and a stop loss at 825. And Lloyd's Metal also showing strength as it has given a breakout again on the back of good volumes. So 1920, 1990. Nostalgia more than a target, and 1815, that's your stop loss.
Okay, let's talk a bit about Paytm. Paytm will also be in focus as its board meets on the 20th of July to consider its first ever bonus issue alongside June quarter results. Sharad joining in with more details on this. Sharad.
Well, it seems like this is the second major reward coming for the shareholders, and there's a board meeting on July 20th for, of course, Q1 earnings and bonus issue as well. This will be the first one. To put things in perspective, there's almost 7.5 lakh retail shareholders. Remember, the face value is at 1 rupees per share. The cash balance is at around roughly 13,000 crore rupees. And this is the first major action as a company which is Indian owned and controlled company. They had got this status in the March quarter itself, and of course there is a good momentum coming in the buying, especially from the institutions as well. The corporate action for shareholders way back in December 2022, there was an open market buyback and the quantum of that was roughly 850 odd crore rupees. But there are some key positive triggers also which is there for Paytm. More institutional participation likely, that's what channel checks are suggesting, and there's a potential for a smoother and more efficient approvals coming in from the RBI and the regulatory business as well. And the street is of course expecting RBI approval for the wallet business. Haitong, which is a brokerage firm, they expect Paytm's GMV, which is a gross merchandise value, to grow between 25% CAGR over the next 3 years. So yes, the street is quite bullish, and maybe now we can see much more follow-on buying in this counter as well.
So Paytm in focus today. I don't know if you have a view on the charts on Paytm, Kush, more than anything else. Yeah?
Very positive. Yeah. There was a lull phase and then the stock corrected. That was more in line with markets. But right now, if you see this long consolidation phase of, the calendar year last quarter and, the initial bit of this calendar year, there was a consolidation phase, 1300, 1325, those levels were being tested. Now you're comfortably above it. Weekly setup also positive. I think this could actually very well extend to about 1450, 1600 kind of levels from a positional standpoint. Stop loss on this one, closer to the 1250, 1225 mark.
Okay, so Paytm in focus. I want to come to Parag Bhai very quickly on other stocks that you're finding interesting. There's a whole host that we were looking at, and one of them, I think, on our watch list as well was Mrs. Vectors with a it's a small cap with an investment coming in from Abacus. Is that a company that you've looked at?
Yeah, I have looked at it many years ago. Actually, it's a very clean, good company, good auditors, clean cash flow. So last year they made operating cash flow of 218 crores. There is no debt. English Oven is their bakery brand, and biscuits also. They export also. I think worst is behind for them, and stock is also near 52.
What was the worst which you're saying is behind?
So stock is at 52-week low.
Okay.
Stock is at 52-week low. Trailing P is only 36 times. for a FMCG kind of company. It's a very small cap company, 5,189 crore market cap and 36 PE trailing. But I think that it is one of the cleaner companies in the small cap space where auditors, cash flow, everything, it fits the bill. Earlier we were discussing, right, that before buying any new small cap name, you should see all these points. So it ticks all the boxes. And valuations are attractive. Stock is at 52-week low.
I recall, of course, the IPO quite a while back. It was
several years
ago. So if I remember correct, okay, I've actually got the screen in front of me. 2020 December was when they listed, right? But around 2024 end was when they reached 423 rupees per share, and they've dropped from that. Since you've looked at the company, what is the reason?
So last 3 years, their EBITDA, if you see, is 143 crore.
Okay.
Our market is a slave of earnings, right? Market doesn't know who owns the stock.
And you're saying that this is set to improve now?
If you just go through the earning call after Q4, they have indicated that things will look better. For example, for their bakery business, this time March was Navratri, where people eat less egg, cakes and all that. This time it is April. So this March was Navratri. Last year April was Navratri. So this quarter should look good. Exports, they have clearly they have said that exports are going to improve. Margins, if all these raw material prices don't go up too much, margins can also improve. So I think mid-teen growth is what you can expect from this company.
If you have stuck around since listing, as an investor, it's a tough call because already 41%
This is adjusted for the splits of whatever bonus, whatever they have given.
Yeah, we'll have to come back and check on that. But Mrs. Bector's also on the radar. But let me go across to Somit Sarkar joining in now with all the chatter from the dealing room this morning. Somit.
Be quiet. Well, the couple of stocks that come up on the list, firstly, it's Container Corp and Bandhan Bank. Now, dealers are indicating that there are buy flows on the institutional desk. Both foreign and domestic institutions have been accumulating this counter, and delivery volumes are also on the higher side. For RK Forging, there's a buzz of a potential block deal that could come in anytime soon here. And when it comes to Polycab, there are sell flows on the large HNI desk. Dealers are expecting or indicating that the Q1 volumes could be on the weaker side. But there's also a rumor that there could be a block deal post the earnings that could come in. So keep an eye out for Polycab in trade. The numbers will be coming out today. For Kalyan Jewellers, the stock has gained more than 50% in the last few trading sessions. Now this was largely because a large FI was an active buyer in trade. But now dealers are indicating that the last leg of buying is now happening, and this could get over anytime soon. So keep an eye out for Kalyan Jewellers as well. Then there is SRF and Tech Mahindra. There are buy flows on the large HNI desk. Dealers are expecting strong Q1 numbers from both the counters. And when it comes to the FMCG as a broad basket, there were sell flows in trade that we saw yesterday across the board. Dealers are indicating that a foreign broking firm might come out with a negative note on the entire FMCG space. So keep an eye out for the FMCG sector as well. And a couple of other stocks that we did indicate earlier. Ather Energy was part of a segment on July 13th where we did indicate that there could be a QIP which will open soon. And yesterday night, Ather Energy came out with that announcement. And Jana Small Finance Bank was part of a segment yesterday where we did indicate that the Q1 numbers are expected to be strong. And if you look at the profit number that the company has reported, it's pretty much ahead of what the street was anticipating. So keep an eye out for Jana Small Finance Bank as well in trade.
Okay. Somit, thanks a lot for that. Lots of stocks in cohorts which will be in news today. Somit, while you are with us though, very quickly, MRPL's read-through, what impact could it have on the oil marketing companies?
Well, for the oil marketing companies at this point of time, it's very difficult to predict what the earnings would be. But what we are picking up from the MRPL numbers is at least the fact that the refining side could report a better set of numbers. Now, if you look at MRPL's GRM, the calculated GRM stands at around $8.3 per barrel, which is much better compared to what the street was anticipating. And also, this number has to be should be taken with the fact that there was a lot of volatility in the first quarter of FY27. There was pressure coming in from the government side on the refining margin. Then there was volatility in the crude oil prices as well. Exports were on the lower side, and despite all these headwinds, the GRM number that MRPL has reported of $8.3 per barrel is quite strong. So this could have a positive impact on the oil marketing companies, at least for the refining side of the business.
Lot for that. Thanks a lot for that. Okay, so many stocks in news. Now, Parag bhai, We could talk about MRPL and read-through impact on OMCs. We can talk about Jana, and I know you want to talk about Jana because you like it.
Thanks.
So that could be one. Or even Ather, this 1,000 crore investment and that 8% uptick, and Ather Energy has been on a roll.
Yes.
I mean, you think of two electric two-wheeler companies and the contrasting fortunes that they've charted for themselves, right?
Which is the other one?
Ola. Ola. You don't know? So, Parag bhai, any of these three?
No, so Ather, I started liking from the day this war started, because I thought that this is a direction which government is across the world, who are the users of crude oil and energy, net importers, they will start thinking towards these lines that EV is going to be the future, and they will push EV, ethanol, whatever they can, renewable. So I would say that Ather is a very good hero, was holding 30%. Now they are further increasing their stake at this price. So I think Ather was...
If Parag Thakkar had a stake, will he increase his stake at this price?
I'm a big thumping the table buy on Bajaj Auto.
No, we're talking about Ather right now.
Ather at this price I cannot buy. See, I'll tell you, Bajaj Auto is building an electric company which is contributing 30% to its revenues right now. They can demerge it, and that can be a 50,000 crore market cap company too. They have electric three-wheelers also.
But the interesting point also is that even 4 or 5 years, I think that thesis holds right now, despite the fact that passenger vehicle companies are now moving towards more EV in their portfolio, with the Hyundai Creta EV, etc., making it more affordable, right?
And Vitara EV.
And Vitara EV. But at the same time, India, you have to watch for the affordability factor.
So two-wheelers will do
that's what I'm saying. And that adoption will continue to take place in the next few
I
years.
think there may be a tailwind for EVs. So this whole E20 controversy is going on, and of course government has come out and said there's no problem. OEMs have come out and said there's no problem. But for anyone who has a doubt, and social media has that impact, if you have a choice right now and you're not sure, you're seeing all of these videos that are making these claims, maybe you'll choose an EV instead for your next car. You'll say it's at higher price, but risk kyun lo? So I don't know. We'll have to wait for a couple of quarters to see if this is an actual impact. But you just may have a tailwind from this E20 concern that people seem to have, even though, of course, all of the authorities are doing a good job in dispelling this. But there is still going to be some concern persisting, which always happens with anything new, whenever there is a change.
Absolutely.
But, I think that is so well said, simply because forget it being new, even 1 year down the line, if there are people who are suspicious of this, no matter what the clarifications from anywhere come in, they will remain suspicious. It's actually very well put, because this could be a really big tailwind for anybody looking to buy the car as well. The person will think, she or he, that why go into this? EVs will be fine.
Or diesel cars, na? I mean, they're not very
diesel
common.
Cars are...
They're not very common.
I mean, milti kahan hai? And the government is so anti-diesel cars.
That is
No,
true.
and also the double reason for it is, one, question mark over this, if there is valid or not valid, I'm not saying. And the second is oil prices or petrol prices are always going to be high. And then if you want to buy pure petrol, then you're paying 160, 170 rupees a litre.
More than that. More than that.
You're not going to go there.
180, 190 more like.
So 180 a litre. So you're definitely, then if you're going to make that kind of a comparison, then...
180 for pure octane petrol.
Which is unmixed.
We are Maya models, we go for the cheaper petrol.
Unmixed.
No.
You can see it at the pump, it's an option. All right, let's talk about mobility a bit more and this interesting ground report that NDTV Profit has done from Amara Raja's Giga Corridor in Telangana. We spoke to Vikramaditya about the company's semicon aspiration and what lies ahead as well. Listen to that conversation with Puneet Javeri.
Foundation stone was laid in 10th August 2024. It's been I'm sure, a very tough 23 months coming through. We're of course standing where you will be assembling the battery packs as well. Talk us through a little bit of this process, because we saw of course the CQP line of how that you will be of course making those cells. Talk us a little bit about where we are currently and what does it mean for the company.
Sure. So this facility is actually the first, you can say, real production facility we built here in this campus. And it's important for us in many ways, because it's, being the first, it's also a place where we've been able to employ about 700 local youth, and that's about 85% of local, young women. So giving first-time jobs in their family, being able to, give a Otherwise, in this district, which is not the most economically forward, there's a lot of difficulty for getting the employment for local women, local young women especially. So I think that's been a very high mark for us. One of the models we have is rural development. We don't want people to have to go far away in order to go to work. So from the very first, whether we built our factories in Chittoor, our chairman also always talked about non-migratory jobs. So from that front, our Amaraja culture, this is very much in line with that. But coming to the technical side, what do we do in a battery pack plant? The cells, of course, are imported today because we don't really have significant capacity in India. We import cells mostly from China. We also have sources in Korea and Japan. But when they come here, in order to be a usable battery, the cell itself, it has all the energy, but you need to build, the proper casing around it to be safe, to be mechanically stable. You need to have the BMS to actually control and make the battery smart and intelligent to make it do what you want. But especially with low voltage, there's a little less kind of complication to it. So we get into higher voltage battery packs. It's a complex system. So in addition to the cell, how we package them, how we get the maximum amount of energy out of the cell without losing any wastage.
About the 2 gigawatts coming through for NMC now, that is between that and LFP, that is known as the older technology in very simpler terms. So you're mentioning that once that standard product goes through, you will want to look at more customized, more LFP kind of a capacity. So when you look at the total 16 gigawatts, would that be a fair assessment that majority of that, a lot of that will be LFP, but we'll start off with the basic, the NMC technology right now?
I would say that I would slightly recharacterize. So it's not about old and new. Yeah. NMC and LFP, they fundamentally play different roles. And I think for reasons of safety, cycle life, high temperature performance, LFP is going to probably have a much bigger share of the Indian market, whether it's stationary storage or electric mobility. But NMC in essence is a chemistry that allows us to, go for much higher C rates. It's more energy dense, so we can fit more energy into smaller packs. So it finds a very, convenient place in two-wheelers. Two-wheeler as it is, you don't have much space to put the battery pack. You don't have much weight to put the battery, to add onto the vehicle. So today, NMC is still the predominant chemistry in Indian two-wheeler. We also believe that, whether it's for cost cutting, whether there's other kind of elements and bringing other metrics to the forefront, there is, that chance that LFP also starts to see a significant share of Indian two-wheeler market. But I don't think we're ever going to completely write off NMC. It has a role and it can do certain things that LFP can't. Yeah. But going forward, LFP becomes the predominant chemistry we invest in. I would also say, there are some chances other things creep in. Sodium is having more and more use cases that are becoming relevant. It's becoming more commercially viable. So I think we kind of look at both of those with a keen lens to see what we have to go and invest in. LFP will make up the majority of our investment. The second thing I want to come back to is when we talk about customized versus more standard, whether it's NMC or LFP, our preference is always going to be to first start with our initial capacities with highly standard off-the-shelf product. So in LFP, I think after this initial capacity we're setting up, we are looking at getting into more stationary storage, because stationary storage applications, fortunately for us, they are a lot more amenable to standardized cell formats and sizes.
All right, that exclusive interview is available on our social media platforms. You should check it out. Stock is opening just about 0.5% higher. We've started trade, at least the pre-open session has started, and it'll take a little time for the dust to settle in all probability. You have the Nifty 50 that's trading cuts at the start, just about 0.3% or so, holding above 24,000. We'll take a look at the individual stocks as well. But before we do, let me introduce Shrikant Chauhan of Kotak Securities joining us this morning. Shrikant, very good morning to you, and thanks so much as always for taking the time. What would you say is the direction that the benchmark will take, and any view on the Bank Nifty as well?
Good morning, Alex. Good morning, everyone. For the Nifty, it is in the range. It is not crossing the important level of 24,250, 300 on the higher side. It is not breaking the level of 24,000. So we are seeing range bound sort of activity, and till the market is not crossing 24,260, we can see range bound sort of activity. So ideal strategy should be to be more on the stock side instead of focusing on the indices. But yes, in case market today closes below the mark of 24,000, then in that case, we can expect further more weakness. if we consider the stock specific activity, then in that specifically, in last few days, we have seen a good amount of buying interest in capital market related stocks. Today, we are specifically focusing on Grow, which currently around 216, 220, maybe in the pre-open, it will open somewhere close to 225 something, because the company has reported strong number. In case if there is any higher opening, then there also we should look for taking long bid with a stop loss at 212 with a target of 245. So there we are bullish. We also like a few capital goods or power transformers or power related stocks. In that, we like BHEL. Yesterday it closed around 417, 418. From current levels, the stock can move towards next newer level of 435, 436. We can keep a stop loss around 410 for the same.
Interesting. BHEL, if I remember correctly, saw a spike in trade yesterday. Let's take a look at the individual stocks that you should, yeah, there you go, towards the end of trade. Or actually, yeah. All right, that's a 3-month chart, my bad. All right, let's talk about stocks that you should watch out for in trade today, those that are buzzing. Varsha is joining in to tell you about some of those, and we can see whether they're reacting at the start. Varsha?
Well, I'll be talking about 4 stocks. Let me start with Adani Power, wherein they've signed 25-year PSA with MSEDCL. This is for 1600 megawatt. From a new plant. Now we also have GMR Airport, which has come out with their business update, where in June 2026 passenger traffic across a portfolio airport is down 0.3% year on year. Q1 FY27 traffic has reached a record 3.02 crore passengers, and the commercial operations at Nagpur, they've actually commenced the operations of Nagpur and Bhogapuram Airport, which has received almost 99.7% project completion. You have Jain Resource Recycling, wherein Tamil Nadu industrial authorities have issued a safety order for Unit 2 following the furnace fire incident. And then lastly, you have MedPlus Health, wherein the arm has got 3 suspension order for drug license for one of their stores in Karnataka.
All right, a few stocks from the broader markets that are reacting. You have Paytm, that is reacting positively. ITC Hotels is up and about. MRPL is up about 3% or so. Paytm, remember, is going to consider a bonus issue. Dixon Tech is up and about as well, reacting probably to the PLI, and that entire pack should be in focus at the start today. On the other end of the spectrum, those that are not doing particularly well, not too much actually. I see a tick in Bharat Forge. I think that will settle. It's down about 9%, but that's just the pre-open session. ICICI Lombard is losing ground at the start, and it might just be under a tad bit of pressure at the start. Let's see how that goes. Hindalco in focus on account of Kotak Securities note that has come through. It's betting big on the stock while upgrading its rating from a reduce to a buy. We've got Sharad joining in to tell you about what they're saying and what the target is. Sharad?
Well, yes, Alex, it's a very positive view coming in for Hindalco from Kotak Securities. Now, this is an upgrade coming to buy from reduce, and the target price also has been hiked from 1100 to 1120 rupees per share, and the broking house is quite bullish, especially on the comeback coming in for the counter. Now, disruptions are behind. Going ahead, there is normalization at play, and the growth projects would be there, which will be something which the street will be looking out for. The Indian division is expected to join the growth track, but this is going to happen from FY 2028. And if you look at the aluminium segment, the peak deficit is receding and the market tightness is likely to persist. And this will be, of course, auguring well for the prices as well. Balance sheet remains healthy, and despite the ongoing capex project, it seems like the overall operational numbers will be decent. And that's why Kotak Securities has upgraded this counter.
Okay, Hindalco, let's take a look at it, 1.5% up. But what's really catching my eye is ICICI Lombard General Insurance. We talked about how the results were less than pleasing. Brokerages seem to agree. The stock is currently 9% down. I want to look at some of the others that have reported. Let's look at an Angel One. Let's look at a Jana Small Finance Bank. Let's look at an MRPL. Angel One just about 0.5% up. Jana Small Finance Bank doing okay, 2.5% up. MRPL about 3.5% up. So decent set of numbers. One of the big movers right now. Ather Energy up and about once again this morning, about 2% up right now. Let's look at HDFC Life Insurance and HDB as well. Both have reported. HDFC Life is doing okay, about 2% up. HDB is about 3% up. I want to ask you, Parag Bhai, about Dixon Technologies. Because when you have this
PLI, two schemes actually which have been announced yesterday. One is the semiconductor mission, one is the mobile mission. And the mobile mission has had very clear and tangible results that we've seen in the 1.0. Can Dixon continue to ride the wave in the second version, or is it going to be chance for other players?
No, I think there will be a chance for other players also. Dixon has done absolutely brilliantly, I would say. They have executed it very well, and this Vivo thing also got. But I would not be a buyer at this price because of the valuations. But I would say that, and Government of India has done a phenomenal job in this electronic side. We were importing so much of electronics. And this government has completely changed it. Now we are second largest, I think, mobile exporter, right?
Yes, we are.
So I think...
and one of our largest commodity exports is mobile phones.
Yeah. So I think government has done a phenomenal job.
Out of them, iPhones is the largest component across the world. So there are a lot of people right now using the new iPhone 17 Pro Max.
Sorry.
Before I said that, it's okay. It's on the way, I'm sure.
No, I think PSU bank turnaround and this electronic manufacturing are the two big achievements of this government. There's no doubt about it.
But will you buy Dixon?
No, I'm not going to buy Dixon.
Are you buying Sirma? Are you buying Amber?
No, I'm not. I'm not participating in this space in much in a greater way.
No, but my question is, okay. So if you are appreciating what has been done, you want to write the India story.
No, so 9,800 or so. One of my colleague was recommending at 12,000. One of my other colleague was recommending to buy Dixon, but I.
So this is a FOMO stock.
So I will not chase. That's not my nature. By the way, just on vectors we spoke, the PAT number has remained at 143 crores. EBITDA was 250, just to correct. I meant PAT number was 143
crores. It's up and about today.
Okay. Yeah, but it's because Abacus has come in and bought. Shrikant, just on Dixon very quickly.
So for Dixon, there already we saw a good amount of rally in last few weeks. Currently, the stock is very close to its important resistance level of 14,500, 14,600. At these levels, it is better to stay away from taking any short-term view. Yes, if there is a medium to long-term view, then I am of the view that certainly one should look for adding these stocks with a long-term view, because eventually I am expecting stock to move towards the levels of 17,000 or 17,500. But for the time being at these levels, it is better to stay away.
But I mean, it's been a great recovery for a large cap stock, and I'm qualifying large cap as in 58, 60,000, 83 crores of market cap, right? So it is a large cap name to bounce back from those 10,000, 11,000 odd levels to 14,000 the way it has. It's pretty commendable. A cohort of stocks which might come in focus today because of the results of one of the leading companies, which is Polycab. I think the numbers come out today or tomorrow, either of the 2 days. And yesterday, there was some interesting price action in Polycab. It's down about 100, 150 rupees from those intraday peaks yesterday. This conversation of Havells also having a slightly sluggish quarter. So this whole cable and wire segment, Kushbora, if you can look up some of these on the charts and tell if there is any pronounced weakness, or is it difficult to say that right now?
So, not particularly in Polycab itself. I mean, Polycab, yes, there is weakness, but not a pronounced one. So, around 8,800, 8,900, if it does take support, it might consolidate. There is definitely weakness in Havells. There has been a selling pressure going on, but for the last week or so, there is volume-backed selling yet again. So, if you want a shorting candidate, Havells is one of them. Polycab, I would wait for 8,800, 8,900 levels to be broken. If a breakdown comes, below those levels, then I think the structure could actually weaken on this one.
We were speaking about Dixon. I'm coming back to it because I just want to check with Shrikant. Shrikant, on the charts is up about 3.3%. From what I can see on the 30th of March, 9673 was the low point, and from that point it's gained quite considerably. Would you say that there's further upside from this? If you miss this rally and you have a little bit of FOMO, which Parag Bhai says you should not succumb to at all, on the charts, would you suggest a buy right now?
I also agree with Parag Bhai, because the stock has rallied a lot. In fact, in last few months, in 2 months or 3 months, we saw rally towards 14,000 from the levels of 10,000 or 9,000, where the stock has spent maximum time. Now the stock is approaching to the 50% retracement of the entire fall. And in maybe 500, 400 points more, we can see a good amount of resistance. So at this level, if it is opening at 14,100, 200, we should just stay away from it. But yes, in case if it falls to 13,500, 600, there we should look for taking some long bets.
It's not showing any signs. I want to see what's happening to Grow. We were talking about Grow as well. The results have been good. You've had good commentary. Neeraj pointed out about how in the commodities segment as well that they have become number one. Let's just listen into what the management said in the conference call yesterday.
When we started Grow, we had a very simple and very, very big goal to democratize wealth in India. And as I mentioned in my last call, that every quarter you will hear the same thing again and again, and we'll continue following the same purpose for many more years. Our strategy has also been consistent throughout last 10 years, and that is to improve the user experience and keep launching more and more products that our customers want. And this customer-focused strategy has also led to the creation of a platform that is loved by like millions of customers. That strategy is also taken from starting from mutual funds to stocks, derivatives, MTF, and many more products. The most recent one being commodities, where we achieved like more than 28% market share, retail market share in terms of notional ADTO.
Okay. So that is the market share figure that he's talking about. Grow or Angel One, Parag bhai?
No, I think both are great companies. Grow has done phenomenally well.
But if you can buy only one?
Then I would go with Angel. Because Angel is trading at 30p and trailing, I'm saying, and Grow is trading at 60p. But I would agree to it that Grow has done phenomenally well. 1,35,000 crore market cap created.
In amazing. A short span of
Angel
time.
is at 31,000 crore. So I would say that amazing work done by this Grow promoters and founders. Great congrats to them.
Yeah.
You bet.
Okay, just quickly looking at some of the other movers before we go into the market open. MRPL also in focus. Quick view, Kush Bora on an MRPL on charts, as well as if you can look at Ather on charts.
Ather Energy. Yesterday I spoke of how Bellrise is a stock that you should buy on every dip. Ather falls squarely in that category, very clear on that. So any dip closer to 1150, 1200 levels should be taken as an opportunity to buy. MRPL has rebounded, but is in a consolidation phase. I like Chennai Petro over it purely because of the strength.
Shrikant, last 10 seconds, anything beyond what we've spoken about that you're spotting?
I think new age technologies or platform stocks in that eternal. There we have a bullish view. We are expecting stock to move towards 305, 315 in the near term. Currently it is opening around 299, so it's a buy with a stop loss at 290.
Much like Dixon, really, a stock that has recovered a lot of losses or a lot of ground in the last 1 odd month and is really rallying, and that is Eternal. But what do the markets do this morning? Let's pull up the markets. 61 points on open. And the market breadth is positive, 1328 to 398 decline. So therefore, the breadth looks optimistic. Banks aren't participating. I wonder what is. Let's pull up Nifty IT and see if Nifty IT is doing okay. And then let's, oh wow, 1.24% higher. So a bit of a bounce back after the drubbing that the global names took and a little bit of collateral damage that may have happened to Indian IT as well. Very quickly, just the small cap space will come up on your screen. The mid caps are 0.21%, the small caps are 0.27%. Pretty impressive market breadth for the kind of start that the indices have had at the mid space. Let's get the heat map up on the screen, show you what is moving and what is not. Okay, the winners deserve a mention, and because life insurance would be in focus because of results, reportage and otherwise, HDFC Life promptly reacting 1.8%. I think it got some more work to do before it can really be called a trending name. For now, starting on fire, HCL Tech yet again green, Infosys is a bit of green, Eternal, Shrikant Chauhan just mentioned this, up about 1% yet again, Trent TCS again gaining, Hindalco, a big brokerage call today, and I think that stock is up about 1%. Mahindra & Mahindra is not doing too badly. Well, but a fair degree of green on that limited Nifty uptick. What is in the red though? SBI Life. So opposite ends, HDFC Life versus SBI Life. And again, you can argue with reason. Bajaj Finserv is down. ONGC is down. No particular reason, just that it had rallied a bit because of crude, and now crude is steady for the last 2 days. But the winner has to be tech. and the right names, if you will, because if you see that TCS is carrying on again, doing well, but HCL Tech, that big order win, good results beat, all of that is showing in the way the stock is doing, bouncing back on every dip. That's become the characteristic of HCL the last few days. Pretty interesting start here.
Okay, you know, I dare say more action in the broader markets today because of all of the stock specific news that has been coming. The mid cap is okay, pretty much flat to positive. Small cap is doing better, 0.5% up, and that's why you're seeing this advance decline ratio skewed quite strongly towards the advances. 598 declines to 1586 advances as well. Let's pull up the sectoral heat map, and even that may not give you the full picture. It's the individual stocks which will, but it's Nifty IT's day out once again. But this is a seesaw like we've seen so many times before. One day up, one day down. You have to have a clear mind on what you want to do there. Nifty Consumer Durable also showing a spike. This is possibly because of all of the cabinet decisions which were announced yesterday, including PLI schemes on semiconductors as well as on mobile phones and that hardware pieces as well. On the losing side, just 0.26% down is the Nifty India defense sector. Nothing really to worry about there, and it's also very sparsely populated. But that entire line is showing you that this is mostly a green screen this morning. Let's get to individual stocks where all the action is. I want to start with Paytm. Their first bonus issue will be announced 20th of July when the board meeting comes in, completely flat. That spike that you saw pre-open session seems to have cooled off. Let's look at Dixon Tech, Syrma, Amber, Keynes Tech, all of those PLI scheme beneficiaries. Dixon really sparkling today, 7% up on a stock that has seen its fair share of up move. 2% up on a Syrma. Amber, Keynes Tech is something that we should pull up as well. All of them up and about. Keynes is about 2% up, 3% up right now. Let's look at the results factors. Union Bank, decent set of results, stock not doing too great. Angel One, numbers look good year on year, Q on Q, there's a bit of pressure that's showing on the stock. MRPL, also decent set of numbers that have come in. I want to look at MV Photovoltaic, Jana Small Finance Bank. MV is doing very well, 5% up there. Jana Small Finance Bank is okay. ICICI Lombard, we gave it a thumbs down. Brokerages are not very sure there will be a recovery anytime soon, 10% down on that stock. HDB Financial and HDFC Life are the other two I'm looking at. HDB is doing well. Just let's pull up Mrs. Bector. We've been talking about this stock. Abacus has taken a stake, about 6.5% up. So you have enough winners at least to spot today, Alex, and that is truly a relief.
It certainly is, and beyond the list that you've put together so comprehensively, I want to call out a few more stocks from the broader markets that are doing well. Zensar Tech is one that is doing well. It's up about 5% or so. Sonata Software is gaining ground. You have BLS International that's up about 4% or thereabouts. And very interestingly, LTTS is building on the gains from yesterday, and it's a further 3.3% higher today. I wonder whether you can build into that. Keynes Tech is doing okay, and you also have Chennai Petro that is rising alongside MRPL, which it usually does. It moves in tandem with MRPL. It's up about 3% or thereabouts. So I do want to ask Kush Bora what he thinks about a couple of these stocks. Zensar Tech for one, LTTS, would you ride that rally, or do you see perhaps signs of fatigue creeping in? And something like a Keynes Tech as well. Keynes Tech actually beneficiary of the PLI scheme, right? So, but let me ask you for the first two.
So, as far as Zensar and Sonata goes, Sonata is actually seeing a good move. The resistance is around the 200-day moving average, so might just consolidate here. The delivery markup on this one for the last about 2.5-3 months has been quite phenomenal, but that's also been backed by major price action. What happens after that is that it goes into a lull period, and there's distribution and the stock just kind of gives way. So I wouldn't really buy into Sonata Soft right now. Zensar also attempting a breakout, but resistance near the 545-550 zone, so you might want to wait. Keynes attempting a recovery, but I like PG Electroplast in this space, and we've spoken about that as a call yesterday, doing fairly well today also. So I might continue to hold on PG Electroplast and buy into that rather than Keynes. LTTS approaching the resistance level 3650, 3700, already had a rally for the last 2 days, but not overheated. So not a buy right now, but definitely a hold with a stop loss just under 3600.
Got it. Okay, let me also ask Shrikant what he thinks about MRPL and Chennai Petro at these levels, right? Because both those stocks buzzing in trade, they've had quite the interesting week, Shrikant, because a few days back they gained the pair of them and then they cooled off very substantially day before yesterday, if I remember correctly. What would you do with these two stocks?
Yeah, absolutely. After a very long time, we are seeing some sustained activity in Chennai Petro as well as MRPL. But in that, as Kush said, I also agree that Chennai Petro is relatively better. It is forming some series of higher top, higher bottom. It has been consolidating since last almost, let's say, 2 months. But now it is very close to its breakout level. So on the dismissal of that, we can expect 1400, 1450 sort of level. So it's a positional buy at current levels around 1200, 1210 with a stop loss of 1140 with a target of 1400 or 1450. So out of this, relatively better is Chennai Petro.
Well, and it's actually done slightly better than MRPL per se, so which is not too surprising. What else? MV Photovoltaic, the numbers look good. I wonder if the stock is reacting at all to those numbers. Jefferies is up the target price 6% higher for MV, so bear that in mind. India Pesticides, the fungicide received the EU technical equivalence approval. I wonder if IPL or India Pesticides is reacting at all to that piece of news for itself. And then there is GMR Airports, wherein the Delhi airport reported the highest ever Q1 passenger traffic, up about 7%, highest ever Q1 cargo volumes as well. No, GMR isn't quite reacting. One that is reacting, of course, is MV Photovoltaic, right? So this whole solar play, Parag Thakkar, if indeed we are going the EV way, and if the government is going to increase penetration of EV, clean fuel, etc., there is no way it can happen without renewable energy push, right? Are any of these companies worth looking at, and MV in particular, now that it is reacting so well to that 51% uptick in revenue and more than a 50% uptick in profit after tax?
Yeah, so basically I am not playing it through any standalone solar plays. I am playing it through, for example, Grasim also bought a large portfolio of 5,000 megawatts for 17,000 crores. This in the Aditya Birla renewable subsidiary. So I am playing it through various other things like EV. I said Bajaj Auto.
But why wouldn't you play?
Because my view is that I play new sectors through the names or corporates whom I know better.
Okay.
I don't want to have a governance risk in that.
Is there an old sector that you're playing through a corporate that you don't know better?
Sorry?
There were a couple of double negatives thrown into that.
No, I don't want to play any governance risk in the portfolio. I am managing people's money. So I don't want accidents in the portfolio.
Fair call. Okay, very quickly, Kush Bora, MV Photovoltaic or any other solar company. So I'll give you the names, right? MV Photovoltaic, you could argue Vari, you could argue Premier Energies, Vikram Solar, etc.
MV Photovoltaic, splendid moves, just consolidating. So more of a hold because, right, like I said, it's consolidating, volumes also going for it. So you might want to hold it, stop loss 345. Premier Energies, by the way, is on a
42% up in a month. Over 3 months. It's not consolidating, right? It is gained.
No, for the last 3 weeks.
3 weeks. Okay.
For the last 3 weeks, it's consolidating. If you see the high for about 3 weeks ago was similar at 369, 370, right? And that's why consolidating. As far as Premier goes, it's on the verge of a long-term breakout above this 1120, 1150 mark. Definitely a hold. In fact, if you want to build preemptive, you could add at these levels also. Stop loss around the 1025 mark. So more constructive on Premier because of that preempted breakout.
Okay. EMS stocks are reacting in trade as Cabinet has cleared a couple of mega projects. One, of course, is the 62,500 crore mobile phone manufacturing scheme for FY27 to FY31, offering incentives up to 5% plus extra benefits for domestic sourcing and R&D. Puneet is here with details and potential beneficiaries. Puneet, this is one of two schemes, isn't it? The other one is on semiconductors.
Well, most certainly. And, apart from the big winners, like Dixon Tech and Amber, which you're also seeing a stock price reaction, there are multiple key winners coming through as well. And as you rightly said, 62,500 crores. Now, this scheme, the amount is also important because compared to PLI 1.0 for mobiles, which was pegged at 38,600 crores. This is, much bigger than that in terms of the initial outlay that has been confirmed. The PLI 1.0 also led to almost 99.2% mobiles now being domestically manufactured, and this scheme is targeting both the components, and here are the other winners as well, apart from the two major ones, as well as what you've seen on the export side of things. So 2.25 to 5% of incentives will be available, but almost a percent and a half incentives will be available on the component side. You've already seen multiple players get approvals under the ECMS scheme, so they'll get an additional benefit here with this new scheme too. The first one and the big beneficiary, of course, is Dixon Tech, where almost 13% of its current mobile phone volumes are already being exported. So they will also get additional benefit on those. So the business is already ready. Incentives now come through as well. Jeffries Doe has highlighted that the competition is higher compared to the previous cycle of PLI. So you have to watch out for new names, especially in the unlisted space like Bhagwati amongst others, but also Amber now, which has a tie-up with Oppo. And that's the second big beneficiary of this as well. Macquarie feels Amber is actually a sleeper beneficiary with the Oppo mobile coming in and more fag-ended into FY 28 and 29, but certainly the benefits through. And finally, on the component side as well, as I mentioned, so 5 companies in the camera modules already have approvals. They are Keynes, Sirma, Uno Minda as well as Dixon. So Uno Minda is another one who already has approval. And on the last bit, the ECMS display part, which already has benefit of Dixon as well. So Dixon is the only company that gets both components and finished good benefit. But there are the others also who have a big leg up because of these incentives.
Okay, well, certainly some spark there into select names. Let's just see if that were to continue. So keep an eye out for them. The other, and we've discussed Dixon quite a bit already, so I won't go there. But ICICI Lombard, and that, let's pull that stock firstly up, and then I'll get you what the Morgan Stanley view is on that one. It's down 10%. Morgan Stanley is maintaining an equal bit to the target price of 1920 after this quarter. But I mean, so their target price is certainly way higher than the behavior of the stock today, independent of the price of the stock. They say though that the Q1 is a weak quarter and there is an uncertain earnings outlook. And in this period of uncertainty, what you don't want is an uncertain earnings outlook, and I think that is what is hurting the street today. They say 2 large fire losses, SC verdict-led reserves weigh in on profit. Supreme Court judgment could have further material implications. Core results were also muted according to Morgan Stanley, and they see a downside there. So no surprise that this one is down and out today, 10% lower. Let's see what happens there. You'll of course hear the management, Gopal Balchandran, at 10 a.m. on NDTV Profit. So you want to stick to the channel and hear them as well. Parag bhai, we don't have much time. Quick 30 seconds. You have a view on ICICI Lombard.
So basically, it's a great franchise, but I think it has gone through some problems, which I'm sure you will find out through management. By the way, I spoke about ICICI Pru Life.
Yeah, which is fine. ICICI Lombard.
Lombard. So I would also listen to your what management has to say.
Perfect.
Because 10% fall in such a blue chip company is a good opportunity, but we have to understand how recurring this problem is.
Such a valid point. Great, Parag bhai. Great talking to you. Kush Bora, Shrikant Chauhan, thank you so much, gentlemen, for joining in today and giving us your views. Really appreciate your time. Okay, let's move on. Prestige Estates, sitting on a large unrecognized revenue book of 65,000 crores, backed by record pre-sales. Mumbai is doing well and they have a large presence here as well. Before we get in the management, Parth Johnson with more details to set the conversation up. Parth, over to you.
Yeah, 65,000 crores, that's a huge number, and that's what is sitting in the unrecognized revenue of Prestige Estates. That is also backed by the record FY26 pre-sales of almost 30,000 crores. Now this 65,000 crore unrecognized revenue is yet to be recognized because the projects are completed, but they are yet to be reflected in the books due to the accounting norms that are followed by the company. If we talk about this unrecognized revenue split as well, then the top 3 cities for this revenue are Bangalore with over 30,000 crores, Mumbai with almost 15,000 crores, and also Hyderabad with over 11,000 crores as well. About the future outlook as well, Prestige has said that they have a launch pipeline of 58,000 crores as of now, and they are targeting pre-sales and collection growth both in the range of 15 to 20%. So the key thing to watch for Prestige Estates will be the timeline for which they can recognize this huge number of 65,000 crore, and also if they're able to meet the FY27 guidance going forward.
For that very detailed setup, Irfan Razak, CMD of Prestige Group with us. Mr. Razak, thank you so much for speaking with us here at NDTV Profit. We always enjoy our conversations with you. I'm going to start with the 65,000 crore revenue number because it's something that has got the street excited. Not typical to talk about unrecognized revenue. And, you know, we don't usually do that. Just give us the context of that first.
Good morning. See, the accounting norms are such that whatever sales that happen are there in the books. These are all actual authentic sales which have been done, contracts that have been entered with customers, but they don't come into the P&L account. And they'll be only shown as advances received from customers in the balance sheet. The thing is that the revenue gets recognized only at the time of completion of the project, as per the Ind AS system of accounting, which auditors are following. And hence, what happens is all the expenses are front-ended, but the revenue and the profits are always back-ended. So this keeps coming in year on year as and when the projects get completed. And if this 65,000 crores is there, it's a consequence of the sales that have been done in the past years. And as we go along, this will keep increasing. At the same time, there will be a reduction as we complete projects. So it's a dynamic number which keeps going on. But that 65,000 has grown substantially over the last 2-3 years because of the robust sales that have happened. And I think that's a consequence of that. We just highlighted it just for that people recognize and understand that there is a pot of gold at the end of the rainbow.
Well put. So let's talk a bit about this pot of gold because it's important to say and it's important to see when you're looking at real estate companies and one versus the other. So this unrecognized revenue becomes important. What is the timeline like? And I know you've explained very well, Mr. Razak, that it's dynamic, right? It's not one block of 65,000 crores. It's a total. So depending on which projects when. But as is possible, as to the extent possible, can you tell us the timeline of recognition of this 65,000? How much in tranche 1, tranche 2? How many projects is this over? Or any sense you can give us in terms of details?
Yeah, this is over all projects that have been sold. So I think it will get recognized quarter on quarter, year on year. But what happens is, as we keep recognizing the completed projects, we'll also have sales. That's why I said it's dynamic. So like this quarter, we've done a fairly decent amount of sales, which is we are very happy about. And that is the reason why, it keeps on adding. While we are deducting from the completed projects, we are keeping on adding more and more. Like this year, we have guided sales for about 36 to 37,000 crores, which the company is very, very confident of achieving. So this goes and adds up to that 65,000. But at the same time, whatever gets completed, that gets reducted. So that's why I said it's a moving number.
Well put. How much do you think gets recognized in this quarter and the next?
I believe that, now we are completing projects like the Prestige City in Bangalore. We have also done some work in Mumbai. So all that will get recognized. Every quarter there will be something that keeps it coming into the P&L account. Why we highlighted this thing was that there is a lot of revenue that is there which is not being seen, and that the investors also need to understand that, and that's where the profits are.
Well described, Mr. Razak, and good morning. This is Alex here. I've been looking at the various updates that the company has been putting out over the course of the last 6 months, and you've acquired several tracts of land strategically in various pockets. So can you give us a sense of what the perspective the group has with regard to acquiring more land bank is? How much does the land bank currently stand at? And what is the plan with regard to processing of that and launches?
See, whenever we touch land, we buy land, the teams are working very hard to see that the land gets converted into a project. So the first step, of course, is acquiring the land either by purchasing the land or on a joint development basis. Then it's a question of conceptualizing, making sure the project is totally conceptualized, and then get in for approvals. And then once the approvals and the RERA comes in, we go for the launch. This process, from the time we get into a transaction for acquiring a land to the time we come to the market, it's a minimum of 9 months. That is the most aggressive timeline, or to about 15 months to 18 months. So that's the overall time gap that happens to see that we bring these to the market. We are, as a principle, we do not touch land just to buy it and keep it, because that, I believe, it's a drag on the balance sheet. We like to convert whatever we do as quickly as possible, bring it to the market, and also get into the revenue. And I believe that's the model that we've been following, and I think that's the way ahead also. And of late, we have tied up some lands in Chennai, lands in Hyderabad, lands in Goa, lands in Mumbai, of course, Bangalore, that's our hometown. The BD pipeline keeps going on, but at the same time, we are not sort of cavalier, in the sense we make sure that whatever we buy, whatever we commit, come at proper and decent numbers. There is a decent bottom line that is projected, and at the same time is economically viable. So it's a very careful strategy that goes on, and I think we are building a great pipeline.
It sounds like that, Mr. Razak, but just for my understanding, you pointed out the various areas in which you've added land. So let me ask you this: in this year, FY27, what is the quantum of land that the company has acquired? And from that perspective, what I'm trying to gauge is what you've described, which is that you will start converting in 9 months on an aggressive basis, probably 12 months is the normal course of business. And so what I'm trying to gauge is in FY28 and FY29, are you going to see a very dramatic increase in the top line growth, or is it going to be what we've seen in the recent past?
See, the endeavor is to obviously increase the top line growth. And if you ask me, what is the pipeline of launches that are there in the pipeline, which we've already got the land, and which is lands under approval, it's almost 80 to 90,000 crores worth of inventory that can come in as soon as possible, depending on how quickly we get the approvals. Like, see, for instance, the last quarter, we were to get in some 4 projects in Bangalore to launch it, but it just got postponed, and now I think that will happen in this quarter. Similarly, it's actually the effect of how quickly the approvals can come. But I think aggressively, I think this year also we should be able to launch around 60,000 crores worth of launches, if not more. And the endeavor is there to see that that's how we can get our targeted number of 36,000 crores or 37,000 crores top line. And we would like to see that it grows more. The market is good. There is demand. That is the only nice thing, is people are willing to commit. People are willing to buy. And if the product is in a good location, offered at a good number, people are buying. So there's no issue on that. The only issue is how quickly can we get the product to the market.
Okay.
Okay, Irfan, sir, thank you so much for speaking with us. We hope to have a more detailed conversation with you very, very soon, and talk a bit about, the fact that all of this fear about what's going to happen with AI to real estate, etc., is not really playing out on your numbers. So hope to speak with you soon as well. Irfan Razak, the one and only over there of the Prestige Group, speaking to us this morning. But I think ICICI Lombard is the stock in focus, nearly a 14% downtick now. Here's what the management is telling us.
Overall, the numbers were slightly mixed to weak set of numbers coming in. Of course, the fire segment impact is also there. But I just wanted to understand, the entire quarter, what was this entire impact coming in? And this impact for the underwriting also is something which is a little bit of concern coming for the street. So if you could just help us out with that.
Yeah, so good morning to you and to all your viewers in the first place. So before I kind of specifically answer in terms of how the quarter has gone by, let me just put this in context. I think when you look at from an overall market perspective, I think the demand momentum is very, very strong, and this is kind of reflective in most of the key economic indicators that you would see on the street. So, hence, to that extent, I think if you ask us, I think on the business momentum, I think very, very positive. And in that backdrop, when you look at for ICICI Lombard, for us, the thought process in terms of driving profitable growth as a theme is something that kind of continues. And that is what is exhibited when you look at even the quarter one numbers. I think the momentum in terms of growth, I think as what I articulated even for ICICI Lombard is very promising. And in the context of the outcome, the point that you asked on the underwriting slash, let's say, the combined ratio impact, I think I would kind of say that these are industry events. So, for example, I think we did call out even in our earnings call the recent impact of the judgment of the Honorable Supreme Court of India, which kind of impacted the overall motor third-party loss ratios in the range of 12 to 15%. And for ICICI Lombard, I think when you put this in context, the nature of the business is such that you kind of experience such judgments coming through at various points of time. Even in the past, we have seen the similar kind of judgments coming at different points. And in line with our approach to following a prudent and conservative reserving thought process, is where we have done our own assessment of the impact of this judgment. And rightfully so, we have taken the necessary charge in the numbers for Q1, and that impact alone is about 165 crores, and the combined ratio, or let's say the underwriting, has got influenced by almost about 2.8%. So that's one thing that viewers have to keep in mind. So this is clearly an industry event, and from the industry standpoint, I think I'm sure there are a lot of interventions that is being spoken about, and more importantly, I think the point that we spoke even in our earlier call on the need for a revision in the motor third-party price increase looks pretty much imminent. So hence, and apart from other interventions that the industry would kind of work upon. So that's one thing that you have to keep in mind when you look at the numbers. The second is, I think obviously we called out, I think during this quarter, we did have a couple of large risk fire losses that impacted our combined by roughly about 1%. But if you were to kind of just take both of these off and then look at it on an end basis,
right,
combined ratios stood pretty much flat.
Right. And Gopal sir, looking at the competitive pressure which is coming in the fire segment, do you think this competitive pressure will continue going ahead, or is there any kind of a sign of slowing down?
So again, I think I'll just put this in context. Unlike retail lines, which are relatively small in terms of the exposures that you underwrite, but clearly on the commercial lines, particularly fire, I think these are high exposures. And therefore, only companies which have got a strong brand, strong franchise, strong capital and net worth are in a position to kind of underwrite some of these risks. Which is the reason when you look at the reason for, and we did speak even in the April earnings call, as in to say that when the reinsurers who typically provide capital or capacity for underwriting large fire insurance policies, the last year, the experience for them was pretty soft. And that's the reason the renewal of the reinsurance program that happened for the current financial year tended kind of clearly reflected the pricing momentum. And that's what is reflective of the quarter for the entire industry. I think, again, if you look at it, the entire industry actually kind of degrew in fire by almost about 27%. Vis-a-vis that, I think our degrowth was obviously higher. I think we were about 32%. But the good news is when you look at for the month of June, I think the extent of degrowth has already got calibrated. So against the 27% for quarter one, the industry degrew by about 22% in the month of June. And for us, against the 32% degrowth that we had in quarter one, the degrowth in the month of June was 18%. Already it is showing signs of change relative to what we have seen in the preceding months. And this is exactly what happens because these are segments which cannot continue to exhibit price irrationalization for a long periods of time. And hence, to that extent, one should see a positive development happening there.
And Gopal sir, the elevated health claims which were there in the first quarter, are they also coming down? In the con call I was hearing, it seems like they are normalizing. If you could just give us some flavor on that.
Yeah, again, let me just kind of put this in terms of the breakdown. I think for us, when we talk of health, we talk of both, let's say the corporate health book or let's say the group health portfolio. and equally the retail health indemnity book, which is largely individual policies. If you look at our experience on the retail health book, that's an area where we have been significantly investing and growing our book. In line with what we have been speaking on the loss ratio to be kind of in that range of 65 to 70% for the retail indemnity portfolio. Even for the quarter gone by, the experience has been at about 66%. This number is actually better when you look at Q1 of last year, which had almost about a 74% loss ratio number for the retail indemnity book. On the group health side, I think we have had a bit elevated increase in claim incidences, and that's the reason that number moved up from about 96% to about 99% or thereabout. So again, early trends, and again, this is not something which is unique. That when we speak to players in the industry, we did realize that the claim incidence for the overall market has also kind of seen an increase in Q1, and obviously we will see how things play out for the rest of the year.
Right. And Gopal sir, analysts have also expected that the combined ratio which we are talking about is under pressure for the motor business because of that recent Supreme Court judgment coming in. Now this process or the pressure which is there, will this continue going ahead or is it just a seasonal impact?
Yeah, so again, you have to look at this in the context of where the industry is vis-a-vis, let's say, ICICI Lombard. And let me just give you couple of data points around it. If you look at the industry combined ratios on motor, actually got further elevated from 123% last year to 128% in the current year. Whereas for us, I think it broadly remained within that range of 105 to 106%. So the delta between the industry and us has further got expanded, and between ICICI Lombard's combined ratio on motor and the industry combined ratios in the industry is higher by almost about 21 basis points. So that speaks of the quality of the underwriting that we have been able to exhibit. And to your point on what could be the trajectory that the book could entail, I think that is the reason why I said there are a lot of variabilities that gets attached. For example, any motor third-party price revision is a great positive. The General Insurance Council on the Supreme Court judgment has filed a revision petition. So we will see how the outcome of that plays out. In terms of what is it that ICICI Lombard can do to create efficiencies in claim settlement, that will be a key variability. And finally, the adoptability of the judgment in terms of its actual impact playing through is something that one will be able to kind of experience over the next few quarters. So hence, all in all, when you try to put all of this together, and that's the reason why I called out at the start to say that insofar as we are concerned, I think the momentum for us is looking very promising. And what we have done at this point of time is followed our principle of prudence and conservatism in providing for the claim reserves. Pretty much everyone in the market will far more get impacted because their combined ratios are much elevated. So they will have to do a lot more intervention, which again augurs very well and positive for ICICI Lombard.
Okay, it's all about the earnings edge here on NDTV Profit as we're in the thick of the quarterly season and the result season. Let's talk a bit about Union Bank. We spoke with Ashish Pandey, the managing director at Union Bank, on the quarter gone by. Listen in to that conversation with my colleague Piyush.
I would like to start with the aspect of, where credit has grown very handsomely, and what took my attention was corporate loans. The large corporate loans have grown by around 15%. Where is the demand coming from? Which segments of corporates are posting these? And what is the overall corporate loans the quantum that is in the pipeline?
Yeah, so thank you so much, Piyushji, and also my namaskar, good evening to all the viewers listening to this. So thanks for the compliments. I always say the Unionites are very good. So the bank has in the turnaround story and they are doing well. And we worked upon various pillars. I always say the first was efficiency, second was the sustainable growth, and third was robustness in the balance sheet, robustness in the bank across the organization, and then ease of doing business for customers and the staff members. So I think we are working upon all these parameters, and today our set of numbers have come, and we can see as far as the Union Bank is concerned, which are in the highest, like the ROA or the NIM or the profit, and last quarter it was dividend as well. So it was one of the highest ever dividend which we have declared and approved in the AGM. So I think we are quite aligned to the strategy and what our board has guided. and we had a strategy meet, and we have made a 5-year plan, very, very exhaustive plan. So we are working upon that, and up till now we are actually in letter and spirit adhering to those plans. And now we are getting the offshoots, green shoots, and the initial results. So first of all, as you said, the credit growth, yes, even in the March quarter, December quarter, particularly March quarter, it was a very good, and you have seen almost 7% of a growth across. And the June quarter, generally it is sluggish because of transfers and postings and various things happening in a bank. But then we have posted, and corporate book, yes, as you said, that what are the areas. So areas are certainly infrastructure is one, and in which where renewable energy and the cement and similar things are there, and we are going. There are also the discounting of the receivables, maybe in case of maybe LRDs or maybe the road projects going to InvIT and all. So combination, I would say it is a combination of, but at the same time we are cautious about increasing our working capital presence in various corporates wherever we had a term loan. So that also we had a strategy, and we are working well in that group. So that is why you can see that as a corporate book we are having, and when you asked, so the total book that is sanctioned and undisbursed is around 1 lakh crore plus. So we do have a book, but then it it disbursed as per the stages, not the immediate one. But then quarter to quarter, month on month. So there is a repayment as well, certainly, and which every bank would like to have it on time, and certainly then disbursement happen. So keeping both in view, we are sufficiently that. RAM sector, certainly. So overall credit, if you ask me, we wish to be like whatever industry, if we can do better than that. So that is our aspiration. So we would like to be better in those growth on the credit side.
Sir, on the credit side, the government has come up with a very supportive scheme towards the MSMEs. In terms of ECLGS 5.0 from Union Bank, how many loans have been sanctioned or disbursed, and what is your target? How many loans do you expect to disburse under the ECLGS 5.0 scheme?
I believe not means actual figure. If you ask me, 12,000 crore is the sanction amount, and 10,000 is the disbursement amount as of now. And certainly we hope that it may cross 18,000 total, because various stages, various places, approval and other things are there, which and it is now tracked because of the Jan Samarth portal. It is tracked everywhere. So we are tracking it, and we also had a basis you have asked on the MSME. We had done on all our regional offices, around 140 across India. We have done a rigorous MSME meet with all our processing unit, regional heads, all those at the local level, and along with the zonal people, zonal head and all, and where our central office general manager MSME, vertical head, and the chief economist attended, and they had a one-to-one discussion with them on fuel cost, other input cost, on the the logistics cost rise, and so many export issues and other things. So what we are actually doing is we have compiled on a region basis, and we could see a wide difference basis the location of those MSMEs, cluster of MSMEs, and we are saying that and we are going to address those things in that fashion. So wherever ECLGS, I am actually we should appreciate our country and the regulator and the government of India both put together. They always come forward proactively to manage if anything going to come. So I think ECLGS 5.0 is one of the best of the scheme, and all the banks are implementing, we are implementing, and along with the RBI relief measures. So wherever that is required, where ECLGS, sometimes you need to give ad hoc because people are managing. So temporarily for few months they need some of the limit, or maybe the enhancement in the limit.
Right.
So actually we are addressing those, and that is why the SMA number, if you see, are the lowest one, above 5 crore in our bank. So MSME as such, we have not seen much of a concern.
Okay, all right. So that's the management of Union Bank, and the stock not doing too much, 0.5% down or so. The stock that is doing particularly well in trade today is Mangalore Refinery and Petrochemicals, MRPL. It's up as much as 9%. We'll talk about that and a few more buzzing stocks, including MapMyIndia. Stay tuned.
the day. Presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार. प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर.
Back with India Market Open right here on NDTV Profit. Now, C Infosystems. The stock has seen a sharp rally and therefore there is natural interest. But there are expectations of one, strong earnings, two, potential acquisitions, and a question that we have for the management about whether there is a broader shift for maybe them and for companies in this space from a maps business to something more AI driven and more offerings coming in as well. A lot of people like to call it vertical AI play as well. So before we get in, Rohan Verma, who's the joint managing director of CE Infosystems, let's go across to Sharad for setting up this conversation. Sharad.
Well, you're right. For MapMyIndia, the stock is up more than 30% in the last 1 month itself. Good volume-based buying coming in. And of course, Street is asking the question that a SaaS product, something like a MaaS, which is nothing but map as a service, is this converting to a verticalized AI play? And also, Street is expecting the Q1 numbers to be on the stronger side and also smelling an acquisition also. The company has a history of acquisitions in this space, and I checked the data for geospatial AI segment, and that market itself also will be growing almost from $37 billion to almost $63 billion, a CAGR of 11% in the next 4 years. So the question is the company changing from a SaaS or a MaaS product to a verticalized AI marketplace?
Let's pose some of those questions to Rohan Verma, Joint Managing Director, MapMyIndia. Rohan, good morning. This is Neeraj here, and thank you so much for joining us. There's a bit of a delay in our schedule, but really appreciate you accommodating this request. Can I start off with the basic? I mean, this whole conversation around, and all three of us have this question, by the way, so I'm taking it to you. This whole conversation about the industry or your company doing a verticalized AI, becoming a verticalized AI play. Can you just simplify it for our viewers?
Sure. We're a multi-product, multi-vertical company.
built on the foundation of an extremely large foundational data set of the real world, which is what we call our comprehensive map data. It's a proprietary data set. Just like LLMs are using the internet's data to power themselves, our foundational data set, which is proprietary, can be used to power extremely accurate, grounded, and powerful AI. On top of this map data, we have built various SaaS platforms which serve many, many industries. So absolutely, yes, in this AI native world where we have completely leaned into it, and over the last 6-8 years, we have been building various types of AI models on top of our data within our software. As we infuse AI natively into each of these softwares, it is not just one vertical AI, it is a multi-vertical AI that we can offer across our various products so that customers get the benefits of AI, whether through natural language interfaces or deep foundational intelligence that we bring to the table and combine it with their data and their workflows. So very interesting times for the industry. It is a unique opportunity for map data companies, which have a proprietary data set, as well as who offer SaaS to leapfrog into this proprietary AI world, which is called kind of large world models or world models broadly.
Rohan, are you saying that you may have, could it be a possibility that you might become also an AI as a service model in the sense that your proprietary data can be given to other users to use? Because if you're confident about using it yourself, you would be confident about giving it as a service if others want it. Could that happen? Are you already in such conversations?
Yeah, absolutely. I mean, our data product through our foundational data product, as well as our APIs, as well as our solutions, they do go to various organizations, especially in the new age tech or big tech companies. So as and when they need more and more data or more and more kind of APIs or solutions which add grounded, real world, accurate, grounded intelligence into their products, definitely that opens up opportunities or keeps our products kind of current with what the next generation of needs are for customers. And as we infuse AI into our navigation solutions, our GIS solutions, our IoT solutions, our analytics solutions, and our workflow workforce management solutions, our traditional enterprise customers across industry verticals can start getting the, let's say, the superpowered with our multi-vertical AI SaaS.
Rohan, hi, Alex here. So I'm actually going to ask a very simple question, which is that in a hypothetical situation, don't necessarily talk to me about any of your existing enterprise clients, but tell me a situation where previously, and this is my understanding of it, please correct me if I'm wrong, you were offering one service to one company, another service to another company. Because now you are offering a verticalized bundled product, you can club those two and offer them together as a bundled product or offering to an enterprise company. So can you give me a hypothetical scenario where you're describing a couple of your services or 3 or 4 of your services and you're now putting all of those together with AI?
You said it well. For actually each customer across each vertical, be it e-commerce or mobility or logistics or even defense or let's say banks, we have multiple products for multiple use cases. So in the case of, let's say, e-commerce, all the way from the entire long-haul logistics to the address picking and the consumer app, to the dark store site selection, to the tracking of the movement of goods and shipments through various IoT devices or mobile phones. There are multiple products we can offer. Or on the defense side, all the way from planning and having the whole strategic common operating picture using our GIS, to the mobile phones having completely no digital footprint-based navigation or field force coordination, to IoT devices for planning the movement of, let's say, logistics or equipment or even ammunition. There's so many different solutions we can provide in defense, which is multi-domain, or to automotive industry for ADAS or EV or shared mobility. So that is the interesting opportunity that is being unlocked. And that too, because we have kind of infused AI into our various products, and there are more coming down the line. I think that this gives next generation capabilities to our customers And that's what gives us the conviction for the business going forward.
It's live right now, or is this something we're talking about as a pipeline? So that's one. And two, therefore, from that perspective, in conversations that you're having or orders that you're already signing or have signed, is that something that is reflected in the order book or certain large orders that you've won?
There are many customers with whom already we have not just one, but multiple products that they are buying for multiple use cases.
Yeah.
Of course, there are some customers where we are only at one, and many customers who we have not been able to kind of get on board yet, but we are engaged in. So that is what happens, that as we unlock more and more use cases with customers and get more and more customers, who are in the same vertical but not yet our customer, that is what gives us the growth trajectory. Yes, the open order book reflects a lot of that, and the new funnel or pipeline that we have will reflect more of that in the coming time.
Rohan, good morning. Tamanna here. You've explained, I think, fairly well what this AI vertical option will look like. What does it do potentially to revenues coming in? For now, the Maps is the core service, right? Maps as a service is the core business. How much of revenue right now is being generated from there? And what is the potential you see as you expand this proprietary technology and AI platform that you have for a lot of other applications, depending on whatever each company needs?
Sure. See, actually, if you look at our business currently, or as of last year end, Maps is about 2/3 of our business, and IoT-based solutions are about 1/3 of our business. And within Maps also, there's a gradation between our map data related solutions and our GIS software related solutions. So actually, already we are kind of offering amongst our 6 or 7 core products, which are Maps, navigation, IoT and SaaS for logistics, mobility, GIS, analytics, digital transformation, to our 3 set of customers: automotive, corporate, which is private sector, and public sector, including defense. So it is a diversified business that we have. But of course, the share of business across different products and across different sub. But we see market opportunities for us across the board. And that's what there are 3-4 different kind of go-to markets.
A number. Give us a number. We've talked a lot about what it means, strategy, theory. It all sounds great. Give us a number. What is the potential to actually expand your order book, your revenues, when you're going to expand and when you're going to grow in this large space? For example, which are the current players that you could be competing with, and you would say that, hey, don't go to them. I'll give you everything that you need on the AI front. Okay, we seem to have lost that that video.
Time for the video
at that critical juncture. If we can get him back, I'll complete that question and hope for Rohan's answer.
25 to 40%.
Oh, there you are.
So,
there you are. Rohan, could you hear my question?
Yes, I could hear your question, and I said that open order book is at 1,700 crores, revenue at 470 crores, and EBITDA margins at 35 to 40%. This is where we are as of end of FY26, and we're in silent period, so I can't talk about numbers right now or going forward. But this is the basis for which we see multifold growth in the longer term. I definitely can't talk about at the quarter level or year level right now.
You need to make more acquisitions to actually make this happen and effectively execute what you're hoping to do?
See, we are always evaluating investments, both organic and inorganic. Last year also, we spent probably in the order of 50 to 100 crores of our cash, 35 crores inorganically to up our stake in our IoT business to 96%, and some other acquisitions for navigation, autonomy, GIS, etc. But also, we have invested a lot organically in our HD maps, in our navigation solutions, GIS. So this is a constant evaluation. Whatever gives us best ROI, return on capital, and strategically helps us achieve our objectives. When we see the right opportunity, we go after it, both inorganic and organic.
Okay, Rohan, you're being careful with your answers, and I understand you're in silent period. Thank you so much. Before I let you go, I must say, I think it's very cool that India, as a sovereign It's there. I mean, I use it. It's in my vehicle as well. Just one request as a customer, let's improve the accuracy. It should be a better experience than Google Maps.
Absolutely, totally well taken, Tamanna. We are continuously doing that. And sovereign in maps, GIS, IoT, analytics, and the digital transformation. There's many sovereign things we are doing across defense, private sector, and OEM. So, I mean, very exciting times. We just have to kind of heads down, execute. And I think the future looks bright for the country and our company.
Okay, thank you so much, Rohan, for speaking with us. So that was the conversation with MapMyIndia. I don't think you could give away much, but just that last bit about how every nation, just your geospatial technologies and figuring out where everything is not something after a point any nation wants to give in the hands of a company that is not headquartered where you are. So that sovereignty angle will be an important one to watch in the context of this company, I suppose.
Yeah, should be interesting. Let's see how well they do going ahead. But I know we'll do very well going ahead in the next 10-15 minutes because we got a really good guest, really special guest coming up on the show today. Vikash Kumar Jain, Managing Director, Head of Research and Strategist at CLSA India, joins in right now on the show. Vikash, thank you so much for waiting by. We wanted to start this conversation maybe a few minutes earlier, but I think there was an interview going on which had some technical glitches and therefore we had to finish it. But good talking to you today, Vikash. And I wonder if 3 months is a lifetime in the current scenario, and is your belief around what equity markets the world over and equity markets in India might do as a result of this being out? Because I remember, Vikash, the last time you made this comment that some of the global guys are telling you that, hey, Vikash, even if you don't attend the office, we will not notice you, that you've missed the office. So has that changed now?
Yeah, thanks for having me, Neeraj. Yes, it has changed, and the easy part about that answer is you don't have to talk to me to get that answer. You can see that on the screen. And the way you see it is actually not that obvious because if you look at the last quarter, India is still a rank, April to June, a rank underperformer when it comes to EM and Asia ex-Japan. But that headline hides much more than what it reveals, because if you go a little deeper, then and look at all large markets in the world, and there are of course these two markets which are on their own, in a different orbit altogether, which is Korea and Taiwan. If you strip that off, India has done better than all other EMs, other than Thailand, which is slightly better than India. So every other EM, which is China, Brazil, all the others are right on the other end of the spectrum, did not do very well in the last quarter. India did much better than all of them. So I think from the point of time where if we looked at this same number in the Jan to March quarter, India was the rank underperformer. Only Indonesia did worse than India. So that's a huge improvement. Yes, around the time of early April, when after about 18 months or so we turned bullish, at least when we were talking to our foreign clients, I was finding comfort in the fact that I don't have to put myself into their shoes where they ask me that, will India outperform EM and Asia? And I was, I used to say that my job is to ensure that your India money outperforms the benchmark. The difficult one will be whether it outperforms Korea and Taiwan, and that's how it has been. But our opinion has all, from that point on, turned that if you want to find anything beyond the very obvious AI trade, when I say Korea and Taiwan, it's largely 3 or 4 companies that we are talking about. So India did better than those largely 3 or 4 companies. Is great improvement the way I see it. So, but a large part of that, in fact, in the June month, India has now outperformed EM and Asia ex-Japan benchmark for the first time in 5-6 months. So yeah, we are turning the corner, but we're doing it quietly. And that's why, you're not seeing such big headlines yet.
Vikash, hi, morning, Alex here. Just wondering, in the context, and you've spoken about the relative performance of India and South Korea, people are worrying, right? Investors there because of the way that things are devolving very, very quickly. But having said that, the macro setup as things stand right now in the middle of July looks significantly better than it did look even 2 months back for India, doesn't it? And from that perspective, with earnings ramping up with the pace that they're coming through. And if the initial suggestions are accurate and more companies will surprise on the upside than not, then the path ahead for FY27 doesn't look so bleak on the earnings front too.
Yeah, I think some of those reasons, Alex, were the reasons why we turned constructive and quite bullish on India at the start of April. I would say that, yes, you make a comparison versus 2 months ago, but I think the macro setup has slightly deteriorated from where it was about a month ago. About a month ago, when we were talking of a peace deal and a clear setup and no worry around that, then the setup was far more clear. We were far more bullish, and it was an easier thing to know the sectors to bet on. Right now, it's got a little bit more clouded because the uncertainty on when this peace deal is off for sure. Now, when will peace actually return? Is that uncertainty? So, from a perspective of portfolio construct, yes, we need to be bullish, but there is a far bigger need to hedge our portfolios than how we were feeling, say, about a month ago, when peace had started and it appeared like it would be more durable. So yes, we've gone through this volatile kind of a setting. Sometime in April, May, things look really, really bad. India did a pretty good job in terms of holding itself together in the middle of that crisis. In fact, we did pretty well in terms of managing that crisis. June onwards, things started looking up quite a lot. And July, it's again got a little bit more clouded, nowhere close to as bad as March, April yet. But yes, we need to be a bit more careful.
Kash, very good morning to you. You know, there's an internal debate that we've been having, and I invite you to weigh in on that. My view is that as uncertain as things are, and you're right, it's this current peace deal is off. It's not going to get as bad as it did when you had crude at 120 and fear of nuclear war and the Gulf states getting bombed, etc. We learn to live with this version of it. Do you think that's being overtly optimistic?
So, Tamanna, I would like to say that there are times in the market when you can say that I cannot speak for this in a lot of confidence. I think this is one of those questions, and therefore, I would not want to ignore the implications of that when building my portfolio. So I would say that I am far less comfortable on the lasting nature of this trouble ending as I was in the middle of June. And the reason for that is we are far less protected now if this continued for another 2 months or so. Because of the way we've aggressively eaten out of the inventories in the developed world. If this continues for the next 2 to 3 months, then I think consequences can be really dire. So we cannot ignore that. The other thing is the intensity of the language and the way it has turned when both of these countries are talking about each other just makes me a little bit more worried. And finally, if, because we are dealing with, on the one side, a democratic nation where there could be important elections coming up, and the other side knows about it, that if it can just hold on closer to that elections, then it might be able to create more trouble. That just makes the situation that much more complicated. So all that I'm trying to say is that I would definitely want to be, I remain optimistic, remain positive, but I would still want to guard our portfolios from those potential risks. Basically, on this point, I would just want to say that maybe I don't want to take a call, and I'm a little unsure about it.
Fair enough. Okay, in that backdrop, so turning constructive on India relatively, this uncertainty prevails. What looks like a good idea to you right now, Vikas? Are you looking at some of the IT results and saying that, hey, maybe there's a turnaround there? Are you looking at BFSI and saying there's a safe spot? Are you looking at sectors maybe that the government wants to give a boost to, like we've seen with EMS players today?
Sure. So if we look at the setup that is likely to sustain for the next few months, there are two parts. One, of course, we just spoke about, which is we need to protect our portfolios from those potential risks. On that bit, definitely, I would say that we need to have some exposure to commodities because at the same point of time, what has happened is some of these commodities, which are, you can say, more war-sensitive commodities, which is, say, crude oil or which is aluminum, they've corrected quite a lot, and some of these commodity-related equities are actually pricing in even, levels where I would say even if the war were to end, they would not see a lot of downside. So that's the part of the hedge part of the portfolio. Then if you look at the other part of the portfolio where we kind of start seeing a more improved macro domestically, the first thing that comes to our mind is the setup around financials. Now, this is a very interesting point where what might happen is that chances of an RBI rate cut looks quite unlikely. And at the same point of time, RBI might take time to maybe have any kind of a rate hike as well. So we are in a bit of a pause where all the rate action has already got priced in terms of NIM contraction for large private banks. And on the other hand, now, because of some bit of increase in inflation, you could see higher credit demand in terms of working capital, etc. So that's a great setup for private banks. And rather oddly, this is also not a bad setup for NBFCs if the war situation doesn't go out of hand, because that will mean that yields cool off. So we will have no rate cuts, but we will have some kind of a cool off in yields, and that might also help some of the NBFCs as well. So that's a very that's a not a typical kind of thing which happens concurrently, but that's the kind of setup that we are in terms of financials. So financials is a space that we like. I would say, other than that, selectively trying to pick discretionary names where, number one, the dependence on war isn't really that much, and number two, I would say they are more protected in terms of margins. So that could be some bit of auto names, some bit of quick commerce and retail names where they're not so dependent on war-related inflation. Those could be other areas that we are looking at. And finally, if markets are all right and some beta returns, then we'd want to play that beta through real estate. That's how we are positioned in our portfolio, and that portfolio has done a reasonably good job in the first half of this year.
Vikash, let me quickly ask you, and you've described all of this pretty well and all of the rationale as well, but this whole data center theme and the fact that compute requires that infrastructure to be created, and so therefore you anticipate that will play out. Any of the companies that are involved in the nuts and bolts or picks and shovels, as you might want to call it, are any of those on your radar?
Well, I think a lot of those are not very large companies. There could be certain large companies where a portion of that is a data center play. But yes, so that's why, the portfolio that we describe is more of a large cap portfolio. So on a leveraged way to play that theme would not be easy, but there could certain companies which have exposure to direct or indirect in terms of data centers, whether in terms of capex of data center, whether in terms of providing some material which are core to data center or even energy. All of those would clearly be from off and on areas which will be of interest. But, I would not want to get into putting names to those.
Okay, Vikash, as we wrap up, who's the favorite for the final? Is it Spain or is it Argentina?
I would like to believe Argentina, but Spain will be difficult to beat.
Okay. Well, I was wanting to see if an equity strategist also has a strategy for the Football World Cup final or not.
He's being guarded with that answer.
Yeah, very guarded with that.
Everybody
I said I would like to like Argentina to win.
The question is, who's your favorite?
No, he said he'd like Argentina to win.
Yeah.
Heart says Argentina, mind says Spain.
Yeah, you could almost argue that heart says Messi, but the mind says Spain. Yeah, but well, we are on the same boat, Vikash. Alex isn't, but that's okay. Yeah. But anyways, great talking to you today. Thanks so much, Vikash, for joining in.
Thank you. Thanks for having me.
Yeah, the pleasure is ours. And well, as we wrap up the show, out of time completely, but just pull up the markets once and just show you what the Nifty is doing as we wrap up the first hour and a half of trade in a fair place. I mean, this is something that we could have accounted for or budgeted for. A lot of specific pockets doing the moves. So I think focus on very, very bottom-up stock-specific or sector-specific moves in today's case at least, because there are a lot of thematic moves today.
Snooze mode on the Nifty. Everyone
Which
else
is welcome.
which is welcome.
And the broader markets have actually also given up a tad bit of ground.
Yeah.
So let's see if that bears out. IT is doing particularly well today.
Yeah, IT usually stands out when nothing else is moving. But your stocks and what works for you is the big question. All of that coming up after the break. For now, that's all the time we have on the show. Thank you so much for watching. Stay tuned for more.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin remains range-bound near the $65,000 mark. DTCC starts SEC-cleared tokenization soft launch. Bitcoin ETFs break 8-week outflow streak. And Japan's upper house committee backs Bitcoin ETF. Well, those were the headlines. Time to take a closer look at these updates. And firstly, Bitcoin is nearing that $65,000 mark and it's a range-bound move. But remember, there is a positive technical outlook at play. Now, with the macro-driven risk still being there, it's being offset by US macro data, which points at a rate easing outlook from Fed, and this of course benefits the risky assets. Up next, we have US Depositories Trust and Clearing Corporation, which is called DTCC, which has begun a soft launch of its tokenization service using December 2025 SEC no action letter. Now that allows a live production trades to happen in select tokenized stocks, ETFs and US Treasury for a period of 3 years. And Bitcoin ETFs have broken an 8-week outflow streak with about $282 million in net inflows for the week ending July 10. Now this is driven by spot Bitcoin demand led by BlackRock's IBIT fund, and this implies that the institutional flows are strong. And lastly, Japan's Upper House Committee has approved a bill to reclassify crypto under Financial Instruments and Exchange Act, which is called FIEA. Now this legalizes spot Bitcoin ETFs and sets a flat 20% tax rate. Now if the framework is fully enacted and implemented around fiscal 2027, this could enable the first spot Bitcoin ETFs which may list on Tokyo Stock Exchange by late 2027 or 2028. And before we wrap, here's a quick check on the changes to the crypto prices we have seen over the last 24 hours. Largely, we see there is a green happening for Bitcoin and Ethereum going up between 2 to 3%, but a very narrow range coming in. Of course, looking at the range, that's around $64,000 to $67,000 for the support and the resistance. Time now to take a look at the crypto strategy for the day. Here's what's there to keep in mind today. Overall, the market outlook still suggesting that there is a bullish momentum at play. There might be a little bit of consolidation going ahead, and the macro triggers, however, are still favorable right now. And Ethereum, if you have seen a good up move in the last 24 hours, this is because of institutional buying from the ETFs. And the Bitcoin's trade range has come down. It's narrow right now. It's between $64,000 to $65,000. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me, as always, is Mahima Vajrajani. And over the next hour or so, we'll try and get to all your stock-related queries as well. Very quickly, before that, the markets, continuing to be very interesting today. We have this Sensex expiry, of course. But along with that, the Nifty continuing to crowd in the green at this point of time at around 24,100 odd. In terms of the heat map for the Nifty 50 as well, IT continues to be yet in the juncture. You have big earnings today from Tech Mahindra as well as Wipro. So you're seeing those gains, both those stocks actually in the top 3 gainers, while HCL Tech, the momentum continues post earnings. You're seeing some pressure actually on HDFC Life, Shriram Finance as well as SBI Life. So all those counters currently under pressure as well. But important to mark all of those counters as well. You also look at the sectoral heat map though. You're not seeing a blatant move around the sector. So Nifty IT up almost 1.5%, Nifty Media also 1%, but then a string of gaining sectors between the 0 to 1% mark at this point of time. So that is also continuing. You also have the advanced decline ratio at a very interesting juncture too, because the company and most companies as well at this point of time, and we've seen on a couple of days of the advances as well as the declines converging. You also have another day of that right now, and the mid cap and the small cap also reflect that. So
pull up both those indices, the mid cap has recovered some bit from the lows of the day. You also have the small cap also now in the green, so continuing to be up by 0.07% minusculely, but up in the green right now. And in terms of the individual movers on the BSE 500, you're seeing a bunch of them today as well. MRPL on the back of good numbers reacting positively. Jindal as well as TCI Express is also up today, while Shoppers Stop of 4%, and the big loser for today continues to be ICICI Lombard. Weak set of numbers, profits down 46%, and the stocks, continue to be under pressure at this point of time. HDFC AMC also seeing some money being taken off the table. Nuvoco Vistas, after a good run up for 2 to 3 consistent days, has finally given some respite, while Equitas, Small Finance Bank, PB Fintech are some of the other movers as well. We will be, of course, joined in by the management of Keynes Tech very, very shortly as well. The India Semiconductor Mission, of course, 1.0 has been followed through by the 2.0 scheme as well. So a lot more to talk about with that management, and as soon as we have an update, we'll let you know, of course, of when they will join in, because there's a lot to talk about this morning. We, of course, have, let's put up Dixon Tech as well, being one of the biggest beneficiaries of the new mobile phone scheme. That has seen some respite from the top, but still continuing to be up 4% as well. Let's look at Amber, Keynes Tech, Syrma SGS, all of those other component players also that will get a benefit from this at this point of time. Amber has given up most of those gains starting from the top, as well as Syrma SGS also, if we can pull up. That counter has been, on its own at this point of time as well. But let me also welcome in our guest for today, Kush Bora, founder of kushbora.com, and it's Thursday, so he's in the studio with us, as well as Shaina Mukaddam, independent market expert on the fundamental side of things. Both of you, thanks so much for joining in. Kush, very quickly, firstly on the index, what are you watching out for, as well as a quick view before we go ahead?
First of all, very good morning, guys. Very good morning to Shaina and the viewers as well. I think we're consolidating, and I'll take that right now. So the 23,800 to 24,200, 24,300 band, that's been respected for the most part. Not today, but for the last few sessions, we've been knocking on the doors of that resistance rather than the support. So that's a positive sign. So I'll take this. I think markets are waiting for that big, the big result announcement to get out of the way. Reliance and the big private banks announcing their results tomorrow and then Saturday. So I think once that is out of the way, you might get a big move on the index. My feel with the data right now is that it could be on the upside. So remain positive. If you have positions, continue to hold the index with trailing stop losses for Nifty 23,800, 24,000. That's the support zone.
All right. Okay. So that's the index view, of course, coming in. But let's start taking all your stock-related questions. By the way, for viewers who are just tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. Murthy has done the same. He's writing us from Vizag and asking about Vedanta. He wants to know whether he can accumulate this counter at the current market price from a 2 to 3 year perspective. Shaina, a very good morning to you. I'll come to you on this one. What would you recommend?
Well, hi, good morning, everyone. So I will not recommend Vedanta to buy at current levels. Basically, this is linked to Hindustan Zinc, and they're holding over there largely. And if one has to pick up some stock in Vedanta, I would prefer the Vedanta aluminum.
All right. Okay. The next one that we have is on ICICI Bank. Our viewer, Nisha from Hyderabad, has been holding 93 shares that she's bought it at the levels of 1 to 1.3, that is 12.13. And she wants to know whether to continue to hold, exit, or maybe add more at the current levels. Kush, what would you recommend? Because she's sitting on decent profits right now. Should she continue to hold?
Not a bad entry price at all.
Yeah.
Not a bad entry price at all for this one. I mean, fairly close to the low that it made recently. So, splendid buy. I would suggest continue to hold. I wouldn't suggest adding more. The only reason for that is that, the near-term resistance for this is close to 1460, 1480 levels. I know it's some distance away, but I'm assuming that, you have a slightly positional view. On the whole, the view on the bank is positive. It has given a breakout above the falling trendline resistance that started, somewhere in July of 2025. So that's the kind of momentum that is building into. So yes, you can very well continue to hold. Like I said, not add because of the resistance that it is facing, just ahead. But yeah, if you hold, keep a stop losses at 1365 levels.
Okay, the next one that we have is on MTAR, and this is Rajesh, who's writing us from Hyderabad. He's asking, from a long-term perspective, since the stock has fallen, is this the right time to make an entry into this one? From a long-term perspective is what he's asking, and he wants to know as to, I mean, he's not mentioned the time frame, Shaina, but what could be the target price that you can expect from this one? One, would you recommend an entry right now? Two, if yes, what could be the target price?
The sharp up move in the stock, because of that, I would say it is better to buy it at slight dips. If you're a long-term investor, yes, an investment makes sense because the order book is substantial that they have on hand, which will see them through over the next 3 odd years. But at the same time, I would prefer buying it at dips, maybe closer to about the 6,000, 5,500 type of levels if you get that correction. Then, if you're holding it for the next 3 years, I think the upside is quite strong. I would look at something, I think the stock can even cross the 8,000 levels if you're holding it for the 3 year period.
All right, okay. I think we've got our first caller for the day. Murli is calling us from Hyderabad. Murli, very good morning to you. Go ahead, ask your question.
Yeah, good morning all the panelists and my favorite author and favorite footballer, sir. Namaskar. I have a query on Angel One. I have 100 shares at an average of 128. Almost 3 years now. So should I hold it for under 1-2 years?
Okay.
Looking at the competition with the growth.
Okay, got your question, Murli. I'll take this up with Kush. Then Kush, of course, the Q1 numbers, did come out, and barring the PLI spends, the numbers looked good, operationally as well. In terms of the charts from a slightly long-term perspective, this is looking at a year at least. What would you recommend on Angel One?
So first up, Murli, thank you so much. You're awesome, and namaskar to you too. Splendid buy. What's interesting is that you continue to hold despite the kind of gains that you have. So very clearly, you have a long-term horizon. You have the patience also to hold and make money in this market. If your view is a year to 2 years out, I would suggest you should very well continue to hold. Remember, along with the markets itself, the stock also goes through a very deep, or rather very violent cycles, right? Both up and down. So right now, it's on the way up. Mild resistance is near the 350 mark, and you're seeing that play out, right? But again, for a year or 2 years perspective, I wouldn't be surprised to see this stock cross about 425, 500 plus levels also, with the kind of activity that is building up in the markets, right? Technically, there is a support near about the 300, 290 zone. So yes, you should continue to hold, Angel One, and keep your stop losses near the 290, 300 mark. In case that is broken, you don't want to be, the last man standing in this one.
All right, okay, so that's the view coming in on Angel One. The next one that we have is coming in on Aptus Value Housing. Our viewer, Raktim from Assam, has bought around 2,500 odd shares at the levels of 223 and wants to know whether to continue to hold this one or not. He's not mentioned the time frame. Kush, quick view on the charts on this one.
What's the name again?
Aptus Value Housing.
No, of the viewer.
Of the name, it's Raktim. It's Raktim or Raktim, I'm not sure.
Very interesting name.
Yeah,
very interesting name. Yeah. No, but the stocks itself doing very well, and we've seen the entire pack also actually, react favorably in the last, few weeks, few months also for that matter. This one too, very interesting moves. Volumes not to my comfort, but nonetheless, very impressive, volumes still. But 20-day moving average, 200-day moving average, all the near to medium term moving average is being taken out, stock gaining ground. So nothing to suggest that you should go out and book profits or exit right now. So a hold on this one, positional stop near the 20-day moving average at 280.
Got that view, Kush. But, we wanted to put focus on one stock, Kaynes Technologies as well. Back in focus yet again on the back of the new schemes that have been announced both in the mobile side as well as on the semiconductor mission as well. And Muthukumar, the Managing Director of Kaynes Technologies, is now joining in. Mr. Muthukumar, very good morning to you, sir. Thanks so much for joining in. It's Puneet this side. Also good to speak to you again. I think post our last conversation, of course, there's been, the last time we spoke to you, you were inheriting a lot of cash flow concerns amongst others. I'm sure you'll talk to us once the results come out. But what do you make of, the semiconductor mission, and the new scheme being announced, 1.2 lakh crores being the key outlay? The first question being, how does this continue with the ISM 1.0 mission that we had, and what are some of the key aspects that strike you as one of the key important ones to develop the semiconductor mission in India?
Thank you. Happy morning, and thanks for taking King's Technology to the call. The semiconductor opportunity for India is substantial. The India semiconductor market is expected to cross 100 billion by 2030, driven by rapid growth in automotive, electronics, industrial automation, artificial intelligence infrastructure, telecom, consumer electronics, and data centers. Today, however, the country continues to depend heavily on imports for a majority of its semiconductor requirements, and the country has a disadvantage because of this. The additional capital support in terms of ISO Semicon 2.0 is important because semiconductor manufacturing is one of the world's most capital-intensive industries. Beyond water fabrication, the success depends on developing the broader ecosystem, advanced packaging, OSAT, substrates, materials, PCB, testing, and electronic component. So under this situation, we welcome the government moves for supporting on this. In a short term, we expect this policy to accelerate fresh investments, improve project viability, and attract greater participation not only from the domestic companies but also from the global companies. It should also encourage faster localization of critical components, strengthen the supply chain resilience, and create a high value employment. And this is going to be a game changer for India. Over the long term, we know that India has the potential to become globally a competitive semiconductor manufacturing, and we likely to touch about 10 to 13% of the global market share. This is what I would estimate, and this is going to help most of the companies.
And Mr. Muthukumar, the long-term opportunity, as you rightly mentioned, continues to be the big need of the hour as well. But just if you can give us some perspective, now you had already put up roughly around 3,300 crores in the OSAT facility. I think operationally, the first phase is already operational. Right? I think this is the second quarter that you are in at this point of time. Could you give us some perspective of the benefits that you were promised on the ISM 1.0? I think 50% direct fiscal benefit. Have you already received some part of those? And while we're still awaiting some key details for Semiconductor Mission 2.0, if you can give us some perspective, if that is something that you believe that the government will continue through, because they've given these 6 pillars to watch out for, how are you looking at this?
As far as the gains revenues on Semicon, what we are committed, I just wanted to go back to the last interview that we had. For this year, the commercial production has started, the various validation testing is done. Whatever the commitment we are given on the guidance, we still hold on to this. The revenues is going to generate from third and fourth quarter. And being a silent period, I will talk to that after our results announcement about the progress on capital, the progress on test results and all at a later point of time. As far as Semicon 2.0 is concerned, we strongly believe that the government continues to focus on this, and whatever the commitment they have given earlier, they are honoring at the right time. It will definitely take 2 to 3 years for this ecosystem to come up. So an initiative today will get the results by 2031 for the second phase. As you rightly said, on our total investment of 3,250 crore, we are not done complete investment. It's about 20 to 30% is what we have been investing. And as Keynes has indicated earlier, we'll be doing a modular investment which is in sync with our revenue that is going to come.
And Mr. Muthukumar, now that the second phase of the scheme has been announced, I just want to ask you, and I know you're on silent period, but how would you be doubling down essentially on your first phase? I think 3,200 odd crores investment, as you mentioned, and I think the number over the long term is roughly 6.3 million chips that you'll be able to manufacture. So just in terms of your next step, would that rather be capacity expansion or what you have currently within the OSAT? Or would you be backward or forward integrating within the semiconductor process that the government has also put through within the 6 key pillars? So what can be the expectations from Keynes Tech?
See, as you look at the Semicon 1.0 is an OSAT assembly, and from an assembly ecosystem, the government is pushing everyone or trying to facilitate everyone to move into the design and create our own IP. Keynes will be fully committed into that, and we will be moving in for an innovation into the product which brings competitiveness not only for the Keynes but also for the country at large. So we'll be aligning one is an expansion in the existing Semicon 1.0 is one, which is has another 3 years to go. But definitely Keynes will continue to work on 2.0 and we will be definitely looking at that opportunity to innovate the product, create our own IPs, and thereby making the products more and more competitive, and will be passed on to the benefit to the common man in India.
And Mr. Muthukumar, is there currently any clarity that you have if you are interested in setting up the full fabs as well? Because rightly you mentioned, and that's fourth pillar that the government has highlighted on further strengthening the OSAT industry. You're already there. You also mentioned design. That's also point number, the first pillar that the government has highlighted. So fabs continues to be one, because machine material, I think the ecosystem still needs to be developed. So will you be more interested in looking at the fab side of things first, or will the design part comes first and the benefits of that within the scheme?
Sustain and grow is always the fundamentals with which Keynes continues to work. While we continue to work on sustainability of the existing 1.0, Keynes will try to see how best we can use the current opportunity on 2.0 to take it forward. Keynes has our own plan and strategy for that. Maybe after the results of this quarter, we'll talk in details about Keynes' plan on how we are going to leverage this Keynes Semicon 2.0 to take it to the next level.
And one final question, Mr. Muthukumar, as we wrap up, because of course your quarter 1 earnings will also be through and it'll be something that we watch through as well. But just in terms of the number that you mentioned, 2,500 crores from OSAT over the next 5 years, would the growth be more linear since you have full 4 quarters of FY27 to report numbers for the OSAT business? Would it be fair to say that 20% each of that 2,500 crores is something that we can expect in the next 5 years? So is a 400 to 500 crore number plausible at this point of time for the next 5 years as you go through with this number?
I'm sorry, I think if you're looking at the revenue from this,
yes.
I think we have already clearly communicated during the last call that for this financial year on FY27, we'll be touching about 250 crores of revenue from this. And our product development, our validation for the next year is already on now to get the product done, customer approvals and all. So we have clearly communicated during the last investor call on our plan for year-wise on how we are going to take it to the 2,500 crores by end of 2031. And we are on target toward that.
Got it. Well, Mr. Muthukumar, of course, we'll touch base with you post the earnings as well. But thank you so much for joining in today, giving us perspective about the company, about what you are doing in the semiconductor side of things. We wish you the best.
Thank you very much, and thanks for taking Keynes into the call. Thank you very much and really appreciate it. Have a great day.
You too, sir. Thanks so much for joining in. But, stocks up almost 2.6% at this point of time. But, Shaina, thanks for patiently waiting by. Just on the EMS space, right? I think because we've seen all those counters come back into focus, whether you look at Dixon Tech or Syrma as the momentum has continued. How are you looking at this space? Any top picks for you?
Between Syrma and Dixon, I would prefer
in the
Dixon
whole space, I mean, within the 4 to 5, yes, in the EMS space.
Still, even considering the whole space, I think Dixon is very well positioned. One is because their Vivo tie-up joint venture has actually gone through, and second is with the new policy of the government, if they are able to push exports, which I think the government is trying to encourage. And they are able to add at least 30 to 40% additional volumes over their 32 million mobile phones. I think there it will show well on the bottom line. And after the correction that we saw in the last couple of quarters, Dixon has been consolidating. I think it is fairly valued now. And we can see an upside if things fall in place for them over the next couple of quarters. So I think Dixon looks interesting in that overall space. It's a large cap, done well, and the potential is there for it to rebound to its highs over the next 1 to 2 years.
Okay, all right. Kush, any quick view on all of these players? Anything that you're liking? Both, I mean, there's Semicon PLI as well as there's mobile PLI. So anything in the space that you're liking?
Broadly in the space, I think PG Electroplast is set for a big up move. Yesterday we gave that as call, 615, 640 target, 585 stop loss. Still looks like it could have a big run from here on as well. Recovery underway, slow, steady, gradual, but a sure one nonetheless. So yeah, I would prefer PG Electroplast in the entire space. Again, Dixon and Syrma obviously doing well, but that will be my pick.
All right, okay. The next question that we've got is coming in, and this is on Suzlon. Kirti from Hubli. has bought at the levels of 54 rupees and 12,000 shares is what she's holding. She wants to know as to what should be the target price and exit price for her. It's come down to 52 right now. Kush, what would you recommend her?
So there was an uptick, that resumed in it. For the last, week, 10 days, there has been, a slide down. But the 51 mark and the 200-day moving average actually comes close to that 51.50 zone. So this is a very important zone. I would suggest you should still continue holding on to this. But just factoring for volatility, keep your stop loss slightly deeper to about 50 levels. If that's broken, the structure from here on could worsen. But if that is held, you could see the stock consolidate here and then make an up move. However, because the momentum indicators aren't suggesting some great up move from here, it'll be advisable to exit at your buy price. So keep a stop loss at 50, closer to your buy price or maybe just above it, you're better off exiting.
All right, okay, so that's the view coming in on Suzlon, but it's time to slip into a very, very short break, but don't go anywhere. We'll be definitely taking more queries on the other side, so do stay tuned.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी.
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल.
Welcome back. You're watching Ask Profit right here on NDTV Profit as well, and the markets are continuing in that in that range as we speak. So there's been some, of course, decent buying in the last half an hour, and you see that spike yet again. Now up over 100 points, and we are closing in actually on 24,200. Let's look at the Nifty 50 contributors as well. From where is this big move coming from? The contributors, if we can load up, and it's largely apart from the big names. You're seeing a lot more contributors coming in from the others as well. So look at the heat map and now on the Nifty 50 very quickly before we continue with your stock related queries, because you're seeing a big spike coming in on the Nifty 50 at this point of time. So you're still continuing gains on the tech names as well. A lot more moves coming in on Bajaj Finance, Hindalco, Adani Ports, Maruti, as well as on Titan. So continue to monitor those at this point of time. You've also seen HDFC Life also recover some bit of that lost ground as we started off the show. Shriram Finance also has gained some bit at this point of time, while SBI Life still continues to be down 2.2%. But let's go and take the next stock related query, and this one's coming in on Suzlon. Kirti from Hubli has actually bought shares at 54. Holding, okay, we've taken this query. The next one coming in, and this one's from Siddharth Chaturvedi from Jaipur. He wants to enter actually Force Motor after the recent decline. But Kush, this one's a tough one because you've seen 17,000 and then back again, but at that level yet again after that up move. What are you picking up? Is it a good time to enter?
I wouldn't say it's such a bad move because, we know the kind of vertical run the stock had, right? Over the last a year and a half, right? Right now, it's consolidating. Also, if you see, where it's taking support, it's near that 50, to 61.8% retracement level. So this is a good consolidation phase for the stock. If you want to catch it before the next big up move from a positional standpoint, I think this is a good entry point. Mind you, momentum missing, so you might not get an immediate big uptick on this one, but you could start accumulating, and the broad band for accumulation would be 17,500 to up until about 19,000, 19,200. So within this band, you could accumulate, but you will have to have a slightly longer view, 6 to 12 months out maybe.
Got it. ABB is the other counter which is in focus, and this is after ABB Global reported the order inflow number from the India region, and of course we did see a sharp up move, but it's also cooled off from the high point. We've Somit joining by to give us more details as to what cues is he picking up. Somit?
Well, yes, ABB Global has come out with their earnings, and in that, if you look at it in the presentation, they have given the India order inflow growth number, and that has come in at a stellar 81% YOY growth. What we are looking at for the second quarter of calendar year 2026, that is the June ended quarter. Now, do remember ABB India in India is yet to report their numbers, and hence the stock is reacting so positively because that's a new data that has come out to be. Now, analysts were expecting ABB India's order inflow to grow at just 20%, but the global or the parent entity is showing a growth of nearly 81%. Hence, this excitement coming into the counter. At one point of time, the stock had locked in a circuit of around 10%. But do remember that this growth of 81% that we are seeing is coming off on a low base. Second quarter of CY25, that is last year, ABB India's order inflow had declined by around 12% YOY basis to close to 3,036 odd crore rupees, and hence this order inflow coming in at a strong growth. Now, so if we imply 81% growth on that order number, you get a growth of around 28% on a sequential basis. Now, this is completely based on our analysis, and the actual number could differ from what we are reporting at this moment. On a Q-on-Q basis, the growth could be 28%, but on a YY basis, the parent is showing a growth of 81% as against consensus estimate of around 20% for the India region.
Well, thanks so much for that, Somit. Shaina, just a quick question on ABB. Of course, a very strong number coming in from the global parameters, but what's your view on the stock now?
I think it is expensive at current levels. If you look at CY27, they are already at about 40 times P. And while the current year, they have got an order book of about 11,000 crores. So, and their turnover last year will be approximately 13,000 crores. So they are covered for 1 year. But I think if you're a long-term investor, there is no problem holding it. But I think in the next 1 to 2 years, the stock may consolidate because the government has now opened up its tenders to Chinese companies for a 2-year period, and the government tenders is an important contributor to its order book. So going forward, there may be some slowdown in terms of order book addition for the domestic company. Global, of course, yeah, they're doing very well. But I think for the domestic company, next 1 to 2 years may be a period of consolidation. And given the expensive valuations, I think at current levels, it would better be to avoid making fresh entry.
Okay, all right. The next question that we have is coming in from Anwar, who's writing us from Hyderabad, asking about Niva Bupa. He's got around 6,132 odd shares, bought at the price of 82. He wants to know whether to continue to hold, sell, or maybe keep it from a short-term perspective. Kush, your view on the charts for this one? He's sitting on 35,000 rupees of profits. Should he book, continue to hold?
Yeah, so this is not a big mover per se, right?
Yeah.
Not a trader favorite counter, right? But to his credit, I mean, the entry price is good. The stock's actually trending higher and has taken support multiple times at the 20-day moving average, and then you just rebounded from there. Could well happen again, but the trend remains positive. So what I would suggest is you should continue to hold. Keep a stop loss at about the 85 mark, which happens to be just under the 20-day moving average. So even if it dips to that level, your stop loss is not triggered. So continue to hold. Like I said, not a big mover, but with a stop loss at 85, you can continue to hold.
Got that view, but let's go across to Hyderabad now, and Ravi has a stock-related query for us. Ravi, a very good morning. Welcome to the show. What's your query?
Yeah, very good morning. Yeah, I have query on Swiggy. Just want to know, is it a good time to enter? And I can hold for next 6 to 8 months.
6 to 8 months, got it. Kush, on Swiggy, this counter has actually been a very rank underperformer, especially when you compare it with its peer. But would you enter at this price?
So, look, there are signs of reversal. I'll grant you that. But when the primary trend is negative and the stock just doesn't perform, right, then it becomes difficult to, for a trend rather to build on this one. Like I said, from a near-term perspective, yes, there could be upside still about levels of 300 or so. And the stop loss comes in at 272, so mildly 1:2, slightly better than 1:2 kind of risk reward ratio. Maybe you can enter, for those if you're looking at. But I still prefer Eternal over Swiggy. This one's had a good run, taken out some key averages on the upside. Volume action also very healthy. Stop loss at 275, 280 zones. So if you want to look for the short-term perspective, I think Eternal still better. But I've given you the levels on Swiggy as well. Take your pick.
Right. In fact, today there was a data that came out which said that on week-on-week basis also, Eternal has grown in terms of active users, which none other platforms have. So that's something to keep in mind for sure. But let's take in the next one, and this is coming in from E. Venkatramanan, who's asking about Utkarsh Small Finance Bank. He says that his holding is of around 5,000 odd shares that he's bought at the levels of almost 18 rupees, and wants to know whether he can continue to hold this one and what should be the target for a year plus time horizon. Shahina, what would you recommend him?
I think it's better to avoid Utkarsh as of now. They are consolidating at lower levels after that huge fall that they saw. They are still making losses. I think there are better stocks that are available in the banking space, small banking space, or I would say DCB Bank would look like a better bet to me than Utkarsh. There also, it's a very tiny bank. And also, if you look at the mid-size, I think Federal Bank looks attractive even at current levels. So I think they're better, stocks to enter into.
Got that view. But the next question, and this one's on InfoEdge. Our viewer is actually in a gain of 25%. Kush, I think the recent move post quarter one update was very strong. How are you looking at this counter as well? Gauri Gupta wants to know if she should take the money off the table now.
No, I would just continue to hold because it's just now actually taken out the 200-day moving average after a very long time. On the back of volumes, the last 3 sessions that you've seen the stock consolidate or even decline is on very, very thin volume. So, that is some weaker hands being shaken out. I would suggest continue to hold because the major resistance zone that I see on this stock is actually at 1300, 1325. And, since you've bought it at fairly decent levels and the stock is now starting to move, not even close to overheating, I think you should continue to hold. However, the trailing stop loss on this one, about 1140, 1145, that zone is a good support zone. That should act as your stop loss. Continue to hold.
Okay, we've got, I think, Chaitra calling us from Vizag now. Chaitra, a very good morning to you. Go ahead, ask your question.
Yeah, very good morning to all of you, sir, ma'am, and Kushbara sir and other panelists. So actually, I'm having SMS Pharma, 1,000 shares at 350 average. I would like to ask Kushbara sir, what is the short-term and long-term view on this? And he's my favorite analyst, so I try to call him on Thursdays.
Okay, all right, Chaitra, got your question. I hope you heard those compliments as well, Kush. It's a small company, 3,600 crore of market cap, but anything that the charts are indicating right
Kush's smile is going to go out of frame, I think. But after the next caller, I think.
now. Yeah.
Sorry, what compliments?
I didn't replay that. We'll send you the YouTube feed across.
No, but Chaitra, so sweet of you, and I'm very sure this is not the first time we are talking. Chaitra's called in a few times, and she's consistently, said that. So I'm genuinely very grateful. Thank you so much, Chaitra, for this. I think you can hold SMS Pharma. Now, I'll admit this is not my top pick in this space. I mean, if you've heard me, then Akums, Shilpa Medicare, some of these names I've spoken in the past have done phenomenally well, right? So those remain my top pick on declines. But even SMS Pharma, not a bad setup. There is a rising trendline support from a medium to a long-term perspective as well on this one. Recent fall, not on the back of very heavy volumes. So that's another positive sign. So yes, you should very well continue holding on to this one. Stop loss on this one, I would say close to 365, 370 zones. If that is broken, then that long-term trend would come under threat. But up until then, you can hold. Recent swing high around 440. I think there's a good possibility that could very well come into play. So hold it. Like I said, deepish stop loss close to maybe 360 odd levels. I'm just factoring for volatility there. So continue to hold SMS Pharma. And once again, thank you so much for the call.
Got that view, Coach. The next one, and this one's from Praveen, who's from Hyderabad. An interesting question. Now, he's been holding on to M&M 185 shares for at roughly around 3,100 odd, and he's mentioning that it's been largely flat in this year, and the last 1 year also the stocks gone nowhere. But Shaina, the question being, his question is if he should still continue to hold, because we've seen, of course, some moves from the lows for Maruti, as well as, of course, some gains seeing now again on Hyundai. But do you think M&M has what it takes, and the fundamental view, of course, because they've also acquired SML, there's a lot more going on in terms of the launches that will come through in the next year. So as a longer term story, does the pick continue? Should he continue to hold?
Yeah, I think FY27 should be a good year for M&M. While the stock had run up, in the last 1 or 2 years, I think at FY27 should be a good year. And as you mentioned, the LCV also growth should be boosted by the acquisition that it had made a year back. And if you look at current year, I think they have got some new launches that they are, targeting for the year. And I would say their SUV portfolio should do pretty well and support growth. So valuation wise, it is, I would say, fair valued. But considering the management quality, the new product launches, I would say you can, if you're a long-term investor, it is better to continue to hold. Tractor sales also, I think with the monsoons having picked up, should be reasonably good. So it's a hold for the longer-term investor.
Got that view. But the next question, and this one's on Sky Gold. Our viewer Matthew, who's from Bengaluru, actually bought 1,000 shares at 355. So he's in massive gains right now. Stock's trading at 625 odd right now, and he's held on for the last 7 to 8 months. He's being humble. He's mentioning, Coach, that he's in decent profits right now. Asking if at what level should he exit? Is there something that's visible on the charts? What would you recommend?
Yes, a decent profit. But what a fabulous buy. What a fabulous buy. And see, I'm more impressed by traders and investors actually holding on to these stocks when they actually run up, because the immediate tendency is to sell out on profits, right? So fighting against that very natural instinct, fabulous. So good job, Matthew, there. I think you can continue holding on to this. You might want to book partially right now, but 25% or so, right? But the rest of it, you can continue holding on. 500 was a stiff resistance. It's broken out of that. Even now, there is, a fairly healthy volume and momentum on this one. So why do you want to sell out early, right? And, maybe you could add some more to that decent profit that you're making. So book out 25% right now. Continue holding on to the rest of the quantity with 575 as your trailing stop loss.
Next one that we have is from Manav, who's writing us from Mumbai, and he says that given India's long-term bet on defense, which one is a better pick? Is it Garden Reach or is it Apollo Microsystems? Shaina, either of these or anything else that you like in the space?
Between the two of them, I would prefer Apollo Microsystems. I personally also have been holding it for some time. And what I like best, even going forward, I started to think that the valuations have started becoming expensive. Because it is about, if you look at 1 year forward, it's about 30 times EV by EBITDA, excluding the acquisitions that it has made recently, which is not really factored into this. So it has actually moved into acquiring explosive companies Premier Explosives as well as Ideal Explosives. And these two combined actually should see it through its next layer of growth as well as backward integration. They have got a QIP that is targeted that I think will hit the market somewhere in August or September. And that will actually, I think it's about more than 3,000 odd crores. And that should fund its acquisition of Premier Energies. So I would think that, if one wants to be invested in the new tech defense space, yes, Apollo Microsystems could be a space to be in. If you're a 3 to 5 year investor, holding investor, I see though it has doubled in the last couple of months, I still see upside from here on. As far as the shipping companies go, I think they're also, yes, Garden shipping is actually likely to do pretty well because the government itself is actually talking of making India as a hub for shipbreaking and shipbuilding also. So I think their Garden Reach has got huge order book position, and they are improving their overall financial performance in terms of improving EBITDA margins. As the raw material expenses or raw material costs start stabilizing, I would think that they also should do pretty well. Both in order book is for their only. They should do well in terms of profitable growth also. So I think defense space as a whole is very exciting if you're a long-term investor. And yeah, you can take a pick and choose and hold for the long term.
China, but the next question, and this one's coming in on Sagility. Our viewer, Raja Shekhar Rao, has been holding these shares at around 43 odd and is holding 1,000 shares. Coach, he's asking if you should still continue to hold. We saw that buying at 37 odd, but the momentum just seems to be lost in this counter. What's your view?
It is testing the patience for investors, for traders, a bit for me as well. Again, just a disclaimer, I don't own it. It's just because, I don't know if you've heard it in the past, but I've been constructive on Sagility, right? It's just that it's just not participated in the rally, that's come about. Even now when the sector's doing well, this hasn't really seen that kind of a move. But there hasn't been a breakdown. There's been a gradual, steady uptick on this one. Your buying price is slightly elevated, 37, 39. Those zones were very interesting zones to accumulate this. But nonetheless, because the structure is not, damaged, and you're seeing some healthy accumulation, I wouldn't suggest a sell or an exit on this one. You should very well continue to hold. If your risk appetite allows, then yes, you should keep a stop loss between the 37 to 39 zone. Continue holding on to Sagility for some more time.
All right. Okay. The next one that we have is coming from Manoj, who's writing us from Mumbai, asking about Patanjali Foods. He wants to know whether, and I can see that expression that Kush has on his face right now. But, yesterday, in fact, we spoke to the management as well, and he did say that there's nothing happening with regards to where regulatory concerns go, or there's no FTA raid that's happened. But we've seen the stock tank quite a bit in trade yesterday. Today, it's just up by about 0.2%. But China, considering the financials, considering everything that's developed so far for the company, do you think he should go ahead and buy?
Well, I would avoid it. See, after their bonus issue that they had made in the last year, which was quite a attractive bonus issue that they had. After that, I think it's been a one-way down performance. Also, in terms of overall, if you look at their revenue growth, if you look at their margins, EBIT level, they were lower. If you looked at it on a quarterly basis, the fourth quarter of FY26 was pretty disappointing. And so I think there are better stocks available in the FMCG overall space. You have Tata Consumer, you have ITC also, which look better than Patanjali at current levels. So I would say better to avoid.
Better to avoid on Patanjali. Got that view, Shaina. The next one, and it's a caller from Chennai. Lakshmi is dialing in for a stock-related query. Lakshmi, good morning. What's your query?
Good morning, sir, and all of you. I'm having transformers and rectifier shares at 300 average in 1000 quantity.
Okay.
I want to check with Kushbura, sir, what is his pick on this sector and what is the short-term and long-term view on this transformers and rectifiers?
Got that question, Lakshmi. So, Kush, we've seen some moves in the space yet again. From the top, Hitachi has sold off. But what's your view on the space on trail as well?
So, first up, Lakshmi, thank you for directing the query towards me. This is not a momentum play. I'm glad that she added the word long term also somewhere in the middle of that conversation, because this is definitely on the path to recovery. If you see the lows that the stock made in Feb, right, close to what, about 220, 225 levels, from there on it's been a gradual recovery. Again, it's not a runaway move, so you'll have to have patience. But because of the rising trendline support that the stock has, and that comes close to about 315, 310 zones, also sporadic volume, bursts on this one backed by, price movement also. I would suggest you should continue holding on to this. Tempered expectations and slow momentum, but from a medium to a long-term perspective, I think there's a good possibility that about 375, 425 plus kind of targets also possible on this, and support zones near 300. So maybe keep your stop losses at or just under.
Okay, it's now time for our rapid fire round. Kush and China, trying to keep your answers as short as possible. The first one is on Lenskart. Manu from Hyderabad has bought around 1,000 shares at the levels of 519. A short-term target on this one, Kush, on the charts?
565, 595, but also a stop loss close to about 510.
Got that view. But the next question coming from Sanjay from Bengaluru. His question is on Bank of Maharashtra. It's a good time to still enter this counter. Shaina, would you recommend that?
I would say yes, you can add.
Okay, the next one is on Asian Paints. Ram from Chennai has bought 40 shares at the levels of 2,400. He says, from a long-term perspective, can he accumulate more, Shahina?
For a long-term perspective, yes, it will consolidate. It will consolidate for quite some time because its competitors have started doing pretty well.
The next one, Kush, and this one's on Cupid. Khurshid from Delhi wants to know if he's already invested in the counter, if he can book profits, or is it a good time to add also at these levels?
Practically every Thursday we get a query on this.
Yeah.
So what a stellar run. You should definitely book out about 25 to 50%. Definitely not add, and definitely hold the rest of the quantity with a stop loss at 195.
I think we get a query on this every day, not just Thursdays. The next one is on M&M. Praveen from Hyderabad is holding 185 shares that he bought it at the levels of 3096. He's saying from a fundamental point of view, a good hold, China?
Yeah, we discussed it earlier. I think it's a good hold. Yes, hold.
The next one coming in is on PI Industries for the long term. Dilip from Kolkata wants to enter this counter. Would you recommend that? Shaina has been slightly under pressure, but what's your view?
No, I would not recommend to invest now. So I would avoid as of now.
Okay, the next one is on Genus Power. Pradeep is asking this question to you, Kush. He's bought on 1,000 shares at the levels of 320. What should be the short-term target?
Continue to hold. Stop loss at 305, on the way up 345 and about 365 plus kind of levels likely.
The next one's on Grow. Bindu from Hyderabad wants to enter this counter now. Shaina, the quarterly earnings were decent, but seeing some pressure today. What's your view?
Yeah, if you're a long-term investor, the overall sector should do well in the long term. So yes, you can add at declines though, because the stock has run up a bit if you see the last couple of
Okay, the next one is on life insurance companies. Kush, HDFC Life Insurance or ICICI Prudential Life? Which one is a better bet on the charts? Jai from Coimbatore wants to know.
Avoid both of them.
ICICI General Insurance bought at 2050, Kush, by our viewers. Currently, stocks been under pressure post earnings, but any view here?
Sorry, what's the buy price?
2050, 2050.
Oh my God, you should hold. There's perhaps a recovery that could come about. That today is low 1550 or thereabouts. Yeah. That should be stop loss.
Okay, the next one is on Bharti Airtel. This is from Pranita, who's writing us from USA, and she's holding 2 shares at the levels of 1938. Can she continue to hold, Kush, and short-term view on this one?
Yeah, momentum missing, but you can continue to hold. Close above 1950 will give it momentum. Stop loss on this one about 1880.
Kalpatru Limited is the next one. Ravi is holding shares at 302. Shaina is slightly, in losses currently, but should he still continue to hold, add more?
Kalpatru, I would say that it is better to exit at current levels. The stock, it's a small cap and it has declined, and I think it takes some time to revive.
Okay, the next one is on Paytm, Kush. This is from Shrikant, who's writing us from Telangana, holding 100 shares since the IPO. What should he do? Should he continue to hold from a short-term perspective? There's also a bonus issue that they're going to consider on 20 years.
Definitely continue holding on. 1350 was a resistance that's been taken out. Stop loss on this one about 100 points lower, 1275 or thereabouts.
On Tata Chemicals also, Kush, viewers bought shares at 719. This is Pavitran. asking what should do with the 79 shares on Tata Chemicals. What's your view?
Exit.
Okay, the next one is from Ria, who's writing us from Bengaluru, asking about Apar Industries. She says, is this a good time to enter from a technical perspective, Kush?
It is. I mean, good base formation near 13,400. So yes, you can enter right now. Stop loss slightly lower, about 1,000 points. So 12,800, 12,900. That should be a stop loss, but you can enter now.
Okay.
The next one coming in, and this one's from Yogesh. He wants to enter into. He's actually holding Triveni at 50 shares bought at 482. Would you recommend on Triveni Engineering? Would you recommend that, Shaina? Should he continue to hold?
I would say, yeah, you can continue to hold if you're holding it for. You're talking of turbine or you're talking of.
No, Triveni Engineering.
Yeah, Triveni Engineering. Yeah, you can hold Triveni Engineering. Yeah.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. Shaina as well as Kush, thanks so much to both of you for helping us solve all these stock-related queries over the last hour. Appreciate your inputs. But viewers, out of time on this edition of the show. Thanks so much for watching. We'll see you at 2 p.m. on Ask Profit, the afternoon edition, and take all your stock-related queries.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार. प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक. An initiative by Gautam Adani.
यही है वंदे भारत।
that are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, especially right now. Earnings season is on and I've picked up a very interesting company. This is the second time coming in KYC this year. Earlier they had come in the month of January. But before that, try to guess this company. I'm sure you'll try to understand and guess it very fast. It's a Kolkata-based specialty chemical company. Also, the second hint I would like to give you is a very strong Q1 numbers. Yes, it has recently come out with its numbers. And if you look at the stock, it's a multi-bagger, 13x in last 5 years. Also, interestingly, FIs and DIs have been increasing their stake in June quarter. Smart money flowing in. We have seen that momentum in the stock. And lastly, another key hint is a 1600 big capex has been announced. Try to guess the company which I'm talking about, and since last KYC till now, the company has jumped more than 50% of returns already. So you see, we have identified good companies at good prices. The company in focus is Himadri Specialty Chemical. This is what I'm going to talk about, especially curious on the Q1 numbers. That's the first question we'll try to understand. What led to this growth? Is it the specialty segment, which is, kind of pushing the numbers up? Why the outperformance? We saw that in third and fourth quarter also good outperformance was there. Will this continue? Margin in the revenue outlook is one of the most important things to see as the company is transforming into a specialty player. The capex expansion plans, a 1600 crore announcement coming in from the company. Carbon nano plant and specialty carbon plant, ये नई चीज़ है. ये क्या है? Company का profile क्या बदलेगा? We'll try to answer all these questions. And West Bengal, sentiment revival, will that benefit? This is a very important macro trend coming here. Lithium-ion battery ties, what's the India story looking like and where is the company placed in this ecosystem? And also we'll understand the mitigation strategies because yes, China is always a pressure for the Indian chemical companies. And to decode that, we'll have Anurag Chaudhary, the chairman and MD of Himadri Specialty Chemical, talking about this. But let's try to understand ये company करती क्या है. And a lot of times viewers write to me in KYC that the specialty chemical companies are very complex to understand, and trust me, I'll make it very easier for you. Of course, we know this. It's a Kolkata-based specialty chemical company and it manufactures largely carbon materials. ये वही chemical होते हैं जो आपके टायर में लगते हैं, टायर के ancillary products में लगते हैं. But नए industries is also there. Lithium-ion batteries, electrical mobility, paints, defense, they're going into a lot of new sectors going ahead. So there's one side core business, other side there's emerging business. Exports across 61 odd countries, they are a global player. So we'll try to understand what's the global outlook looking like. Also, operating their world's largest fully integrated carbon complex. So that itself is a very important point. But let's get in more details. Around 6 lakh million tons per annum of coal tar distillation capacity is there. Ye inka core business hai. This is the capacity of it. But we'll understand more on their capex plan also. And they are setting up India's first commercial CNT facility. Of course, we'll make you understand what this industry is and why this is the future. Also, they own almost 20% stake in international battery company, and these are some important positions they are taking as JVs and acquisitions for the future. Let's talk about the other names. A strategic partnership with Sicona Battery Technology as well. And one more important tie-up is there, and this is for advanced battery materials R&D. So the company is moving towards future, and the specialty chemical and future chemical is something which we'll talk more about. Highest ever quarterly revenue driven by specialty products. Q1 numbers were bang on, very strong set of numbers coming in. Let's look at the other detail for the first quarter, and this is the higher share of specialty carbon black. VAP. VAP is nothing but value added product. PAT margin also stable due to other income. So a little bit of volatility that's getting offset by higher other income. The capex pipeline, everybody's interested. Let's go a bit slow on this. 1125 crore capex for cathode materials, and this is something in the lithium ion. It'll be coming across. The second capex announcement after this comes is a 248 crore investment in the specialty chemical business. That's what we know. It's an extension of the capex coming in, but two other capex is there where the interest is there. A 70 crore investment in the carbon nanotube plant. This is the first one in India, and it's the CNT full form which you are wondering. This is that carbon nanotube plant. And the last one, 170 crore investment in the super specialty carbon black segment as well. तो लगभग 1600 करोड़ रुपए का जो है कैपेक्स नए अनाउंसमेंट किए गए हैं. लार्जली दिस विल बी फंडेड बाय देयर ओन मनी, द इंटरनल एक्रुअल्स. बट हु आर देयर क्लाइंट्स? वेरी लार्ज प्लेयर्स, सीएट, योकोहामा, नाल्को. Largely they have a lot of tire clients, and also we have Pidilite, Hindalco and Vedanta as well. So you can imagine they have international as well as domestic clients, and which are marquee players. But moving on, the story, the industry kya keh raha hai? The global battery consumption, that is where my interest lying. That's expected to go up almost, you could say, 3x or even slightly more than that, and the company might be a key beneficiary for it. But enough of the industry, let's talk about what may work for the company. There's a strong earnings and a guidance which they have given. Vision 2028 tak inhone diya hai guidance. That is strong, so that may work for the company. DIs, FIs are increasing stake little bit, but yes, there is an institutional participation at play. The third reason you should focus on, and you can note it down, take a screenshot, share with your friends, is the government interventions that might aid the sector. Some anti-dumping duties or some important moves might be coming in. The new age segment entries, carbon nanotube, super specialty carbon, that's what the street is quite bullish on. But of course, this takes time as well. It's a strong capex pipeline, which I had mentioned you earlier. ये 5 reasons तो थे why things can be positive for the company, but let's look at the other side also, and the execution risk. They're doing so many things that so much muscle is being used. Is there any execution delay? And that happens. This is a normal course of business. The second reason, threat from China. No matter which chemical business you do in India, there's always a threat from China. How much will they mitigate? That's the key question to be asked. But to be honest, there's a lack of analyst coverage in this counter. So we need to understand more. And because of that, I get these companies in KYC for the entire stakeholders, the retail investors or even funds who watch our show. And the valuations, it seems like it's fairly placed right now because the stock has run up. पिछली बार जो KYC था, वहाँ से लेके अभी तक 6 महीने में the stock is up more than 60%. So valuations little bit expensive. But let's look at the KYC ratings where we are going to judge the company. And I am sure our most viewed viewers, they generally know our ratings. But for the new income statement, balance sheet, cash flow, these are basic financial statements which we have to get them. Return ratios also we get for you. And over the period of 4 to 5 years, we see how the shareholding pattern or the street cred has changed so that you understand whether the stock has made money or not. Valuations, we'll try to get a 5-year average and a peak level and compare them with the current levels and the outlook. I'll share the FY28 strategic vision with you. We want a long-term vision, so we have taken the FY28 numbers, not FY27. Income statement is the first rating, and let's talk about that, how that growth is coming in. And largely, you should see the EBITDA and net profits levels of chemical players because of course the revenue, there is a lumpiness involved, but the CAGR growth has been really strong. The company has been working towards its margin profile, and that's what we can see. Q1 numbers have been pretty strong. The street is rewarding it also. And if you get into the details about it कि भाई margin में क्या चल रहा है, क्या धंधा है यहाँ पे, तो यहाँ पे देखेंगे now it's a proper 20% plus margin business. And imagine you could say the specialization versus the commodity, how the story has changed, and this is how the story has changed. So this is a really wonderful graph if you are tracking this sector as an analyst or even as an investor, and I'm going to give this income statement a strong thumbs up. Balance sheet, they are doing expansions. Of course, they have their own money. That's 735 crores you can see. That is why they are putting most of them via their internal accruals, but there might be chances of stretch. So let's take a neutral stance when it comes to the balance sheet right now. Also, apart from your income statement or the balance sheet, cash flow, that's also comes in. And if they are spending, there will be a little bit of stress on the investing cash flow activities and at times financing also if they take any kind of loan. But cash flow from operations, if you look at it, there is a dip. So a little bit of seasonality does come in this industry at times, and that is why we're seeing a little bit of cash flow to operation numbers, the conversion, it's coming down slightly, but you need to take things with a pinch of salt, and that is why I have also given this rating a neutral one when it comes to the cash flow. But the story has changed. I mentioned you the margin profile, how things have changed, and that's actually impacting the ROC numbers also. Look at that in FY22, it was a single digit ROC coming in at just 6%, and then slowly each year there has been a good momentum coming and it's holding up. 30% plus ROC numbers are there. So definitely the company has changed its returns ROC profile. Going ahead, they are focusing on more value accretive strategies. So it's a strong thumbs up for the ROC as well. Let's talk about shareholding. And shareholding, we see from the last time which we had the company with us, it was a December shareholding pattern. After that also there is a good lap up happening from FIs. They have increased the stake by 2%. And largely DIs, it has been a slight profit booking coming in, but nevertheless we can see the participation is rising, and channel checks are suggesting that post June numbers also in July there is a good fall on buying from the institutions, khas karke DIs. So it's a strong thumbs up for shareholding segment. But street cred, let's see how much money the stock has made, and since last KYC the stock is up 50%. That I can tell you that because we had tracked the company. Last 1 year the stock is up 34%, and 2026 so far is up 41 odd percent. A good momentum coming in, but the biggest number to look at, stock 13 गुना बढ़ा है 5 साल में. That's the number I'm talking about. That's a multi-bagger return if you have invested and stayed with the company. That's the benefit of a long-term investor. In the long run, you make a lot of money. This is what has happened for the investors. So I'm going to give this a strong thumbs up as well. But valuations, because the stock has run up, the valuations are not that attractive right now. Current valuations is at 52 times its 12-month forward P ratio. But you compare that with the peak, it went as high as 111 times. And the average से अभी भी सस्ता है 5 साल का. It's around 56 times. But let's take a neutral aspect, because the risk reward ratio may not be that attractive right now if you're thinking for any position. So it's a neutral rating from my side. Now, I had earlier explained you about the FY28 vision, and let's get those statements in. And the entire focus is coming especially on the specialty carbon black entry. They're going into this segment, announcements are coming in, capex is there. Let's look at the second important point of the vision 28, Birla tire production scale. That is where the revival is happening, but the timeline is something which we'll try to understand or study in the future. Anthraquinone and carbazole, ये नए products हैं. अब stress ना लें, इसका मतलब क्या है? But these are high margin niche products. That's all you should know, nothing much. Another outlook is the commercial plant for the cathode active material. That is where the lithium ion battery story is going on. We'll try to decode that with the India context. And the naphthalene balls, the Durofresh TM, that is where also the momentum is coming in. So the overall outlook is strong. Since the last time also we had judged the company. But let's revise the KYC ratings. You know, stock को कितना KYC rating मिला है. Let's get in the key ratings where we judged the company. Income statement was pretty strong. Margin profile we saw was good. Cash flow and balance sheet need to take some time because there's a company at an inflection point. खर्चा भी होगा, अपने से भी होगा, शायद बाहर से भी आ सकता है. Valuations, we could say is neutral right now, but a multi-bagger if you're holding 13 times in 5 years, and shareholding FIDI interest is there in the counter. And outlook, I'd mentioned you. So the total KYC rating finally comes at 6.5 out of 8. This is the number I'm talking about, and last time the number which we had given was 6 out of 8. So yes, it is increasing, it's on the higher side, but the question is, will it continue going up or will it stabilize? That's the key question. And to understand more, we'll be joined in by the management of the company, Anurag Chaudhary, the chairman and MD at Himadri Specialty, and he has been holding the fort for the last 40 years in the company, 4 decades almost industry experience coming in, and he joined the company at the age of just 18 and expanded into the specialty carbon black and the lithium iron battery setup. So from a traditional player to a modern player. Interesting conversation will be there with Anurag Chaudhary, but just after a small break.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative
Welcome back to Know Your Company, and we are joined in by Anurag Chaudhary, the Chairman and MD at Himadri Specialty Chemical. Good afternoon, Anurag ji. It's always a pleasure to have you with us at NDTV Profit. Last time in KYC until now, stock is up more than 50% and Q3 numbers are strong, and this time Q1 also the number is quite strong. I want to understand what led to this growth and, of course, what are the key factors to watch in the first quarter?
So, sir, as I told you earlier also, we have transformed our journey from low value added to niche and high value added product company. The focus is on value addition. That is the game changer. So quarter on quarter, you see improvement in top line and bottom line, particularly bottom line. This is basically because we are moving into high value added products.
That's the entire story of Himadri, and that's what the placement is. But I want to understand a little bit more. You have given a big capex and expansion plan, almost 1,600 crores of it. I just added all of them up. It's in the new segment, it's in the specialty segment. If you could just break it down, and also how will you be funding this capex plan? Will it be internal accrual?
Yes, it will be an internal accrual. So this quarter, we have announced a fresh capex plan of 368 crores. If you look at this capex plan, 70 crore is carbon nanotube. So carbon nanotube is a revolutionary material which for the first time any company is going to manufacture in India. We will be among the select few companies globally to do this. It's effort of relentless hard work of research and development team of Himadri which has made this happen. So while we are setting up the plant, it is to make it very simple for everyone to understand. Graphene rolled into seamless cylinder is carbon nanotube. It is 100 times stronger than steel with conductivity of copper. That's the game changer. Stronger than steel 100 times with conductivity of copper. So it finds wide applications from lithium ion batteries to semiconductors to capacitors to aerospace, huge applications, and application is still being developed. So the product has huge potential for future. The next product which we have announced is super specialty carbon black. So we have been in the field of carbon black for more than 15 years now. We started with commodity, transformed into specialty. Now the new journey starts. This is super specialty where the real value addition lies. And this is something on which we have been really focused and working for years. and now the time has come to come up with a commercial plant for this facility. So we will be converting our existing carbon black facility, 6,000 metric ton, to super specialty carbon black. It goes to very niche market. Then the third is anthraquinone and carbazole. We are already in the process of setting up plant for 2,600 metric ton at a capex of 120 crores. We have just doubled it because the product has very strong value addition and margins.
Fair enough. Anurag ji, I want to understand the revenue outlook, because now the revenue profile of the company has completely changed if you are looking at a 4-year view. So our stakeholders want to understand, from the management, what's the margin outlook looking like, or the revenue growth outlook, if you would give. It can be for 1 year, 2 year, it's up to you.
So if you look at the revenue, all these businesses are going to start in phased manner, starting from FY28 to FY29. So if you ask me for revenue for 5 to 6 years, each segment will give you very strong revenue numbers. In terms of battery materials, will give you in 6 years a top line of 30,000 crore with 100 gigawatt of capacity coming from lithium iron phosphate, anode, silicon carbon. Then existing business will also give you very strong top line. Plus all these specialty chemicals will add up to that.
Sir, and one more question is on West Bengal. There is a massive revival of sentiment in the businesses. You are one of the key beneficiaries also. So how does it pan out for you as an industry? You have huge plants located in the supply chain systems also. So your view on the West Bengal revival sentiment?
So now, actually, to be very honest, it's a game changer for us and everyone in West Bengal. So looking forward, we tend to invest more in our state, where we have grown from scratch over the last 4 decades. Now is the time for West Bengal for next 10 to 20 years. That completely belongs to our state, and a lot of investment which we are looking at different states. Now we will come back and look at our state as most important destination for our future investments.
That's a very big statement. Next 10 to 20 years belongs to West Bengal. I want to understand the India story also, and you're a very key player in the lithium ion battery segment. Where is your company placed, and right now where is India placed?
See, if you look at the lithium ion space, this is something in which we have to really work hard and take our country to different league altogether. If you go back and look at all the industrial evolution which has happened over the years, we have been somehow doing assembling only. But with the government support now this time, in terms of PLI, government is giving unparalleled support to manufacturing, which has never happened in the past. So now the time has come with India will become the manufacturing base of all future innovations. And same is coming with lithium ion. And Himadri is going to play a very critical role in this, because today, if you look at lithium ion cell, 65% cost of a cell is anode and cathode. And Himadri is going to set a facility for both. And unless you have raw material component manufactured in our country, we can never be self-reliant and Atmanirbhar. So to make our country really Atmanirbhar, this is the right step, what we are doing, setting up facility for component manufacturing for lithium ion batteries. Today, China is the leader in this with almost 90 to 100% market share. So there is a big opportunity for India, for everyone to look at this space.
Ragji, you just mentioned the China angle also, and that's a very key strategy against China, because they, as we know, the industry at times, the pressure comes in, the government is also helping in incentives, and now the manufacturing power should remain with India. So that's a very interesting take you have given on India, West Bengal, your company, industry, fair enough. But it's the season of FIFA World Cup also, and only 2 countries remain, Argentina and Spain. Just wanted to end our interview with that. Which team are you supporting?
I support Argentina, basically.
Right. All right, so you're a Messi fan. That means it's wonderful to talk with you, Anurag ji, on the company and the industry as a whole, and best of luck for the future. And we'll be waiting for you for your 3rd appearance in KYC in future as well. Thank you very much, sir. So that's the management of Himadri Specialty Chemical, coming out with a very strong Q1 numbers and focusing on the new wave of growth and a quite bullish commentary coming on West Bengal and India's growth story and mitigating the risk factors against China. Interesting story, right? For more of this, stay tuned to KYC and keep watching NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Ready for the next big IPO? Apply for it on Groww. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Groww now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Ready for the next big IPO? Apply for it on Groww. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Groww now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार. प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक. An initiative by Gautam Adani.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen.
Benchmarks retreat from days high, but the Nifty manages to hold near 24,100 level. Sensex gains more than 200 points. Auto, oil and gas lead the gains today. Financial services and defense on the back foot. IT stocks bounce back, snapping a two-session losing streak. Softer US inflation and optimism ahead of June quarter earnings helped lift the sentiment across the technology sector. ABB India buzz in trade after ABB Global reported an 81% year-on-year jump in order inflows from the India region. That was well above street expectations of around 20% growth. EMS stocks will be in focus after the cabinet cleared a 62,500 crore rupees mobile manufacturing scheme. The move aims to boost local component production, deepen domestic value addition, and strengthen export competitiveness. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Let's take it straight to the markets at this point. Yes, it has given up a large part of the gains, but still holding strong at the particular moment above the 24,100 odd level. So Nifty 50. And the top contributor today is not coming in from the banking space, which is a laggard in trade, remember. But in terms of contribution, some of the IT companies with the bounce back of IT, yet another volatile day with downside yesterday and today again seeing some buying seen in the IT sector. So IT as well as Reliance Industries adding the most amount of contribution in terms of 19 odd points being added to Nifty 50. And remember, tomorrow is Reliance Industries results for the quarter. Apart from that, some of the consumption counters like Bajaj Finance, Mahindra and Mahindra, all these are all also adding to the momentum. On the downside, Eternal is the top dragger in trade today, also with banking space like Axis Bank, HDFC Bank, ICICI Bank, all down in trade. In terms of the sectors, autos are doing well along with the IT bounce back. And when we talk about consumption, oil and gas, these are the ones really gaining. On the downside is real estate as well as Bank Nifty, which is really not contributing much today in trade. So that's a snapshot on the market. Let's get chatting with Achin Goyal, the CIO and fund manager, Bonanza Portfolio joins in. Achin, a pleasure to speak to you on NDTV Profit. What do you make of the market momentum? And 24,100 level is becoming like zone where above which it is finding difficult to really hold on for too long. How are you seeing this also with crude oil prices at elevated levels, war uncertainties coming back, and we are in the midst of earnings season which the market is digesting?
Hi Nisha, thank you for having me. And 24,000 level is the levels with which I think all the investors, participants are practically flirting for a long time now. And honestly speaking, I was just looking at the numbers of the advanced techs and the kind of picture they represent. It's pretty optimistic. Advanced techs numbers that were reported for Q1 were close to, I think, 15% more than Q1 26. So on and all, I believe that earnings season would be better than expected. Definitely some disappointments here and there would be there. So yes, we have been seeing a range-bound markets, and for multiple reasons, the minute we try to show exuberance, there is something from the US which comes and you take a back seat. But overall, I believe it's a good market for the investors and a lot of positive news.
Right. So, Achin, when we look at the buying opportunity, especially with some of the earnings already out of the way, what are the themes that are really developing for a mid to long-term kind of a decision in terms of investments at these levels?
Sure. So, one of the things is that if I look at a recent policy of Semicon 2.0, which was announced, your EMS, your semiconductor has always been on the center. And one of the reasons that India was behind is, having deficiency in its own manufacturing capabilities. So I believe the focus has shifted that side. OSAT was there, but now it's on the complete value chain. So I believe this is something that investors should track. Second is a multi-decadal bull run that I talk about is in the capital goods, which is electrification, transmission, power grids, everything combined together. So capital goods is one sector that investors who are long-term investors can find few good stocks there, and they can sleep at peace. Another thing is banking. If you will see, the credit growth has picked up pretty good this time. I mean, you are seeing a credit growth of close to 18% and deposit growth lagging by 13%. However, with the measures that have been taken through FCNR and all these things, we expect a good deposit growth too. So NBFCs and finance would be one sector where investors can park more money as well.
Right, and one question, Achin, that everybody is asking for you now with the kind of commentary that we have got from the IT sector, even including IBM, and the kind of momentum that is shown in terms of revenue contribution by some of our IT services companies when it comes to artificial intelligence. Putting all that into context, what will be your suggestion and strategy for the IT sector? A lot of the market participants are seeing it as a trading play, and some do believe, and one of the IT experts said that in 3 years there'll be a 70% stock return because of the AI thrust also that they are mentioning. So there is very divergent views. So we are trying to take a poll. What's your view on the IT sector, and especially at these levels?
So there are divergent views, no second thoughts about that nature. If you ask my view as a CIO and fund manager, we like to go with high probability scenarios. And honestly speaking, would I put my money into IT today? One of the thing is it can be a trading bet for me. When I'm saying trading, it can be a short-term bet. But for the long-term investment, I would still wait for more, strong cues in the market, strong uptick, in terms of numbers, and not only because of the rupee depreciation, but real headline growth story. So I feel there's some time, and from my perspective, I would probably have a very limited and selective exposure in IT, and I'll wait for some time.
And also, Achin, are you seeing further downside given the uncertainties and some of the casualties that may come up because of the earnings season? Because we are right in the beginning of it, and we have to still see with some margin depression because of one full quarter of crude at higher prices. So you think everything is baked in, or do you think that there can be some bit of downside and some bit of cash can be really kept for later deployment?
So I feel in terms of downside, there's a limited downside. So for the investors who are willing to create that portfolio, I would say wait for the results. So we are expecting, some better than expected numbers in certain pockets. And don't worry. I mean,
Sure.
whatever investments will be made today, you will be making good returns.
All right. Thank you so much for joining in us with your expert take on the markets and the investment strategy. Moving on, then Bank of Maharashtra came out with its results, and Nidhu Saxena, who is the managing director and CEO of Bank of Maharashtra, joins in. The stock is down over 1% in trade. In fact, the whole banking pack is in the weakish zone today. Nidhu Saxena, always a pleasure to welcome you on NDTV Profit. When we take a look at your quarterly results, and of course, the NII growth has been good. The PAT numbers have seen almost 27% rise. Operating profit is up over 20%. But when we take a look at the asset quality, Nidhu, the provisions have risen by 14% for the bank in this particular quarter. Your GNPAs, for most of the banks, the target is generally to improve the GNPA and NNPA figures. They have been flat on for you on a QOQ basis. Can you give us a sense on the asset quality to begin with?
So, thank you for inviting me to this interaction. In terms of asset quality, I think we are fairly placed. The gross NPA and the net NPA numbers that you have mentioned, 1.45 gross NPA and 0.13 net NPA. These are against my guidance that we've been sharing at the beginning of the year to maintain GNPA below 2%. And NNPA within 0.25%. These are very fine numbers. If you ask me in terms of NNPA as a amount, it is a very small amount. I can make 100% provision out of my usual operations and bring it to zero levels. So that doesn't make sense. We are going to be a dynamic environment where we'll see slippages and this. But what I want to make a point is we have already reached a level where there is hardly any scope to further improve it. And we would like to maintain it. We are well within our guidance. 1.45 and 0.13, probably no other bank in the industry, PSBs private put together would be near to matching us, maybe, but not better than that. So we are industry leading in terms of this. Coming to the stress, the overall stress is well managed in the loan book. In fact, it is almost 3.18, which is the stress percentage for Q1, and which is a 140 bips in improvement year on year. Not only in the percentage terms, our stress percentage has gone down. Almost 1,400 crores of stress amount also year on year has reduced. So we feel comfortable about the two issues, and we would like to maintain the numbers within the guidance.
Right. So you would like to maintain these numbers. But Nidhu Saxena, I wanted to also ask you, since banks are the nerve center of the economic activity in various sectors, in terms of slippages, provisions being, increasing, is there any stress being seen in any particular sector, you think? And because of the war-related worries, is there any pressure that you foresee for this particular quarter in any segment of the businesses?
So regarding the stress, regarding the provisions, I want to tell you, you asked the earlier question also, the increase in provision in the bank is towards the income tax. FY 25-26, H1, we had some accumulated losses that we exhausted. And in the last year, I paid almost 900 crores of advance tax. In this Q1 also we have paid 300 crores of advance tax. So provisioning, which is appearing heightened, elevated, which you mentioned, is on account of now the bank does not have any accumulated losses, and we are providing for the tax liability that is coming. We are into the new regime where we are paying the taxes at the 25%, but looking at the allowable deductions, the effective rate somewhere comes around 17%. But having said that, with this accumulated losses getting over, I have also mentioned this in past, I see no reason why in terms of percentage profitability and also in terms of value amount wise, we will see that the OP or the NP going down. So this is one thing. Second, regarding the stress from the West Asia, as of now, to mention, we don't see any visible stress signals. There is a emergency credit line, ECLGS 5.0 from the government, I think, which is a very timely intervention. My bank, in terms of the reach out to the eligible customers, we have done a phenomenal work there and extended the benefit to those who are eligible and are willing to avail. I think as of now, so the MSME mostly which have benefited from this ECLGS 5.0, they are also not going to face, if any liquidity mismatch temporarily is there, they are taken care about this emergency through this emergency credit line. But we are monitoring our portfolio. The sense is maybe the fallout may be seen in next 1 or 2 quarters. So we are monitoring our portfolio. As of now, no any visible stress from the West Asia crisis that we have gone through.
All right. So thanks for clarifying on 2 accounts. First, on the provision figures, and second, on the credit line, emergency credit line, and how it's going to really impact the sector in really, dealing with this particular West Asia crisis. But also wanted to understand your return on asset figure. That has been under pressure, decline of 7 basis points at 1.9%. Can you throw more light on that and give us visibility in terms of guidance for the rest of the financial year on this aspect?
So if you see the profitability metrics of ROA, ROE, NIM, we lead the pack. We are already at a very high level. If in the PSB or the private PSB space, if the number 2 in terms of the NIM will be somewhere almost 50 bips around kind of a gap. So we already are at a very high elevated level. My guidance I would like to very quickly share for NIM is 3.75. We have done a NIM of 3.85 in the Q1. The ROA guidance for this year is 1.80, which has been a 5 bips increase from the ROA guidance that I shared last year of 1.75. While we had done almost ROA of 1.9598 in the Q4, but we have kept a guidance of 1.80, and Q1 performance at 1.90 is 10 bips more than the guidance number that we have shared. And I feel this is high ROE numbers to maintain. And we are committed to see that the guidance in all these profitability metrics, we are overachieving to the levels that we have already shared beginning of the year.
That's right. So great to get some guidance coming in on that one, Nidhu Saxena. And thank you so much for joining us on NDTV Profit to give clarity on the numbers and the performance and the way forward. All the best for this particular quarter as well. Thank you so much for joining us. And take a look at Bank of Maharashtra. That particular counter is under slight bit of pressure today, almost 1% down in trade. In fact, today the bank's pace is anyways weak. But if you take a look at the 5-day trajectory of Bank of Maharashtra as well, it has eroded over 5% in the last 5 sessions. All right, so that's about the Bank of Maharashtra. But let's also focus on one particular sector which is creating a lot of buzz, not just in the public market, but it also has reached our household and our daily requirements. And there is intense competition in this particular space. So the quick commerce race is really entering a new phase. Remember, while Amazon and Flipkart are really expanding aggressively, market leaders continue to hold an edge through scale and delivery density, as well as the stronger cash reserves. Let's delve deep into this quick commerce battle with Tejas Shah, who's the head of consumer research at Avendus Spark Institutional Equities. Tejas, great to have you on NDTV Profit. And of course, when I look at this particular sector, the competition is just intense. Everybody wants a piece of the pie, and the cash burn is also enough. Very few are able to really convert to the side of green. First, beginning with Amazon giving a big thrust towards this particular space. What does this mean, Amazon with deep pockets, for our India homegrown companies who are already competing in this particular sector?
Yeah. So at the broader level, Nisha, we see this as a validation of quick commerce is no longer an experiment.
Yes.
Because if Amazon is backing it with a lot of capital, it means that they also see a huge retail opportunity in this value proposition. Definitely, this will increase competition. Competition will intensify. But the plank of the competition will move from more of operational excellence than just customer acquisition from here on.
That's right, and only customer acquisition is really the market growth momentum. And if the companies are in the public market is really not accepting anything below path to profitability, and profitability really kicking in. But when we talk about the competitive intensity and the deep pockets that some of the global companies with global parentage also, like Flipkart Minutes, also coming in, how do you see the impact on the companies which are homegrown, which are in the listed space and have to deliver quarter on quarter? How do they manage the competitive intensity, and what are the trends that you see picking up?
So, see, competitive intensity remains high, and it has always been the case. It's just numerically the number has increased now again. But the planks of competition is kind of gravitating more towards, as you called out, path to profitability. So more of an operational KPI like dark store productivity, your procurement excellence, your ad monetization. So it started with largely around free delivery, customer acquisition, and faster delivery. I believe that some of those matrices are now getting broader in terms of the operational part as well. So the competitive intensity was always high. It is intensifying, but the matrices or the parameters of judging the same are kind of evolving and broadening as well.
Right. And also, Tejas, when we look at this particular space, it's not just the grocery services. We have started buying our umbrellas in rainy season on some of these quick commerce apps, and some of the makeup, articles are also there where Nykaa is already present. So express delivery is one important aspect which is now seeping into all the types of consumption play when we talk about e-commerce. How do you see this particular game? And also, what do you think about the next phase of expansion? Is it about only expanding the offerings that you have on the same app? Is that the game that the companies will have to play to beat the competition, especially also hinting at Insta now tying up with HPCL for LPG cylinders on their app?
Yeah. So see, at the core, the quick commerce companies have created world-class supply chain and last mile delivery capabilities. Now, the next logical step is to layer it up with more adjacencies, which makes sense for both unit economics and also for customer value proposition. So this evolution is very trial and error in nature, but that's how it will evolve, because you have built your core value proposition in terms of delivery capabilities, and you'll see whatever adds value to your own economics, unit economics, and also makes sense for the customers. You will kind of try to evolve the business model or offerings in that direction. So it's evolving, and it will keep on evolving, as we have seen it offline retail as well.
Right. So in offline retail as well, and also looking at the overall consumption theme as well as the demand scenario, how do you see the, overall ground reality in terms of the quick commerce and also the expansion into various segments which have been under-penetrated? We recently had one of the states really banning one of these quick commerce apps because they wanted to support their mom and pop shops.
So see, so there are two questions. First, I'll address the consumer sentiment part. See, there's a lot of pressure to give one singular definition for consumer sentiment in current scenario, but I would say that it is still fragmented and it is very bottom up. At one end, we are seeing super demand from jewelry and some of the beauty personal care products, high end value retail also is surprising in pockets. So there are a lot of bottom up drivers also which are playing out in some of these categories. And at the other end, some of the beaten down traditional categories like hair oil is also showing some traction of late. And hence, it is very difficult to kind of give a very one envelope answer to what is happening in consumer. But I would say that we are better off than where we were last year. All the effort that government had put in to revive consumption have started surfacing off late, and we hope that it continues and gains momentum in this year.
Right. And also, Tejas, when we look at the equity market, the public market, this particular sector has only developed in the last few years and now is getting bigger with more aspirants coming in for the IPO. What is it that the equity markets would be looking at in terms of the matrices and also the deliverables from these particular companies as they aspire for equity market participation?
See, definitely the ask from the sector has evolved. Earlier, it was all about growth only in terms of customer acquisition, in terms of KPIs, which were revolving around customers. Now the question is, or the ask is drifting, or I would say adding one more layer of path to profitability. How do you create a sustainable moat on the business, which is not only around discounts or freebies? And the first principle ask, Nisha, remains the same, which is cash flow, ROC, and growth all in tandem in future. Obviously, not every quarter or not every year, but how each company are kind of aligning themselves with those final objectives in medium to long term.
Right. And Tejas, my final question, while right now we are at a stage where at least from market growth, we have moved on to asking for profitability. Many companies have started delivering, taking the lead is Blinkit as well in quick commerce. But on the other hand, also the stage of the sector is now entering another phase of heightened competition with deep pockets coming in. How do you see the outlook really, changing over the years in terms of the sector really evolving and maturing? With so many competitors, is it a crowded market now and there will be a need for consolidation therefore?
See, very interesting question, and very interesting that you use the word crowded market. See, there's a very high chance that there'll be some initial pressure on crowding out on some of the input resources, be it dark stores or be it delivery workforce. So the competition is definitely moving in that direction, that there'll be pressure on some of those input costs. But at the same time, I believe that the opportunity is very huge. It can accommodate some of these pressures easily. But the parameter or the KPIs of judging the competition or evaluating the competition from here on will move more in favor of some of the productivity metrics in terms of unit economics, in terms of dark store productivity, in terms of profitability. So sooner or later, the business kind of gravitate towards those first principle parameters only, and which is where I believe the competitive intensity will, after that evolution, will move in that direction sooner or later.
All right, Tejas Shah, always a pleasure to get your expert take on this. Thank you so much for joining in. Completely out of time on Markets at 12, but keep it with NDTV Profit. Thank you so much.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी.
Ready for the next big IPO? Apply for it on Groww. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Groww now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क.
इस बार तो माँ से भी बेहतर बना.
P-Mark, the mustard specialist since 1933. बरसों से सरसों. कुछ तो बात है इस दिल में.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है. P-Mark सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ.
The mustard specialist since 1933. बरसों से सरसों. कुछ तो बात है इस दिल में.
Ready for the next big IPO? Apply for it on Groww. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Groww now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting on this.
Hello and welcome to NDTV Profit. You're watching Trending Stocks at NDTV Profit Suzlon Studio. I'm Hiral Tatia, and with me is Sharad Dubey, who's actually standing at the Profit Market Pit to tell us more in terms of what's happening Sharad, with the way markets actually ended yesterday, the question over here is, the moment you cross a certain level, you're seeing that selling which is coming in. However, 24,000 has been a strong support level as well. What is the setup looking like right now?
Well, there is a little bit of divergence at play, there. But Hiral, you're right. There is a narrow range-bound movement happening, but nevertheless, there is a divergence for both Nifty Bank. Nifty is a little bit minor recovery is trying to being made here in the day's trade. Yesterday also towards the closing, there was a recovery attempt being made. But is the strength strong? That's the big question. And I guess the options data is suggesting the story is something else. Nifty Bank, let's see what's happening here, and that's where a weaker technical setup is there. It's in the red right now. It's trying to make a recovery attempt here as well. But remember, there is a Sensex expiry at play also today in the day's trade, and largely we look at it, a very mild recovery is happening. Whether it will sustain or not for Nifty in the factors to watch, that's something we'll try to understand. And of course, the Nifty Bank, the sell-off has come in almost at 57,400 to 600 levels of support range coming in. Apart from this, the sectors to watch, there are two sectors that should be in your radar, the IT and the consumer durable pack. Both of them we are seeing a good buying. They are the top sectoral gainers also, and largely a lot of news flows are coming in this segment as well. Both of them doing well, good momentum. And the SMIDs, especially the small caps, that is where we are seeing a good momentum. Let's get in the other key details. Of course, the rupee and India VIX is stable right now. Rupee is actually strengthened a little bit, so that is a good point as well. And India VIX is falling, so this is also augurs well. But going ahead, the focus would be on a lot of AGMs and the earnings which are coming in. 3 important AGMs, but all of them are down. Not so much, but nevertheless concerns are there. But focus is on earnings. And the Q1 earnings, big names are there such as Polycab, BHEL, which will be tracking in the day's trade today as well. But the entire action is stock specific right now, and nothing much happening in the sector barring a couple of them. So that is what we'll be focusing on. And of course, the MSCI adjustments, that also comes in the last half an hour. You'll see the adjustments. Over here, there'll be inflows in Fator and Pharma and outflows for RBL Bank. So this is the entire story coming for today. Back to you, Hiral.
Thank you so much for that. So interesting moves that you're seeing in the markets. Let's also look at the sectoral heat map, and then we'll just look at the Nifty 50 contributors for today, because that will give you somewhat of an idea in terms of sectors which are actually moving in trade. If we can just have that one on the screens as well as we speak. In terms of sectors, consumer durables 1.5%. IT is bucking the trend today as well, along with auto and FMCG. What's not really doing well is real estate, which is down 0.4%. In fact, there is profit booking which is coming in with regards to real estate names over the last couple of days. There is profit booking coming in the financial space as well. So look at the PSU Bank Index, look at Nifty Financial Services, look at the private bank index as well, and you have defense, which is absolutely on the borderline along with metals. So that's what the sectoral heat map is looking like. But first up, in terms of the watch list, Dixon, Keynes, Amber, all of these companies are in focus, and this is because the mobile PLI 2.0 scheme has got the cabinet note moves coming in there as well. You have HDB Financial, which is reacting to numbers. That stock is down nearly 0.5% in trade. The profit though is up around 38%. HDFC Life, the first quarter AUM has gone up around 13%, but the street is not really happy with it. That stock is down in trade. MRPL 8.5% up move, and that's because the company has actually turned profitable on a year-on-year basis. So that stock is in focus. Moving on, let's go to the next. ME, that's stock is actually seeing some smart moves in today's session, 6.5% up move coming in there. But before that, ICICI Lombard, the net profit is down 46% on a year-on-year basis. Jana Small Finance Bank, that stock is up 4.5% on the back of numbers, but the profits have gone up 52%. Ether Energy continues to buzz and trade for a second consecutive session. In fact, today is slightly under pressure. There is profit booking coming in, and this is on the 1,300 crore QIP launch that has happened. Hindalco is in focus as well, because Kotak Securities has upgraded the stock to a buy from a reduce. So it's a double upgrade coming in for a Hindalco in trade, and that's the reason why that stock is in the positive. Abacus Investment has bought nearly 1% stake in Mrs. Bector's Food. That stock is up nearly 14.5% as we speak. So smart moves coming in there, and you will see a deeper dive in terms of what's happening with the Mrs. Bector's that Mahima will bring to us in the market close today. Adani Energy, wherein Morgan Stanley has maintained an overweight, that stock is up in trade. Hind Rectifier's second consecutive session of gains, 21% in 2 days, and the stock is trading at an all-time high. ABB is up 8%, and this is because in the second quarter, ABB Global has come out and said that India order inflow is up 81%. The commentary coming in from ABB Global is something which is seeming to be positive, and that is having an impact on Siemens as well on the back of the global parents' positive India commentary, that rub-off effect coming in on a Siemens India. Eternal, where Blinkit is outperforming peers in terms of numbers, and that's why that stock is slightly under pressure now, 1.5% in spite of that positive announcement. Wipro, the guidance upgrade expectation is what everyone is watching out for in terms of Wipro ahead of numbers. Likewise, a Tech Mahindra is also buzzing in trade today ahead of its numbers, along with the BHEL, where a double-digit revenue growth is what the street is expecting, and BHEL is also up in trade. Powerica, 2.5% up move, and this is on the SECI order win. NTPC also is up in trade on the back of the SECI order win, so watch out for both these counters. Himadri Speciality, in fact, we just did a Know Your Company on NDTV Profit, which you can catch on television in the evening or on our social media platforms. But strong performance in the core business is what they have reported. Jupiter Lifeline, the promoters have released a 1 crore pledge in terms of shares, and that's the reason why that stock is also trading in the positive. So an exhaustive list today in terms of stock movers. But Sharad, over to you to take the rapid fire.
Well, thanks a lot, Hiral, for that. We are joined in by Lakshmikant Shukla. Good afternoon, Lakshmikant. It's always a pleasure to have you. The stock, first one we'll discuss is Mrs. Bector's Food. After a long time, we are seeing ace investor Sunil Singhania's company Abacus taking position, almost 1% stake buying, and today also it seems like there's a good follow-up buying happening in this counter. The risk-reward ratio is too attractive because there's a massive fall from its one-year levels. Today is an up move. Do you think that this up move will continue in the coming days?
Yeah, good afternoon, Sharad. So starting from your first question about this stock. So although stock has seen decent amount of correction, but today it has showing positive momentum, and it has surpassed its previous swing high of 191. I think that would be the level to watch it out for this stock. If it get close above this level, I think we could see some more momentum, and then after we will see positive momentum in the stock toward the levels of 205 to 208 kind of zone. So I think one should wait for this close. If it gets close up the levels of 191, then I think that would be the good level from where one can initiate long position for the target of 205 and keep the stop loss of 178 on the downside.
Lakshmikant, your views on Hind Rectifiers? Any momentum play here? And if yes, can somebody take a position fresh?
I think one should avoid at current point of time because it has seen a good amount of surge, but in today's sessions it has formed long leg doji kind of pattern, and it is facing resistance around the zone of 1400 to 1380. I think if it crosses this level, then after it will resume its upside momentum. If someone have, I think he can wait with the stop loss of 1270, but I would not recommend any fresh buying at current levels.
Right. Is there any kind of a signs of a breakout happening in Eternal stock here? After a long time of consolidation, we are seeing some action happening in this counter now.
Eternal has given a good breakout and surpassed its 200-day SMA also, but for last few days it has also witnessing some sort of profit booking, but still trading above its long-term moving averages. So I think as long as it holds this level of 275 to 280 zone, we will remain positive. Fresh breakout could occur once it surpasses the levels of 300, then one can expect the target of 320 in Eternal.
Right, ahead of BHEL's earnings, any trade can be made here? If you could see on the charts.
In yesterday's sessions, BHEL has given cup handle breakout on the daily chart and still trading above the same. I think one can initiate long position even at the current levels. My view is positive, and I am expecting the target of 428 to 435. First target will be 428 and second target would be 435. One can keep the stop loss of around 405. As far as it holds this level, one can expect this upside breakout.
Right, two stocks I'm giving you, NTPC Green and the second one Powerica. Both of them buzzing on order wins coming in from SECI. Of course, both of them have a smaller history, but looking on the charts, which is looking more attractive right now, Lakshmikant?
I think if and moving averages from last few days it has been trending over with the formation of person momentum. So I think consolidation breakdown could be seen in NTPC green below the levels of 90 and then after we will see more correction. So I think I do not track for power shares so I cannot comment on it but NTPC green might be negative.
Right. Of course, a little bit of technical error was there on this. If you could just give in your views again for Powerica and NTPC Green, Lakshmikant.
See, NTPC Green is running on its downside move. It has already given a breakdown below the levels of 98 and then after it has still making lower tops and lower bottom. Further breakdown I'm expecting below the levels of 90. From there it could induce some more selling pressure. So my view is negative on NTPC Green and I do not track Corsia so I cannot recommend anything about it.
Fair enough. That's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks suggesting?
In fact, in terms of Google trends, again you have a Kusumgar which is trending, which is an IPO which I listed yesterday. Smart moves that we saw in terms of yesterday's session as well. And if you pull up that one on the screens right now, 0.5% up move, but that's what is trending so far. So no technical view that we can take on this one. But I think we should be moving to an exclusive story with our colleague Sesha. Now, the Power Ministry has issued the draft CAFE 3 norms which have been proposed for the next fiscal year. My colleague Sesha has the copy with her where she's picking up the exclusive details. What do they point out, Sesha, in terms of the details and what is the kind of impact that you're looking at?
Right. So the Power Ministry has issued the draft CAFE 3 norms proposing to roll out the new fuel efficiency standards from April 1, 2027 for a 5-year period. Now, with the existing CAFE 2 norms are likely to end on March 31st, 2027. Now, what we are given to understand is that the compliance will be assessed in 2 phases, an initial 3-year block followed by a 2-year block. Now, the draft proposes progressively tighter fuel efficiency targets till 2031 to 32, while introducing incentives for cleaner technologies. Now, for the first time, carbon neutrality benefits have been proposed for ethanol, biofuels, and compressed biogas, alongside compliance benefits for approved fuel-saving technologies. Now, the draft also proposes super credits for electric, hybrid, and flex fuel vehicles, credit debit mechanism for automakers, and compliance credit priced at about 2,500 each with an annual 500 rupees increase. Now, manufacturers failing to meet the norms could face penalties. However, the draft also mentions that car makers selling fewer than 1,000 passenger vehicles annually will continue to remain exempt from the proposed norms. Now, just to notify here that the draft is yet to be uploaded on the websites and it's not yet available publicly. It will soon be available for public comment.
Okay, so it will soon be available in terms of public comments as well. Let's just pull up all the OEMs over here as well and see what's happening on that end, from a Hyundai to a Maruti Suzuki to a M&M, Tata Motors. Let's pull up all these counters on the screens as well, because EVs and hybrids are the ones that will see benefits. There will be benefits for ethanol and biofuels as well. And there's going to be a credit debit system that will be in place for automakers. Let's pull up a Hyundai. Let's pull up an M&M. And M&M is already trading with gains of 1% and a half. Hyundai is the one which is actually climbed at the day's highest levels, 2.5% coming in there. Hero Moto, no major moves coming in on that counter. But this is interesting because super credits have been proposed for EVs, hybrids, and flex fuel vehicles. And the credit debit system proposed is for automakers to meet targets. Compliance credits are priced at 2,500 rupees each, and will rise by rupees 500 every year. Very interesting story there. Let's get in Tapan Doshi, research analyst at catapan.in as well. Tapan, welcome to the show. Always a pleasure to speak to you. The Power Ministry has issued draft CAFE 3 norms which have been proposed for the next fiscal year. You must have heard my colleague Sesha give out the details as well. How do you see the benefits pouring in and who could be the beneficiaries according to you?
Good afternoon, Hiral. Now, if you see, yes, there is a push from the government. It looks like no, they want to bring the dependency lesser on the oil prices. No, at the end of the day, that is hurting us currently. And now this draft proposal is good for all the OEM. No, especially I think Maruti will be benefited. No, because in hybrid they have a good amount of volume. Again, the M&M and also Tata Motors will be benefited. It is actually good for everyone. And it looks like no next 2 3 years, no more and more regulation will come which will support EV, hybrid, and all that. Reason is simple, no, that oil dependency we want to bring it down, and from a lot of you can say incentive also coming from many of these car makers. So I think that is good. If you talk about the valuation of most of these players, no, I think they have come down little bit from the top. I think that I know for the long term, if someone is looking for it, they can go for Maruti or M&M. I think that are the two picks. Will I take it for the passenger vehicle? I think they will do well over the time. But yes, good news for the car makers.
That's the view coming in from Tapan on that. But another stock, of course, that's buzzing in trade. Much more of a, you could say, a fundamental view coming in from a broking house, Hindalco. What are the key takeaways from this? And do you think like the pricing, the global pricing, is it on the higher side? I feel like alumina prices are on the higher side as well.
Yes, Kotak has given their view on that as well. But first, let's start with their view on Hindalco. They've said that they have, first of all, given a double upgrade on the company from their reduced rating earlier to a buy rating now. They've also hiked their target price from 1100 rupees per share to 1120 rupees per share now. According to them, Hindalco is poised for a comeback now with all of its disruptions behind this. They have said that Hindalco will come back to on that growth trajectory because of their normalizations and the growth prospects that the company has, and also their Indian division will join that same growth path from FY28 onwards. About your question on aluminium as well, they've said that the peak deficit is now receding, but the market tightness will still persist, and that is going to aid for the growth of Hindalco going forward as well. So overall, the balance sheet of the company is healthy, and the ongoing capex plans is something that you need to keep on your watch if you're tracking the company, and that's what is going to give them the major boost ahead.
Thanks a lot, Pat, for that detailed analysis. And of course, that Oswego plant overhang also might be over for the counter. Tapan, wanted to get your views on the entire space, the ferrous space, as well as Hindalco. Any risk reward ratio being attractive for a medium term or long term basis?
Yeah, good afternoon, Sharad. Yes, the stock has already come down little bit, and if you see the demand will be good in future for next 2 to 3 years. Again, the Novelis expansion is progressing. Again, Indian downstream capacity for Hindalco is little growing. If you see the value-added products are increasing. Also, now in future EV infrastructure demand is supportive. The only thing is, we have to see the energy cost fluctuation that will may hit the margin. But I think if you see the net debt is reduced substantially for no Hindalco, so I am positive on this stock. I think at this level or in a deep for the long term, I think you can take position.
Apart from this, very important news flow coming in from Adani Energy Solutions also, and Varsha is tracking the space. Varsha, what's the big announcement?
Well, it's a brokerage note. I would say Morgan Stanley has actually maintained an overweight on Adani Energy, and they've also raised the target price. Now, what they're saying is, one is that the MS believes that India is emerging into a super cycle of power demand, and Adani Energy is one of the key beneficiaries when it comes to this. They are already leader in the power transmission business, have a strong position, when it comes to the fast-growing smart metering segment as well, and they are also building capabilities when it comes to data center, and hence because of all this, they've actually raised FY27, FY28 EPS estimates by around 9 to 26%, and they are also forecasting 39% of PAT. So overall, because of these reasons, actually MS is very bullish when it comes to Adani Energy.
Thanks a lot, Varsha, for that detailed analysis. And of course, there's a standard disclaimer also, which we'll put it out. But Tapan, a quick view on, of course, Adani Energy and Adani Group of stocks. The technicals have shown that a good momentum is happening here. If you had to pick up, any Adani Group stock, which would be that?
No, I like Adani's energy solution also, because transmission shortage is there already. Again, their smart meter rollout is quite good. Order book is also robust. Again, distribution business is growing. So I'll go with Adani Energy Solution. It's a safe stock. And another stock, if you want to go, I think Adani Port is the other stock. Now, I'll look at it. I think both the companies will do well in future.
That's where Adani Energy goes now. ABB India, that stock is in focus. Let's pull up that one on the screens because ABB India is also having a rub-off effect in terms of your other capital good companies, and that's because ABB global commentary with regards to India orders has been very strong in the second quarter. In fact, Somit Sarkar stands by to tell us more in terms of what's really the commentary telling you and what would it actually mean for ABB India as well. Somit, over to you.
Well, yes, ABB Global came out with their numbers today at 10:30 in the morning. And in that presentation, the only key point to watch out for when it comes to the India numbers is the order inflow number. Now, as per the presentation, the India business order inflow has grown nearly 81% on a YY basis. Now, this is nearly 4 times compared to what the analysts were expecting for the second quarter of 2026, that is the June-ended quarter. Now, for that, analyst estimates for ABB India order inflow growth was just 20%, and they were expecting the order inflow number to be close to 3,645 crore rupees. But as for the global company, the number has grown nearly 81%, and hence this excitement coming into the share prices of ABB India. And at one point of time, the stock had locked in on a circuit of around 10-odd%. But do remember that this strong order inflow number that we are seeing is coming off on a low base. Now, in the second quarter of calendar year 2025, ABB India's order inflow had fallen by nearly 12-odd% to close to around 3,036 crore rupees. Hence, because of this low base, we are seeing this high number of 81% growth. But if we imply the 81% growth on this number, then the implied order inflow number that we get suggests a growth of just 27% on a sequential basis. But again, that number is also higher compared to what the street was anticipating. Now, here is a trend of how the numbers or how the order inflow numbers has been for ABB India. Now, for this quarter, they're expecting a growth of 81%, which is the highest that we are seeing since the second quarter of calendar year 2022. And last time when the 81% growth was reported by ABB Global for the India unit, actual number that India unit had reported was around 64%. So even if 64% is the growth that ABB India reports for order inflow in the second quarter of calendar year 2026, it will still be higher compared to what the analysts had penciled in at around 20-odd%. So numbers will be out, I believe, on 31st of July. So it will be important to track what is the order inflow number that comes in for ABB India right now.
Okay, so that's with regards to ABB India as we speak. Thank you, Somit, for that. Tapan, what do you make of the commentary that has come in from ABB Global for ABB India and its rub-off effect to analyze what could happen in terms of the capital goods space?
See, last quarter result of ABB India was not so great, and that's why the stock corrected a lot. Now, the what update came, no, it's quite encouraging. Again, electrifications remain strong, so they will have a strong order book. Data center orders also soaring gradually may come. Again, if you see the automation capex is also going to be there. For ABB, orders will not be a problem. I think the execution we have to see and how they are able to control the margin, because last time the margin hit a lot. So yes, the stock has already moved up, but I'll still wait for the more updates and then take a position. I think there are better stocks in this segment which one can look at it. So just wait for the more clarity and no results, then one can take a position.
Right, so we need to wait for more clarity before you take position when it comes to ABB. Another important stock is Wipro. It will be coming out with its numbers, and Jasmeet is here with a quick preview. Jasmeet, what are the key numbers?
Well, in terms of the key numbers, we're expecting a weak quarter from Wipro in this particular quarter. We're expecting a CC growth to see a downtick between negative 1.5 to negative 1%. Now, in terms of the key focus, what we'll be watching out is the overall guidance. Given in the Q4, the company had guided for a range of -2 to 0%, and now brokers are penciling the range might increase and become positive, and we're estimating a positive 1 to a negative 1%. Well, apart from that, the focus remains on the overall AI deflation, AI revenue, the commentary the company makes on the BFSI segment, given the BFSI was weak for the company in the previous quarter.
Thanks a lot, Jasmeet, for that. A quick view, Tapan. I know IT sector is not one of your favorite sectors, but if you had to choose something in the mid cap or the large cap, will you take or advise any positions?
Well, talking about especially for Wipro, no, I'm not expecting a great result. Even Street is not expecting. But we have to see how will be the guidance and how will be the order win from here. Whether they are able to know in BFSI sector how they are going to do it. Again, talking about whole IT sector, no, Sharad, no, still not no favorable peak currently. I think there are a lot of news which is going against IT sector. So we'll wait and maybe 1 or 2 quarter after that, no, who will be the winner, that will come to know. But currently, no.
Okay, so that's with regards to IT. That's an interesting comment. Neither here nor there, wait for the winner to emerge as well. But MRPL, interesting set of numbers that have been reported, and the stock has cooled off from the day's highest levels, but still sees gains of a little over 8%. It's a strong quarter that they have reported, but the revenues have seen a growth of around 60% coming in there. EBITDA, though, is down 26%, and your net profit number has inflated to 915 odd crores versus 110 odd crores. Now, the reason why the profit number has been this high is because it includes a one-off income of almost 470 odd crores, and this is related to a revision with regards to certain petroleum prices. Secondly, if you talk about the calculated gross refining margins, which is the GRMs, that has come in at $8.3 per barrel. And this is better given that there was an inventory loss, there was windfall tax on exports, and the RTP freeze. Now, if you're talking about the inventory losses, these were mainly on account of the fall in crude prices during the end of the quarter, and this is at the ease of the West Asia crisis when we saw, crude prices coming off those $120 to $130 per barrel to $70, $80 per barrel. That's the time where this has come down. Your gross debt has been reduced by almost 2,770 odd crores for our MRPL, and this is only on the back of the strong free cash flow. And this read-through is positive for OMCs as well, because the higher reported GRM for MRPL could actually imply a similar beat for other OMCs as well. So watch out for HPCL, BPCL, IOC. Tapan, quick question. MRPL and the read-through that you see for other OMCs basis these numbers?
Yeah, one can hold this stock now. If you see the numbers are okay, GRM recovery is going to come hopefully. And if you see the capacity utilization is going to improve by next year. Petrochemical integration now, if you see, supports the margin overall. So yes, crude is actually declining year on year. I think at this level now, one can hold this stock for a little bit longer.
Okay, so that's with regards to where MRPL goes. Interesting take coming in there. But thank you, Tapan, so much for joining in. Always a pleasure to speak to you as well. Thank you from Sharad, the team that put the show together, and myself. That's an end to this session of Trending Stocks. Lots more lined up on the other side. Please stay tuned.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क.
इस बार तो माँ से भी बेहतर बना.
P-Mark, the mustard specialist since 1933. बरसों से सरसों. कुछ तो बात है इस दिल में.
Ready for the next big IPO? Apply for it on Grow. Open your free DMAT account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important.
Benchmarks retreat from days high, but the Nifty manages to hold near 24,100. Sensex gains more than 220 points as well. Nifty IT stages a rebound after ending a two-day losing streak as well, with auto, oil and gas in good shape. Realty, financial services though on the back. And IT stocks bounce back, snapping a two-session losing streak. Like I mentioned, softer US inflation and optimism ahead of June quarter earnings help lift sentiment across the sector. ABB India buzz in trade after ABB Global reports an 81% year-on-year jump coming in when it comes to order inflows from the India region. That was well above street expectations of close to 20% growth. EMS stocks, meanwhile, in the spotlight with Dixon Tech, a top gainer when it comes to Nifty mid-cap as well after the cabinet clears a 62,500 crore mobile manufacturing scheme. The move aims to boost local component production, deepen domestic value addition and strengthen export competitiveness. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at what the markets are up to right now. And when you talk about Nifty 50 as well, some decent bit of recovery coming in terms of it's just about, retreated from some of those days highs as well, close to noon. Managing to hold up above 24,100, and that's really the key headline that you're picking up when it comes to the markets as well. When you talk about Sensex, it's actually a deeper shade of green as well when you talk about Sensex, with that 200-odd point gain also coming in. When you talk about some of the sectors that are in focus, something like IT is, of course, in focus on the back of snapping that two-day losing streak as well. So IT in good shape, 1.5% uptick coming in. And the top sectoral gainer as well. So you do have media, auto, FMCG, consumption, oil and gas, all of those sectors holding up quite well against the backdrop of something like realty, financial services, PSU Bank, as well as bank and defense being a little bit on the back foot as we speak. Now, when you talk about the entire list, let's quickly pull up the list of gainers when it comes to Nifty 50 as well, because that's why you're seeing quite the interesting move play out. And you do have a bunch of companies that are buzzing away. So something like MRPL, that's a buzz from the broader space, Himadri Specialty Chemicals, some of those counters buzzing away. But when you talk about Nifty 50 as well, some of your IT counters, HCL Tech, Wipro, in great shape right now. Maruti Suzuki also doing quite well for itself. Infosys, TCS, also some of the other counters that make it to the list of Nifty 50 top gainers as well. But when you talk about the top losers, is actually SBI Life, Eternal, Shriram Finance, some of those counters that are a little bit on the back foot as we speak. Now, like I mentioned, it's actually something like a Himadri Specialty Chemical, and we talk about some of those stocks in greater detail later as well. But some of those order wins, ABB India on the back of optimistic outlook coming in when it comes to the global entity. That is one counter that is buzzing away in trade with that 6.5% thereabout uptick also coming through. So bunch of those counters that are in focus right now, and we'll talk to you about some of them a little later as well. But as we do that, let's also put the spotlight right back where it is in terms of a sectoral basis as well. It's actually Nifty IT that is very much in the focus right now. And when you talk about some of the counters as well from within this entire space as well, as you can very clearly see, it's actually HCL Tech, Wipro, as well as Infosys, TCS, all of those counters that are doing quite well for themselves. Same can be said about something like a Tech Mahindra as well. And you do have the numbers that are going to be coming out when it comes to this particular counter. In fact, Jasmeet is standing by with an update in terms of what to be penciling in when it comes to the Q1 numbers.
Well, thank you for that. In terms of the key numbers, we're expecting a better than flattish quarter for this particular counter. If you look at the key revenue, we're expecting the revenue to see an uptick of nearly 2% while the EBIT could rise nearly 4%. And the margin becomes a key watch out given the company is targeting a 15% margin band by FY27 by the end of this year, and currently they have reached the 13% mark. So margin will be a key focus in this quarter, and the fourth one will be net profit, which is expected to rise by 18% odd. In terms of the key things to watch out for, first will be the CC growth. While we are penciling in a CC growth anywhere between 1.3 to 1% odd in this particular quarter, that is on the back of that recent deal ramp up that the company has done. Now, in terms of the overall revenue, Seat is confident that the company will reach the 15% mark by the end of FY27. And the third aspect will be the telecom business. Now, we have seen that Accenture reported its number recently, and the communication segment for that particular company was doing really well. And given Tech Mahindra gets most of its revenue from communication segment, so we're expecting telco business to do well for the company. But apart from that, the commentary on the non-telco business becomes a key. When we look at the other key aspect, we're estimating a deal win anywhere between $800 to $1 billion. While in terms of the overall commentary, the management also had stated in FY26 that they were stating FY21 was a turnaround year for the company, while FY26 was a stabilization year, and FY27 is a year of acceleration. So any growth from year on will be something that will be focused very crucially for Tech Mahindra.
Absolutely, and same can be said about the rest of the IT pack as well. Thank you so much, Jasmeet, for joining us with that update nonetheless, because 1% uptick thereabout coming in when you talk about Tech Mahindra, and it's actually some bit of a decent set that you can be expecting when it comes to margins that might extend recovery, profit as well, about somewhere close to 19% uptick that we're penciling in. So decent set of numbers, seems to have perked up the stock as well, and moving very much in tandem with the rest of the entire IT pack as well. But moving in tandem, mentioning that as well, let's also talk about the entire oil space as well, oil prices that are buzzing away in terms of that uptick that you're seeing coming in on the back of fresh US strikes that are really intensifying some of those geopolitical tensions. Right now, of course, holding on a little bit closer to that $85 a barrel level, and that's the key headline that you have in terms of that level really being thereabout, being maintained. Now, when you talk about some of the factors as well, when you talk about oil prices, it's actually very important to take a look at everything that has been happening in terms of the shipping disruptions as well. And that's something that seems to be tightening global oil supplies. You do have the Hormuz traffic that is really remaining well below normal, and that's also quite the concern when it comes to oil prices. Speaking of gold as well, in terms of the factors that you should be watching out for, of course, it's Middle East tensions that makes it to the top of that list as well. But other than that, it's actually elevated oil prices that are clouding some of that rate outlook as well, and Fed policy expectations that do remain a key driver as well. But let's also get you a quick check going in terms of all of those insights as well at the very start of the show. You do have Anuj Gupta, commodity expert, joining us right now. Thank you so much, Mr. Gupta, for taking time out and joining us in a very good afternoon. Not a very good afternoon when it comes to oil prices, but not a bad one either, with that $85 a barrel level for Brent very much being in sight as well.
Yes, good afternoon. Lastly, we discussed that due to the geopolitical tension, crude price may, go higher, and we have seen that now WTI is trading almost $80 and Brent is trading around $85. So this was due to the geopolitical tension, blockage of shipping, and even the taxes of 20% on the tariff. So that would be positive for the crude oil prices, and due to this, we saw that crude prices increase sharply. The main concern is that the blockage of the Strait of Hormuz will impact on the crude oil prices.
Absolutely, that's one of the key factors to really watch out for, especially with Hormuz traffic really being very much affected, right? But going forward as well, what kind of price levels are you then keeping in mind? And do you also expect these kind of elevated, higher for longer prices? And this is a discussion that we've been talking about for a while. It is back to the spotlight yet again. Higher for longer oil prices, is that on your radar as well?
Definitely, we are expecting that crude price may test. If you talk about the WTI, it may test $85, $88, and Brent may test $90, because there is a supply disruption again, and we have also seen that the geopolitical tension is increasing day by day, so that will impact on crude prices. However, OPEC Plus members and UAE is both are ready to increase the production, but I think it will not impact so much on the prices. But the current situation, geopolitical concerns impacted on the prices, and price may move from here.
No, absolutely. And in terms of the risk premium as well, just wanted to try and understand if you think that, any other levels for prices, what's your upper limit when it comes to prices, right? Because in the near term, you're mentioning $90 a barrel as well, but going forward as well, in the near term, how high do you think prices could really go?
See, I'm not expecting above $90 because
Okay.
US is also very keen about their inflation because recently we saw two important data, CPI and PPI of the US, which came on a very softer note. I think, and Mr. Donald Trump don't want to increase the inflation in the US economy. So probably, I think $90 would be the higher level where we can see some profit booking in crude oil prices because OPEC Plus members and UAE they are also ready to increase the production. So that will also impact on $90 level. So on a maximum side, I'm not expecting more than $90 per barrel levels.
All right, so that puts things into perspective in terms of the kind of price levels that you should be watching out for as well when it comes to oil prices. Same for gold as well. What are you then expecting? It seems to be hovering close to that key $4,000 support level for quite some time. Do you see that being sustained as well?
See, currently I'm not expecting so much rise in gold and silver prices because inflation is there and Fed meter is indicating that the interest rate increase expectation is more than 70%. So that will be impact negative on the gold and silver prices. However, central banks are buying gold, but retail demand is not there, and we saw a huge outflow to from the gold and silver ETF. So that will impact negatively. However, the latest upcoming Fed meeting will be in the focus for the gold and silver prices and expecting a little bit more correction from here also.
No, absolutely. Just also wanted to, zoom out a little bit, take a look at the entire de-dollarization trend. Do you think that that has really weaned off right now? Because, of course, there is a stronger dollar, and that's been the case off and on for quite some time right now. So do you think that de-dollarization is a factor that the gold market is looking away from?
Definitely, de-dollarization factor is no more, I think, and the supply and demand of gold is all also abolished. So I think, and even dollar index is trading almost 4-month high level, and bond yield also increasing. So that both are putting pressure on the gold prices, and the money is shifting from gold to another asset class.
Absolutely. And, just to also put things into perspective for people who've been waiting by for fresh buys, right? What do you think that they should be doing right now? Should they sit on the sidelines for just some bit, wait for a little bit more of a correction to happen, and then sort of join in? Or do you think that the time is ripe for fresh buys?
I think investor who want to start investing in gold, they can wait for some time till the upcoming Fed meeting because longer term perspective is gold for I think it is would be a positive. But I think on that level around $39 or $38 odd level will be a very good level to enter in the gold market. So I think wait for some time, and if it's test $3,900 per ounce or $3,800 per ounce, that would be a range where one can start investing in the gold.
No, absolutely. And you've been actually pretty spot on when it comes to silver as well. So just quickly wanted to try and understand what you think about silver prices as well. Do you also still expect them to be moving in tandem with gold prices? And in terms of fresh buys as well when it comes to silver, do you think that investors should be taking that bet right now on silver as well?
I think yes, silver is trading as per the tandem with the gold, and due to the higher dollar prices, silver is also diluting their safe haven asset class. So I think we can expect some more correction in silver also, and it may test I think $55 to $52 per ounce. I think these are the level where one can start investing. On the current time, I think one should wait because silver breaking their support level, and I think there would be some more correction over here.
No, absolutely. And right before we let you go, I just quickly wanted to get a word in when it comes to copper as well, because you do have, copper output that's showing some signs of cracking as well elsewhere in the world as well. And you do have annual production for some of the key companies really falling. You do have a shutdown over a security risk as well that you're looking at on the horizon. So against all of these supply concerns that seem to be mounting, do you think that copper right now is also making for an attractive bet right now?
See, definitely it's looking attractive, but currently there is a no demand in the physical market due to this war situation. So, and even all the the supply disruption are I think discounted in the prices. So I'm not expecting so much a higher level from here because the demand of the copper as an investment or as a the industrial metal is going down. So I'm not expecting so much higher copper prices from here. Expecting little bit correction in the copper prices, and I'm expecting profit booking may be seen in the copper prices also.
No, absolutely. And thank you so much for putting all of that into perspective, Mr. Gupta. So there you go. That's the entire outlook coming in as far as oil, gold, silver and copper are concerned. But let's also move on and talk about Raymond Realty that is in the spotlight as the stock is also down more than 1.3%, 1.4% thereabout right now, as of now, and you do have the company that has strengthened its Mumbai expansion strategy by signing its 8th joint development agreement as well, marking its entry into South Mumbai. In fact, you do have Mahima who caught up with Raymond Realty's Harmohan Sahni as well about the outlook coming in for FY28. Let's go across and listen in.
We're now joined by Harmohan Sahni, who's the CEO and MD of Raymond Realty, joining us now. Mr. Sahni, thank you so much for taking out the time. My first question to you is with regards to this new JDV being announced. It has a GDV of around 8,500 crores. Give us more perspective as to how this is going to progress. What are the timelines looking like, and in terms of what audience is this catering to?
Thank you for having me on the show. It's always a pleasure. And the project that we are talking about, that's our 8th joint development project that we have signed. The location is in Parel. It's an 11-acre piece of land, very, very prime, with excellent sea views and connectivity to the infrastructure in the city. Atal Setu is barely a 10-minute drive away. You can get to BKC, Lower Parel, all these employment hubs which are there. It's about 200-300 meters from Eastern Express Highway. So connectivity, social infrastructure, the views, the extent of the land is fabulous. So it lends itself to a very nice and large development that we can do. It will be about 17 lakh square feet of carpet area that we will be developing over the next few years on this piece of land. In terms of product that we are going to put over here, our most premium offering will be put here. So it will be a combination of our two brands, Address by GS and Invictus by GS. So you can expect a stellar development from us, something which the market has not seen before. The kind of target audience that this project has are senior professionals, businessmen, people who are self-employed. That's really going to be the TG. The ticket size of these apartments will range between 8 to 15 crores is what our current thought process is.
Okay.
And we are expecting this project to be launched in the next 18 months or so. Because we have to do the retail planning, and the approval process will take about 12 to 18 months.
Mrs. Sahni, this Parel project is one of your biggest JDAs outside of Thane, right? So I just want to understand that how does this make it strategically, first of all, very important, and what is the meaningful cash flow that you're expecting from this project? I'm talking about this from a long-term perspective. Once it comes into working, what is the kind of cash flows that you're expecting from this?
See, the project is very important for us, and it's significant because it marks our entry into South Bombay, Midtown area.
Right.
And we didn't have a project in that area so far. And this is the right kind of entry for a brand like Raymond, a large exposure like this. As far as cash flows are concerned, the top line of the project is about 8,500 crores. It will get realized over the next 7 to 8 years completely. We are expecting that we will be executing this project in 2 phases. First phase should get done in about 5 years' time from the start of the project. And the entire project should take about 7 to 8 years to complete from the start of the project. So that entire cash flow will get realized over that period of time. As far as the margin profile is concerned, which is what the equity which remains with us, once the project is executed and we've spent all the relevant costs for the project, is upward of 20% for us. So that's how the cash flow should play out over the next few years.
Got it. The other part, and correct me if I'm wrong here, Mr. Sahni, that your portfolio GDV has now crossed over that 52,000 crore mark, right? So in the next 3 to 5 years, what is the target portfolio size that you have in mind? And in terms of the growth, how will that be broken down between JDAs and with regards to the Thane Land Bank?
So That's a very interesting question that you've asked. It's not very easy to answer. And I'll make an attempt to answer that. The way we see it is that growth is not just in the portfolio that we are looking at. You know, portfolio is a result of how we see the market. And for us, growth really means what's the growth in pre-sale number, what's the growth in the turnover that we will be doing, and what's the growth on the bottom line in terms of EBITDA margins and PBT and PAT. And once we look at the way the market is growing, which is based on how the economy in the country is growing, we are currently targeting an upward of 20% growth on pre-sales and our turnover, including the bottom line. And that's the guidance we have given to the market, that you can expect that from us at least for the next 2 years. And our reading of the market is that the market is currently going to hold where it is. It looks pretty strong even now. But of course, it's a cyclical business, so there will be a down cycle which eventually will come. Nobody knows the timing of that. But we've been in an upcycle for almost 5.5, 6 years now. Typically, these cycles last about 8 years. So, but despite that, we are looking at maintaining our growth momentum, because the kind of exposure that we have taken is all in deep markets, and we priced our product correctly, and affordability will remain in all our projects. That's our strategy and view. So the portfolio will grow in line with where this growth is going to come from. So we are not targeting that this 50,000 will become 100,000 or 150,000. So the way to see is, what would it take to give us the kind of growth that we are expecting in our P&L and balance sheet, and whatever portfolio is needed for that, we.
All right, then that's the management of Raymond Realty also talking about their growth roadmap. But let's also move on and talk about Wipro as well. That's going to be in the spotlight on the back of its numbers. Let's also get in Jasmeet yet again to also help us pencil in what to be expecting when it comes to Q1 numbers.
Well, thank you for that. For Wipro, we're expecting another weak quarter for the company. If you look at the CC growth, we're estimating anywhere between -1.5 to -1% while the company had guided for -2 to 0%. So the CC growth is expected within that. Now, in terms of the key numbers, the revenue could see an uptick by roughly 1.5%, while the EBIT could decline. Further, the margins could see the pressure and see a downtick of nearly 77 BPS. In terms of net profit, even that is expected to decline in this particular quarter, and that could see a downtick of about 2%. While the key crucial thing to watch out in this quarter is the guidance. While there are a few brokerages like Nuvama and Jefferies which are penciling in the guidance range between +1 to -1 to +1% in CC growth for this particular quarter, while something like a Citi is estimating -0.5 to a +1.5 in this particular quarter, and that is on the back of that new acquisition that the company has completed in the Q1. Now, if you look at the other key highlights, we'll be looking into the overall deal wins for the company, of how that's ramping up, given it was a slowdown we had seen in the Q4 in terms of the BFSI, so how that is going for the company, and also the geographical split. Apart from that, the commentary with regards to the AI revenue, AI deflation, and any further update on the overall environment would be a key watch out. But apart from that, the overall guidance for the Q2 remains a key watch out for this particular counter.
Absolutely, and thank you so much, Jasmeet, for joining us with all of those details. Some other stocks that are buzzing away in trade, something like a Himadri Specialty Chemical up about 7%, Mrs. Bector's Food as well, 11.5% uptick coming in for that particular counter as well. In fact, Parth is joining in with a summation of that entire list that he has in terms of all of the counters that are buzzing away.
Yeah, so 4 stocks that are buzzing in trade right now. The first one is Himadri Specialty Chemicals. The stock is on a 6-day gaining streak, gaining almost 7% today. In fact, in the last 2 months, the stock has gained over 30%. And the reason behind today's move is that the company has reported very strong Q1 numbers, with revenue growing at 28% and PAT also growing at 27% year on year. Apart from that, the company has also announced a capex of 240 crores. The next one is Powerica, which is also on a 2-day gaining streak. And the reason why the stock has moved today today is because they have secured a bid for a 100 megawatt wind power project with a tariff of 3.85 rupees per unit. The next one is Mrs. Bector's Food, which is also on a two-day gaining streak, gaining over 12% today. The stock has hit the highest level in the last 2 months, witnessing the biggest single-day gain since February 2026. And the reason behind today's move is that Abacus Investment has bought 29.74 lakh shares in the company, which almost implies a 1% stake as well. The last one is Jupiter Lifeline Hospital, which is on a 4-day gaining streak, up over 3.5% today, and the stock has hit the highest level since November 2025, gaining almost 22% in the last 24 sessions. The reason behind the move is that promoters have released a pledge of 1 crore shares in the company. So these are the 4 stocks that you should have on your watch list today.
And thank you so much, Pat, for joining us with all of those details. Let's also zoom out from the entire picture in terms of some of those counters that are buzzing away and put the spotlight on the commentary coming in from the International Energy Agency as well, that has warned that the global economy could face a fresh shock if the Strait of Hormuz crisis is not resolved within weeks. So that's really the timeline that they're putting there. Attacks on shipping, thinner vessel traffic and disruptions to oil, gas and fertilizer flows are keeping markets on edge. That's also something that they're adding on, and they're talking about how one of the world's most critical energy routes are under pressure. Concerns over supply chains and global growth are once again moving to the forefront. The key headline that you're picking up here is that they're just talking about how in just a matter of weeks, the world is going to be in peril and there's going to be a supply crisis that they're really flagging as well in terms of the energy supply as well as shipping as well. But let's also move on and talk about JSWMG Motor, that is also in the spotlight. And that has also unveiled ADAPT, India's first multi-new energy vehicle platform. The new architecture has been designed to support multiple powertrain technologies, and that's on a single platform. So giving the company really greater flexibility. When it comes to some of their product developments, you do have ADAPT that can accommodate plug-in hybrids or range-extended electric vehicles, hybrid EVs, and pure electric vehicles as well. And the launch is really aimed at expanding the company's new energy vehicle portfolio. So that's something that you're looking at in terms of a wider range of cleaner mobility options when it comes to this particular company as well. But that's all the time that we have on the show for now. Thank you so much for tuning in.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
सरसों से सरसों.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here and the that itself speaks for the commitment towards highlighting the advantage which India is having. What I'm looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
The entrepreneurship in India is currently defined by innovation, technology, more customer.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Soumit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. This time we'll be speaking with a couple of managements. Firstly is the Tembo Global Management. Now the key talking points here with the management would be what are they doing with their defense manufacturing ramp up, what's the timing, what is the revenue visibility coming here. Also when it comes to the solar segment, when are they looking to commission the solar power, is it on schedule, what is the amount of capex that they're looking to do, and also when it comes to their international JV traction, how has that been. A lot of talking points when it comes to Tembo Global. Also, we'll be speaking with the management of Advait Jewels. Now, this stock has been buzzing off late, around 17% up in the last 5 trading sessions. What are their expansion plans into the B2C retail, and how are they looking to overall their expansion plans? Because they plan to add nearly 30 showrooms over the next 3 years across India. And then we'll be also addressing a couple of stocks like Aris Infra. Recently, the company has announced an order win of close to 79 odd crore rupees. Today, the move that we saw in the counter was its biggest single-day gains since Feb 2026, and the stock has also snapped its 4-day losing streak. And lastly, when it comes to Cyan DLM, that stock has jumped to its highest level since Jan 2025. Gains of over 25% is something that we have seen in July so far. And is there some relation with the PLI schemes that the government of India has announced? Could Cyan DLM be also a beneficiary of that? Is something that we'll try to decode with our fundamental guest on the show today. Now, if you look at the market, Nifty has largely been consolidating in the range of around 24,200 to 24,100. 24,190 acted as a resistance for the benchmark, and 24,000 is acting as a support. Today at the day's lowest point is something that we are looking at when it comes to the Nifty 50. When you look at the sectoral indices here, on the losing side, we have Nifty Real Estate down around 0.1%, followed by Nifty Financial and Nifty Private Bank Index. Overall, the banking index is weak in trade. Some profit booking coming in here. On the gaining side is the Consumer Durable and Nifty IT, which have been on the gaining side up around close to around 1%. But when it comes to the small cap index, Varsha, which are the key stocks here buzzing?
You have Novartis India, which is up in trade today. It's been few days, the stock is up almost. Novartis India is up almost 4% in trade. You have Ganesh Benzoplast as well, which is buzzing in trade, of course, on the back of strong volumes. Let's pull up the stock when it comes to Huhtamaki India. If you see, Ganesh Benzoplast is up almost 3%. Huhtamaki India is also buzzing, is up almost 5%. You have TCI Express. Again, good volumes there. Bansali Engineering and Sequel Logistics is also. In India Pesticides is actually up on the back of company receiving EU approval for one of their fungicide, is up almost 3 to 4% in trade. On the losers side though, you have United Poly, Bombay Seed, Dhampur Bioorganics, which are sulking when it comes to small cap 250. Unipoly is down almost 3%. Bombay Seed almost flat, I would say. Dhampur Bio is almost down 3.4%. But one stock which is in focus, a recently listed one, is Advait Jewels. Company is mainly into bridal jewelry, but also venturing into
B2C, number one, and also onto the everyday jewelry as well. But to speak about more on that, we are here joined by Mr. Nitin Gilara, who is Chairman and Managing Director at Advait Jewels. Sir, welcome at NDTV Profit. Pleasure to have you. Let me start with the B2C expansion, that you are doing. You want to expand with 30 retail showrooms across India. What's the update there, and what are the timelines that we can see a meaningful revenue contribution from your B2C business?
So hi, thanks for inviting me on the show. In fact, we are planning 30 new outlets in next 3 years. We are already working on it and zeroing down on a few after this IPO, and we were working on it before that also. So the plan is exactly the same, 30 outlets in 3 years.
And also, you also wanted to enter into everyday jewelry, since you are more into, customized jewelry, I would say, and into bridal jewelry. But during IPO, you said that you wanted to enter into everyday jewelry. What's the plan there? Have you started anything?
Yeah, obviously. In fact, it was all going on before IPO also we were working on. The business is more design centric, and we are working on designs with the business is seasonal, as it's totally dependent on bridals. Now we are shifting it to Gen Z light jewelry. So at the time when bridals are not there, we are working on small pieces and we are getting good responses. Yes, we are getting orders from our B2B clients on those also. And about the B2C, yes, we are getting responses as we are sending through our social medias and all. We are just getting great responses. I feel this coming up new collection of small jewelry will be launched by August, as we are just preparing the whole collection. So we hope and we are motivated to come up to get the great response on that too.
I wanted to understand if you have some target when it comes to revenue contribution from B2C, maybe not in FY27, but some kind of percentage that you might have, aspiration to when it comes to B2C, the contribution that you're expecting from B2C and from everyday jewelry as well.
So when we talk about B2C, yes, we have a target to increase because B2B and B2C ratio before this was 20 and 80. We were doing 80% of B2B. We are not compromising on our B2B business also, but by increasing B2C, I think we have a target to come at least about 40% in the next year. As we are coming up with new showrooms, already 2-3 new locations are being zeroed down. So the work is already in process. And once the new locations come up, then we are interacting with the customers and clients directly. So I hope we will be doing great because even the new collection is going to be launched. There are 2-3 collections which will be launched in August. So we can understand the design-centric world, art world, the things will obviously move when the new thing will come.
Okay, I wanted to understand this with you. Given the volatility that we have seen in gold prices, any impact on your inventory? Could we see any inventory losses, say for the last quarter of FY26 or in the first quarter of FY27?
So yes, it's true. The gold is volatile. We need to basically it's all depend on how you hedge your product. And we are using gold as a bonding product. We have other raw materials also. So we usually concentrate on keeping it hedged, so it don't affect our margins. Yes, with the strategy, we are trying to make pieces which have lighter gold and more of stones and polkis. So it will make it more stable.
Okay. Revenue growth has been at around 39%, I believe, the CAGR for the last few years. Is that sustainable even for the next 3 to 4 years?
So now we have a bigger ground. Now we are debt free. Now we have enough more working capital. I feel that these are enough to give us energy to increase our business to a better level. I think it will be better than before.
One look at the margins. What is the sustainable range, if you could give some?
So basically, we are not compromising on our margins as we are getting responses from our clients. We are doing a lot of hard work on designing and artwork. So margins, I think it will not be compromised. On other side, when we are adding B2C more, B2C obviously will give us a better margin because now we are going to an end user. So I think margins, as per, yes, one more thing is there that starting new showrooms or new outlets may consider some more cost. But obviously, when it will be for B2C, we will be getting better margins also. So most probably, we'll be maintaining the margins for future.
Okay, so 30% of EBITDA margin is what you'll be maintaining for 26 and 27 as well. Because why I'm asking this is you said you want to have a 40% contribution from B2C, which is a higher margin one. So considering
Yes.
FY27 of 40% contribution from B2C, where does your margin will go to?
So when we consider B2C 40%, yes, margins will go up, but there will be more cost addition for B2C. In B2B, we don't have to do few things which will be added in B2C, like we will be going for marketing more, we'll be spending more on our outlets, and there will be more manpower to be added. So anything which comes as an expense, yeah, the margins will obviously cover it. And we hope the margins will go up from the current margins.
Right. And sir, a quick one. In FY25, you did around 80% of revenue growth. You are expecting to do better than this. Should we consider this as a benchmark that for the maybe for the next 2 to 3 years, what's the revenue growth that you're expecting?
Yeah, basically, I tell you, our target this time again, we are seeing the bridal jewelry industry going well. By calculating it in a way that the business is growing and we are getting more demands, I think the growth will be constant. I think the growth will be the way it was before. We have few more plans to add a few more products in our jewelry. As I told in my roadshows and all, that we are adding blended jewelry now. That will help us in this geometrical locations addition in our portfolio. Like if we want to sell something in South, we are blending our jewelry with the South Indian jewelry so that we can produce something which will be appreciated by that location, and they will be also added as our clients. So in the same way, wherever we are not able to reach, we are thinking of blending that particular location's jewelry, which people like there, and creating a masterpiece, which is like amalgamation of jewelry with Jadao jewelry. So we are working on it rigorously, and I think most probably we'll be coming up with a new collection of that by August. I think so. It will be a new step on getting more business.
Thank you so much, sir, for joining in and having a conversation with us. Thank you so much.
Thank you.
Well, this was Advait Jewels. Quite optimistic when it comes to the growth levers. But with that, let's also invite Sunny Agrawal, who's head of fundamental equity research at SBI Cap Securities. Sunny, welcome to our show. And this recently listed company, Advait Jewels, what's your thought on this? What should investors do?
Yeah, definitely. I think a very significantly higher margin, predominantly because of a customized or bridal jewelry segment, and that is the reason we have. And at the same time, what I understand is that the fund which has been mobilized from IPO will be utilized to repay the debt of closer to 60-65 crore, and the similar amount will go for working capital requirement. So wherein the working capital cycle is slightly stretched for all such B2B players. So that should help them deleverage their balance sheet and should help them increase the PAT. Financial leverage is something which is likely to play out going forward. But having said that, post the recent run-up, now valuation seems to be fairly valued. So at the time of IPO, even we had a subscribe recommendation, and now post recent run-up, we feel that the valuations are fair. The other stock which we like from a B2B segment, apart from Advait, is Sky Gold, which is where the scale of operation is slightly larger. And going forward, the management has guided for a debt-free balance sheet. Operating cash flow is likely to improve going forward. So if somebody is looking to another stock among the B2B player, Sky Gold is one of our recommended stock in our list.
Got that view. Well, time for a quick short break. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है. पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ.
The mustard specialist since 1933. बरसों से सरसों.
कुछ तो बात है इस दिल में.
Ready for the next big IPO? Apply for it on Grow. Open your free DMAT account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in.
Welcome back. You're watching Small Cap Buzzers. Let's welcome in the next management on the show, Sanjay J. Patel, Managing Director of Tembo Global Industries. Sir, various businesses that you have, starting off with the defense business, if you could just give us the growth outlook. What is the kind of order inflow that you're seeing? What is the kind of growth that we can expect from the defense business in FY27? And where do you see your margins to be?
Good afternoon all, and thank you very much for inviting me over here. Sir, our defense vertical has just started with putting up the factory and getting the machineries online. Current year, we expect this production to start, and by last quarter, we will have some production and some commercial sales getting in current year. Our actual sales should start on a larger way by next year.
Target year, what should we expect?
Current year, we can expect sales of around 150 crores.
And next year?
Next year should be around 350 crores.
And what would be the margins on these orders, sir?
You can expect a PAT of around 35%.
Okay, great.
And also, sir, will defense require additional capex beyond the current plans as volumes ramp up?
No, so we have already planned for a capex of 5 years and 1,000 crores of capex. First year capex is around 550 crores, and in future it will go in. Whatever capex is there, we have planned with the internal accruals and the profit which will be earning from the first investment.
Right, and also your solar commissioning, which is expected in Q2 or Q3 of FY27. When should investors start to see that meaningful revenue contribution from this segment?
You should start seeing by third quarter. Second quarter, some revenue will already start. We have already implemented 2 plants that are 4 megawatts each. And by end of September, we expect around another 12 to 14 plants to start generating revenue. And by December this year, all plants will be in motion and revenues will start flowing in. On an average, we can expect a revenue of around 8 to 9 crores per month. That is by January 2027.
And what's the margin expected in this segment?
Solar, madam, it is 100% net revenue because it is a capex. And overall, if you see, there is a net profit around 40% per annum.
Sir, for 2030, your revenue target is 20,000 crore rupees. FY26, your revenues were 1,000 crore. 20x growth in 4 years.
Yes.
What is it that will drive the growth? And how are you so confident that you will be able to do 20 times growth in the top line front in just 4 years?
So our manufacturing, EPC and defense vertical, which we are at present concentrating on, will be the top riders for this target which we are planning. We already have many inquiries where we have to convert it into orders and get it on the table. Mostly it is in manufacturing and EPC right now. Defense vertical also has many buyers after putting in the capex. So what we foresee as on date is by 2030, 20,000 crores of top line will be 100% achievable.
So you're saying about a lot of orders that are in pipeline and a lot of orders that you have. So what is your current order book for how many? Yeah, there's a follow-up to that. Yeah, please.
Order book on current is 1,500 crores, but we are already talking for around 5 to 6,000 crores of projects which will be coming in motion by current year end. So seeing the way of the growth which we are looking into, we are net to net 100% sure that we'll achieve the target of 20,000 crores.
And let's talk about FY27, sir. You're expecting almost 1,600 crores of revenue in FY27 with 10 to 12% of PAT margin. Are you on track? You want to raise or reduce that guidance? What's the update there?
We are on 100% track and there is no reducing or anything like that.
And sir, so 1,600 crore fixed for FY27. What about FY28? What's the growth plan that you have, for the next 2 years, maybe by FY28?
28, we are targeting around 2,700 to 3,000 crores.
2,700 to 3,000 crores, got that view. But what about margins? Because since defense will also come into picture, the 10 to 12% of PAT margin will go to?
10 to 12% is net only for manufacturing and EPC. Defense is a vertical which will give us a better net profit also.
So any PAT margin that you're expecting for FY28? FY27, I got the answer. What about FY28?
28, as I said, ma'am, you can look at around 300 crores.
Okay, got that view. And sir, one last question. There's a concern about high debtors and higher inventory level that you have. What's the optimum inventory days that you are expecting and the receivable days that you're expecting in FY27?
It should be around 90 to 120 days, madam. EPC always has a longer scale of repayments and execution of projects. So manufacturing, we maintain around 80 to 90 days, but EPC always has a little stretch on it. And that's why it will be there. By 90 to 120 days, that stretch will be there.
Thank you, sir. Thank you for joining us and giving us the way forward for Tembo Global. Let's also get in a view from our fundamental guest, Sunny Agarwal. Sunny, the management is targeting 4x revenue growth in the next 4 years with stable margins going forward. At current valuations, doesn't the stock look like quite cheap?
Yeah, definitely. I think 1,000 crore market cap number and the kind of guidance which management has given seems to be, stock is trading reasonably cheap, but only word of caution over here is the working capital cycle. So the operating cash flow continue to remain negative since last 3 years, and that is predominantly on the back of deterioration in the working capital days, which has been increasing consistently since last 2-3 years. So again, a high growth company with an execution risk, that is something which investors need to keep in mind. So maybe can be part of your portfolio, but you need to keep on tracking the development every quarter, especially pertaining to the cash flow generation, which is one of a key aspect for business to sustain in a longer run.
Right, got that view. Well, thank you so much, Sunny, for joining in and having a discussion with us. Pleasure to have you. Thank you so much. Well, with that, let's pull up the stock Cyient DLM. The stock is actually buzzing, has seen highest levels since Jan 2025, gains of around 25% in July so far. But what's the reason for today's spike? We have Shivam to give us more details on that.
Yes, the stock has been seeing a strong momentum in today's session, and there are few recent developments that has been happening in the EMS sector, such as the Union Cabinet has approved around 1.27 lakh crores of investment outlay for India's semiconductor mission, and they has also approved a mobile manufacturing scheme with an outlay of around 62,500 crores. Now, as Cyient DLM is into active design and manufacturing services, it is expected to benefit from this exposure too. Now, moving on to the key focus for FY26 and 27, the company has mentioned that they will strengthen the go-to-market structure across the key geographies and domestic markets too. Also, they will improve on their build-to specifications segment offerings. In terms of expansion, the company is looking forward to expand in automotive and Indian defense industries, and also will invest in the AI infrastructure market. Apart from this, there are also few key positive factors for the company, such as the order intake of the company has been at record levels of 1.5 times for FY26 revenues, and in terms of book-to-bill ratio, the company has maintained a consistent book-to-bill ratio of greater than 1 in all 4 quarters. In terms of EBITDA and PAT, also the company has been at highest levels in last 4 quarters. Moving on to the Q4 result, the company has witnessed a strong growth in order book, but the revenue growth has remained subdued, and the PAT has also witnessed a degrowth, which was led by the higher operational expenses and lower top line growth. Also, in terms of stocks performance, the company has performed positively in 1 week, 1 month, and year till date time frame.
Thank you so much, Shivam, for all the details. Well, moving on, Aris Infra Solution is actually buzzing. It has snapped 4-day losing streak, but we have Jasmeet to tell us more about that.
Varsha, thank you for that. If you look at this particular counter, it operates as into the B2B business, where it provides construction material to its players. It's basically an end-to-end platform service where once the client places the order, it takes care of the logistics, supply, delivery, and the entire supply chain required to deliver the construction material. Now, in terms of the stock performance, the stock has been tanking over last 5 days, 6 months, 1 year, and even over last 6 months as well. And stock is down about 30% over last 1 year. If you look at today's gain, the stock is buzzing on the back of the recent order win. The company has received an order worth to be 79 odd crore, and this order is from a JV with NCC. And now order is to provide work and to do work with regards to the overall logistics, loading, transportation, and disposal of the evacuation material. Now, in terms of other key highlights for this particular counter, the overall FY26 was a strong year for the company, where the company saw a growth of nearly 39 odd %, and even the overall EBITDA doubled in the FY26. In terms of the profit, that became roughly at 56 odd crore versus earlier of 6 odd crore. So we're seeing a jump coming in for this particular counter. In terms of the guidance, it becomes a key crucial for FY27. Management expects a growth rate between 35 to 40 odd % for FY27, and they remain strong with regards to these rates.
Thank you so much, Jasmeet, for all the details. But viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने.
मनी 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 एवरी मंथ. सोच बदलो और बैंक भी.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026, 26 July, only on NDTV.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
At NDTV Profit, every day is a new day, buzzing with news, information, analysis. A lot of it. That is why we separate the news that is urgent and important for you from what is not. News that influences outcomes across markets, policy, and the corridors of power. At 6 p.m., we turn our attention to the critical conversations that matter. I'm Vikram Oza, bringing you
In India, who have the right stuff, is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and get to those stock-related queries. So if you haven't already done that, do start sending in your queries on the numbers that are flashing on the top of your screen. You can also call us on the landline number, speak to us as well as a guest for those queries as well. But as we do, the markets continue to be very important today as well. Now in the start, at around 11 o'clock, you saw that 100-point recovery that's visible in the middle of your screen right now. And then yet again, we've seen some sell-off post that gain. So that continues to be a story for the markets. We are getting to that 24,150, 24,200 mark. And the sell-off is visible at those levels. So selling at the highs continues to be the story. The heat map also shows you that for the Nifty 50 as well, because you saw some buying essentially in the top companies that like life insurance, which were at the bottom of the barrel today. So SBI Life was one which still continues to be down today. You saw some kind of recovery in HDFC Life. Shriram Finance is actually back down to 1% in terms of downtick, while HCL Tech, Indigo, Wipro as well as Maruti and Bajaj Finance, those are some of the top gainers. But it's a very even Steven kind of screen right now. Almost 24 to 25 stocks which are advancing. The rest of them are declining right now. So the last hour again becomes very crucial for the markets. In terms of what we've seen in the sectoral heat map as well. Now here you saw the Nifty IT actually doing very well at the start of the trading session. Consumer durable has now taken that baton and up 1.6%. Nifty auto also doing moderately well at 0.48%, but the realty sector is seeing sell-off yet again from the highs. So the mid cap and the small cap index is the other key factor that you're looking out for. The broader markets end of things as we speak, because here again there's not too much momentum that's been formed on either of those days for both these indexes, and hence under pressure. Advanced decline ratio also, if we can pull that up before we start taking your stock related queries. Now very crisscross kind of a pattern, but I think over the last hour you've seen that change as well. So the declinings are ahead of the advances, and the BSE 500 also in terms of the momentum will show you some of those impacts. So ICICI Lombard clearly a casualty for today, down 10% right now. It was down almost 14 to 15%, has seen some buying at the lower levels. But Sterling and Wilson Solar actually came out with earnings today. While it was a decent set, we've seen selling in that 7 to 8% kind of a downtick on the counter as well. HDFC AMC and Nuvoco Vistas finally taking some breathing space as well. MRPL has stayed consistent as the top gainer for the BSE 500. But let me welcome in our guest now, Avinash Gorakshankar. He is the founder and head research at Avinash Mentor Services, and Jatin Gedia, VP Technical Research at Teji Mandi as well. Gentlemen, both of you, thank you so much for joining in for solving the stock-related queries. And let me go across to the first one. This one's on Acme Solar. Raja, who is from Chennai, is holding these shares at 289, asking if he should still continue to hold and what's the key target. Avinash, very good afternoon. Thank you for joining in. What would you recommend, Raja, to do? A big QIP raise that the company has completed, but that massive net debt, is that a worry?
Yeah, Puneet, I think that would be a short-term, near-term worry. But I think the kind of money they have raised from the QIP and plus the kind of traction we have seen in the top line as well as the profitability gives us a decent amount of comfort that FY27 should be significantly better. Maybe in the short term, the stock may remain in a short range. But I think if 6 to 12 months, if one were to take a call, then I think this company definitely should grow. The solar business is growing well, and I think in terms of capacity also they are putting up an incremental capacity. So all that should get percolated in FY27 numbers. So I think if the investor can wait for the next 6 to 12 months, I think it's a hold. We should see definitely stronger growth coming in the current year.
Got that view, Avinash. The next one, and that's coming in. This one's on Pine Labs. Radhakrishna wants to enter and wants to buy this counter for the next 6 months. A recent listing, Jatin, very good afternoon to you as well. But any kind of view that you have on Pine Labs, is it a good time to enter?
Actually, the trend for the stock is downtrend. So I don't see the trend reversing before the stock surpasses 170, 175 on the upside. So that's a decent level of upside from even from current level. So I suggest to avoid from an investment perspective.
Avoid on Pine Labs. Got that view. And viewers, you can call us on the landline number that's flashing on the top of your screen as well to speak to our guests for your stock related queries. Next one's on Bharat Dynamics, and Prem, who's from Kuwait, has been waiting by patiently for his question to be picked up. He's holding Bharat Dynamics, bought at 428. So he's sitting on considerable gains at this point of time. Avinash, stock's been slightly declining from those highs. His question being if he should book out and probably buy something like TCS, Coforge or Infosys. I mean, that kind of a spectrum, very different from defense, but would you recommend either of those trades?
So I think, he could book out, first of all, 25 to 30% of the profit because it's almost been a three-bagger for him. I think, when stocks move up like this, definitely incremental upside going forward is not in the same proportion and intensity. So I would say that at least 25-30% he can book out, and he can possibly look at, some other sectors. Typically, I would say the hospital stocks, these are companies where, Puneet, I think the numbers are going to be very solid in Q1 and in the coming financial year. Something like maybe a Yatharth Hospital or maybe a Park Medi. I would say that IT, I think it's better to wait for a couple of quarters before he takes the call. Although, valuations have come down quite significantly. Maybe post-September, one can take a fresh review if one wants to invest in the IT sector.
Fair call, Avinash. And the next one coming in, and this one also actually a fundamental query. Our viewer, Sudhakar, is holding on to Escorts, bought at 3075. Now, he bought this way back in January of 2023. So essentially zero returns, unfortunately, that he's sitting on at this point of time. Avinash's question being if he should still continue to hold or exit. We've actually seen a big, FY26, which was one of the biggest cycles for the industry on the tractor side. 1 million kind of sales mark being crossed, and this year the base effect will also come through. But 3 years he's been painstakingly, holding the counter. What's your recommendation for him?
So I think if he has a medium to long term view, I think he should stay invested because despite the fact that the base effect would come in, Escorts Kubota is a very large tractor player. Now they are part of an MNC, parent. And most importantly, in India, the intensity of tractor usage is still low. So, there's a lot of scope for tractor demand to come in. But maybe in the current year, the base effect could play out. So if he's looking at a short-term view, then I think the stock may remain a little range-bound. But my sense is it's a well-established player. If you're taking a view of next, say, 12 to 18 months, one could definitely keep it as a portfolio stock. I think returns could definitely kick in, but it will probably take a time frame of 12 to 18 months. So I would say that continue to hold, don't exit in a hurry.
Got that review. Avinash, the next one, and this stock has done well for investors. AKIS is the one that I'm talking about. Let's look at the stock today, of course, and pull up the 1-year chart too. Our viewer, Nand Gopal, is holding shares bought roughly at 255 odd. Stock's down a little bit from his buying price. He wants to know a target for the next 6 months. What would you recommend here, Jatin? Up almost 72% in the year. Is there still room visible of improvement from the current price going into the next 6 months?
Yeah, see, overall, the trend for the stock is bullish. However, considering that the stock has run up quite a bit, the risk reward is unfavorable for a fresh entry. If he's already holding, then I suggest to continue to hold with a trailing stop loss at 210, where we have the 40-day average. So until and unless the 40-day average is not breached, I'm expecting levels of 275, which is the previous high, and above that the level of 300. But immediately there won't be any gains. There would be some consolidation, and thereafter we could see a rally.
Got that view. But and the next question, and this another stock has been one of those which similar to Escorts actually. Avinash, Shadab Rehmat is holding on to Bajaj Housing Finance. Now he bought these shares at 132, so at elevated levels, and he's holding 500 shares. What would you recommend to him as well? Is it a good time to average down, Avinash? Because I think while the fundamentals has been strong, a lot of it was priced in. So should he average at this point or just continue to have his holdings held?
No, I think Puneet, he can definitely hold on. The business update which has come from Bajaj Housing has been very strong. I think the management has also been very upbeat. So we are expecting very strong numbers for Q1 and a very reasonably good year for FY27. They are the second largest housing finance company in India. So I think he needs to give in some time. But if he averages at current level, I think most of the negatives are in the price. And once the rally starts, I think he can make a decent risk reward. So maybe another 12 to 15 months, he should stay invested and take the advantage of the low price by averaging his quantity, so that his risk reward gets better.
Got that view. And but Avinash, his even if the stock goes up from the 86 to 132, he wouldn't have made any returns. So averaging is not recommended still, despite that.
No, I think, see, frankly, Puneet, this is a company where it's in a very mature business, so you can't expect such kind of stocks to give you 3, 4, 5 times kind of upside. You have to understand that this is a mature business, plus the fact that the asset quality in this business is virtually next to negligible. So in these kind of stocks, I think now the only thing for him is that since his cost price is on the higher side, this kind of action will actually mitigate loss of capital, because otherwise from 86 to 132 itself will take a reasonably long time. So obviously, if he doesn't have the capital, he can continue to hold on. There's no need to average that.
Fair point. And this was another similar query from Daksh, also who's from Pune. So hopefully, Daksh, this answers your question as well. And Avinash, thanks for the detailed response. The next one is between some life insurance plays. And Jatin, is it a right time to enter HDFC Life, ICICI Pru Life from the mid to long term? This is Jay who's asking from Coimbatore. Would you recommend that?
Yeah, within the life insurance space, we like ICICI Pru among all the HDFC Life, ICICI Pru, and SBI Life. So, ICICI Pru has started to form a high top, high bottom structure on the daily chart. So, there is a clear cut trend reversal from down to up in the case of ICICI Pru. However, other stocks, that is HDFC Life, is not showing that amount of a positive or a bullish structure. So from a technical perspective, I would say that ICICI Pru is a good buy even at current levels. The stop loss, if someone is entering at current levels, should be placed at 475, and the target on the upside is placed at 560.
Got that view, Jatin. But the next question, and this one's a caller from Bengaluru. Pramod has a stock query for us. Pramod, thanks for dialing in. Good afternoon. What's your query?
Yeah, good afternoon. I have a Pace Digitech shares, 431, at the average price of 208. Well, the thing is, actually, I wanted to add more, I wanted to add at least 500 more shares. Is it okay to add it right now? Does this have any growth? I just wanted to know that.
And Pramod, you bought this from a fundamental kind of a view or a technical chartistic kind of a view?
It's fundamental. I found this valuation is very good.
Got it. Fair point. Avinash, would you recommend buying more actually of you first on Pace Digitech, and if it's a good time to add more?
Yeah, Puneet, this is a well-established player in the renewable and the best category kind of segment. And I think, my sense is that the next 1-2 years are going to see a lot of interest in this sector. And clearly, the stock has not performed the way it has ever since it went public. So I think value still continues. The investor should take at least a time frame of 12 to 15 months. And if he wants, he can average around 200 odd levels. I think probably the market would give him an opportunity here. But staying invested for the next 12 to 15 months can give him a decent kind of return, which I think has got good long-term prospects.
Got your view, Avinash, and hopefully Pramod that answers your question. But the next one, and this question is from Rajesh, who's from Hyderabad. Now, Rajesh, your query, the way you framed it is absolutely outstanding. I wish you would have called so that Avinash could get the whole context as well. But Avinash he's considering Hero MotoCorp with two reasons. One, that the big investment that they've done in Ather yesterday, they also already have invested way back in 2016. But there's also another question being that does Hero's own product portfolio have those long-term growth aspects? Because we've seen that that space has been declining, right? The sub 100cc space. So his question being if it's a good time to look at Hero MotoCorp or just continue to capitalize the other players which have been doing well like TVS. So what's your opinion?
So I think across all the two-wheeler companies, TVS has definitely outperformed. If you see their volume growth, their profitability numbers, Bajaj Auto has been in the limelight largely because of its buyback, which has impressed most of the investors. But now coming to Hero Motor, I think clearly they are largely present on the rural market side. I think with a good monsoon now, hopefully the second quarter should be reasonably good. And they are a cash-rich company, pay very good dividends. So I think, if the investor can have a slightly longer term call, because in most of these companies, Puneet, the story and the structural opportunity has already been identified. These are all compounders. So I think getting a 15 to 16% return in a stock like Hero MotoCorp, if it satisfies the investor, then I think he should definitely buy it in a staggered manner. Don't buy everything in one shot. Buy it in small pieces and then accumulate it in your portfolio. But please remember, it's a compounder. So 15-16% also returns should be considered quite good, for the investor.
Got that view, and well put, Avinash, as well in terms of those return expectations that you need to keep out from these compounders. But the next question, and Avinash largely partly answered on the switch to TCS or Ecoforge. But Lalita from Chennai wants to know on India Cement. She has 250 shares at 289. Jatin, would you? Okay, we'll continue and stick with you, Avinash, for this question because you mentioned about not switching to any on the tech side and rather on the hospital side. But on India Cement, since she's bought it at 289, should she sell out and maybe take that hospital play that you mentioned?
Yeah, I think she could look at company like Park MediWorld, where I think the traction as compared to India Cements would be a lot better. Of course, India Cements has now been taken over by the Birla Group, and it's part of the Ultratech family. But I think clearly, in terms of the theme, the hospital theme is looking more attractive. I think Park MediWorld should post a very strong Q1 number and a very strong number for FY27. We are looking at a fair value of around 350 to 360 here.
Got it. Well, it's now time for the rapid fire round in this edition of the show. Avinash as well as Jatin, you know the drill. Keep your answer as short as possible. The first question coming in, and this one's on SW Solar. Akhil from Pune is holding shares at 187. Avinash, results were decent, but I think the stock's reacting negatively. What's your opinion on the same?
So I think the investor should hold on here. I think this is just a kind of a reaction post the numbers. We have seen normally after the result, the stock gets a little bit of profit booking. So I think fundamentals continue to be good, continue to hold for the next, say, 12 to 15 months.
Got it. The next question, and this one's on Just Dial. Gokul wants to know if he should continue to hold his 50 shares. Jatin, we've seen a very sharp move this week. Is it a good time to book out?
Continue to hold with a trailing stop loss at 725, target of 850 on the upside.
Narayan from Andhra Pradesh is holding 350 shares of Vishal Mega Mart at 148. Has been underperforming as well. Avinash, what's your view?
So I think he should hold on to the shares. The only problem, Puneet, for this stock has been that promoters have exited the stock by giving open offers for a very long time. So if that stops, then I think the stock should get re-rated.
Got it. The next one, and this is from Mr. Sugunakar from Vijayawada, wants to know if it's a good time to enter IDBI with the disinvestment thought. Avinash, what's your view?
So I think if the investor has got a decent risk appetite, I think at these levels there's no downside for IDBI, and hopefully if Fairfax takes over the bank, I think you could see significant amount of re-rating. The only key point would be that when this event happens, because it's been waiting for a very long time.
Got it. Sayan from Kolkata wants to buy into BLS International. Jatin, would you recommend that?
I think, what was it?
This one was on BLS International, but Avinash, that query was for Jatin actually.
Okay.
Yeah, the trend is negative, so avoid would be the suggestion.
Avoid, got it. The next one's from Sujan. Actually, we took Sujan's query also on Bajaj Housing. This one's on Union Bank at 166. Jatin wants a short-term view. Any kind of target that you have?
Yeah, continue to hold with a trailing stop loss at 160 for a target of 184.
Narasimha wants to enter between Kalyan and Thangamayal for the short term. Both have run up massively. Jatin, would you recommend either?
I think Thangamali has a better technical structure. So buy at support of 6,000 for target of 7,200.
Got it. Aniket Desai from Pune has a query on Godfrey Phillips if he should enter for the next 1 year. Avinash, I think with the recent taxation change, should he still venture into this?
No, I think at these levels it's better to wait for some time.
The next question, and this one is on Tata Elxsi. Rituraj wants to add into this counter. Avinash, yet again a couple of years of downtake underperformance. Should he avoid?
No, I think as of now, it's better to wait for the second quarter to come out. First quarter, Puneet, has not been up to expectations, and the stock is not cheap. It's fair to expensive. So fresh buying, I think at least is not advisable now.
Got it. We'll just address quickly the numbers coming in from BHEL because it's a massive beat. Avinash, if you can stay on as well, because you've had the revenue estimates coming in at and the revenue coming in at almost 7,698 odd crores. And that is, much higher than the estimate that we were working with. If we can show those numbers on screen as well, of roughly around 6,300 crores is the estimate that we were working with. The revenue has come in at 7,698. So a big estimate beat there on the revenue front. On profitability as well, the numbers that have come in at 377 crores, a big beat there as well. And we'll wait for, of course, the comparison on a YOY basis for BHEL too. But on just those two numbers, probably get some more perspective from Parth, who will be joining in very shortly. Right now, looks like a good set of numbers. Of course, a lot more that we'll of course flash through and get through as well in terms of BHEL, because it's an important quarter for the company as well. The EBITDA estimates also look decent at 504 odd crores at this point of time, because yet again on the estimates front we are working with a similar a lower number at this point of time of just about 79 to 80 crores. So definitely it's a big beat there. But Avinash, I know the numbers have just come in, but just on the face of these 3 to 4 key numbers, any kind of view that you have on this one?
So I think whatever numbers, Puneet, you have shared with me on the top line as well as the EBITDA margin gives a clear amount of comfort that this kind of numbers is going to be very strong and a very thumping quarter. I think what kind of order inflows have happened in this quarter, plus what is the kind of execution the company did, and obviously the management commentary, post the Q1 numbers would be very critical. But I think it looks very promising, and I think the stock should definitely move up based on these numbers.
Correct. Well, we'll of course get you more deeper perspective as well, but out of time on this edition of the show. Jatin as well as Avinash, thanks so much for joining in and helping us solve all these stock related queries as well, but get you more perspective on the other side. India Market Close comes up next.
Superstar Stocks of the Day, presented by Tata Azura. Har Raaste Ka Superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew and with me is Mahima Vachajani. Hi, Mahima.
Hi, Alex.
We're coming to you live from the NDTV Profit Suzlon studio here in Mumbai. And, well, let's take a look at it, shall we? The equity markets have given up quite a bit of their gains. It's been chop and churn, but we've stayed within that range and we haven't broken below the 24,000 mark. We've seen a bit of a dip even there. So 2 dips or 3 dips or 4 dips today, but we're not going anywhere at this stage.
Yeah, so I think expiry one playing its part, and the second one is I read this joke somewhere that probably Trump is tweeting somewhere, and that's why we're seeing that downtick coming in. But jokes apart, almost flat on the Nifty 50. We can try to pull up the heat map and see as to where the stock position stands and see as to what the top gainers and losers are.
50-50.
Tech still, yes, 50-50 and HCL Tech still, riding that momentum of good set of numbers. Is Maruti Suzuki, which is up 1.7%, Wipro, Indigo up 1.6% as well. So that is actually indicating as to how crude will move. Bajaj Finance, Infosys also doing well. So a lot of IT names doing very well. But on the flip side, you have Eternal, which is tanked 2% in trade. You have SBI Life, which is also down by about 2%. Shriram Finance, Axis Bank, BRA, some of the other names that continue to be under pressure.
Pull up the contributors chart because you'll see a few heavyweights that are proving to be a bit of a drag. HDFC Bank right on top, followed by ICICI Bank. Remember, these are 2 stocks that were in the green yesterday, but they slid quite a substantial amount at 1250 or thereabouts when the equity markets took a turn for the worst. Reliance Industries proving to be a little bit of support. Infosys, Bajaj Finance, M&M. So those are the names. Pull up 2 intraday charts, the Nifty Bank as well as Nifty IT, because Nifty IT is actually bucking the trend today. Nifty Bank is just about 0.5% lower at this point, but Nifty IT is probably trading higher. It is, in fact, off the high point of the day, but still up about 1% or so. Pull up the broader market indices as well, just to see where they are. They're in the red right now. That's at the low point of the day, in fact. The mid-cap index losing about 0.5%, small-cap index also losing ground, as a result of which you will have seen that the advanced decline ratio has shifted for the worse over the course of the session today. In fact, declines now ahead of advances. Pull up the sectoral indices just to complete that picture, and you'll see quite a bit of red on the screen. More so than you did see this morning, with realty losing ground. You have financial services, private banks also losing ground as well. Nifty Bank down about 0.5%. Consumer durables, IT, media, auto
in the green. We should look at individual stocks as well.
Yeah, the consumer durables, of course, on the back of mobile PLI, semiconductor PLI, etc. being announced. A lot of those counters buzzing on the back of that. But if you can try to pull up the BSE 500 and see as to what are some specific names doing well in trade today. You have MRPL, of course, on strong set of numbers, seeing that uptick of around 9%. ABB, of course, cooled off from the day's high point, but I think the global guidance for India order inflow coming in number has excited that stock. Dixon on the back of the mobile PLI being announced. You also have on the flip side ICICI Lombard, which has taken a knock, of course, has come off significantly from the day's low point, but a bad set of numbers is what has caused pressure on that counter. SW Solar again on the back of weak set of numbers, down 8% odd. Nuvoco Vistas now probably seeing profit booking coming in, and you have something like a Nippon Life, JB Chemical, and UTI are also seeing downtick of around 3 to 4 odd percent. But Alex, what are the factors that one needs to watch out for in trade?
Mahima, the thing is, it's range bound, and this has been the case for a few days now. That continues to take place. The Nifty continues to consolidate in that tight range of 24,100 to 24,200. The overall trend remains range bound with no strong directional momentum on either side. You actually go all the way back to the start of June, and you see that the fact is that we've stayed between the 23,800 mark on the downside and the 24,200 mark on the upside. As of now, 24,000 and 23,950 are proving to be a crucial support zone. We haven't yet broken below the 24,000 mark at this point. The upside, though, is also capped. 24,300 is proving to be that immediate hurdle, followed by 24,500 and 600. For the Nifty Bank, a weaker technical setup is currently underway as compared to the Nifty Index, just 200 points above its 200-day moving average. The strong immediate resistance is standing at 58,200, with a core demand safety layered at 57,200 to 56,900. We're joined today by Rajesh Palvia, who's Senior Vice President, Technical and Derivative Research at Axis Securities, as well as Dharmesh Kant, Head of Equity Research at Chola Securities. Gentlemen, as always, an absolute pleasure having you, and good afternoon to the both of you. It's good to see your smiles. Dharmesh, not yet. I can't see your smile yet, but I'll wait for it. Big smile, yes. Good afternoon to you. Waiting for the markets to turn for the better. I wonder if that is the case. Is the mood not too good, Dharmesh?
Good afternoon, Alex. Thanks for having me on your show. I don't think so. I mean, the mood is good, but some volatility and some portfolio rebalancing is happening in the market on backdrop of, again, the scars and tension escalating in the Middle East. But to my mind, with each passing day, the volatility due to Middle East is coming down, though the missiles are being fired at a much higher frequency. But the Brent crude prices have not moved up. And so far, the earnings which have come through has been pretty encouraging, particularly from the entire financial space. Automobiles and metals are awaited. I think there the earnings will be even stronger out there. So, I mean, it's a cherry-picking market. One should be constructive on the market, buy on declines, and right stock selection is the time for it.
Okay, all right. Of course, Rajesh has also joined us. Rajesh, a very good afternoon to you. And I think, I'll start by asking you as to what levels now you're watching out for the Nifty. We are above the 24,000 levels and keeping that level in check. But overall, expiry also has its role to play. In terms of Nifty 50 and the Bank Nifty, what is it that you're watching out for? Because on the weekend, you also have a lot of heavy names coming out with their earnings.
Yeah, hi, good afternoon, Mahima. Good afternoon, everyone. So, looking at the behavior since last couple of trading session, it's a range-bound activity for Nifty. Nifty is taking support from 24,000 on the downside, and on the higher side, 24,200, 250 are acting as a resistance zone. But in between, a lot of stock-specific action is taking place. Whenever market is taking any kind of dip towards 24,000, put writers are looking confident around 24,000 as well as 23,900 strikes. So they are trying to defend these levels on the lower side. So looking at the scenario, we believe that either side breakout or breakdown will decide the major direction from here onward. As we are into the earnings season, so a lot of volatility due to earnings also, as companies are posting their quarterly earnings. So a lot of volatility is taking place, and a lot of adjustments are also taking place in terms of position as well as in the portfolios based on the quarterly earning. and the guidance the companies are posting. So we believe that for Nifty trader, buy on dip should be strategy till we are trading about 23,950. But whenever you get prices closer to these range, 23,950 or 24,000, you can try to buy Nifty around those level. But in pullback, book profits around 24,150 or 200 zone. That's the range for Nifty. But for Bank Nifty, again, it's struggling to hold above 58,000 level, 58,000 to 58,200. These are the area where call writers are aggressively writing their positions. So these may act as a major supply zone, and we have seen in multiple attempts, Bank Nifty again failed to cross these level. So until unless there is no decisive breakout about 58,200 on a closing basis, we may see range bound activity here also. 57,000 to 58,000 would be the range to play in the Bank Nifty. So buy on decline again here, but not at current price. If you get opportunity around 57,200, 300 zone, then buy. Keep a stop loss of 57,000 for Bank Nifty.
What about individual stocks that you're liking at this moment, though, on the charts, Rajesh?
So I think Amber Enterprises is looking promising. The way stock is making a higher high-low formation, the way stock is now, trading above to all its near-term, short-term moving averages. We believe that this stock can extend gain. 8,200 to 8,250 would be the upward target for the stock. On the downside, one needs to keep a stop loss around 7,900. Another stock where one can focus on to buy in this volatility would be the from the pharma space, and I think from pharma space one can focus on Lupin. Here we have seen stock is exhibiting strength and consolidating at higher band. So looking at the structure, we believe that once stock crosses about 2540 level, we could see a rally to unfold here towards 2600 to 2650. So Lupin is buy. On the downside, 2460 needs to keep as a stop loss.
All right, so that's the view coming in on, of course, the picks that Rajesh has in his basket. But let's try and focus on ICICI Lombard. It's our stock of the day, as of course it's witnessed a sharp sell-off. It's cooled off, of course, from the low point, but still, this is on account of a disappointing first quarter numbers, that is Q1 FY27 performance. Let's go across to Shivam, who joins us with the earning fine print and what the street view of the stock is. Shivam?
The stock has seen a strong downtake in today's session and has been trading near to 2-year low. Also, this is the biggest intraday fall in the stock since March 2020. Now, let's look at the key reasons why the stock is falling. So, first one is the company has posted a weak Q1 results for FY27, and also the results were below the street estimates what they were expecting. Also, there has been a slower growth in gross direct premium income, which was around 7.8% for the company. For the industry growth, it was around 10.9%. So there has been a slower pace of growth in gross direct premium income. Apart from that, the profit has also seen a dip, which is due to two exceptional items. So first one is the company has faced two large losses in the fire segment, and that has also impacted the combined ratio and to the net profit of around 63 crores. And second one is the adverse Supreme Court judgment, which is on the motor third-party insurance. That has also resulted in an increase in the claims ratio and has impacted the net profit overall. Apart from that, there has also been some rating downgrades and price cuts. Now, moving on to the outlook of the company has given. So there has been intense competition in fire insurance segments. Also, in terms of commercial lines, that has also been facing continuous pressures from past. In terms of additional reserves, the company has created 165 crores of additional reserve after the Supreme Court's judgment on motor third-party insurance, and health claims incidents has also been rising and are at elevated levels for the industry-wide across. In terms of analyst views, the analysts are expecting a return potential of 22% in a 1 year, and the consensus target price currently stands at 1970.
Sure. Yeah. All right. 1970 is the consensus target price. Dharmesh, I want to come to you. You've looked at the numbers. ICICI Lombard, one of the disappointments of the day, down over 10%, but off the low point of the day. What would you have to say about the prospects going forward, though?
Yeah, Alex, I mean, as a house, we have a neutral to negative, bias for all general insurance companies. So we don't like this space, general insurance per se. So I won't be able to comment on ICICI Lombard numbers for that matter. But what we like in the insurance space is the life insurance companies. There, I think the numbers were pretty decent, be it SDFC Life or ICICI Prudential. Those numbers were quite good. And there we have always been liking LIC, Life Insurance Corporation of India. And the reason why I say so is, first thing is, if you look at the numbers on the VNB front, so the VNB business is growing quite around 14-16%, and it's likely to inch up to around 20%. The others have been growing at around 20-25%. At the same time, if you look at VNB margins, private insurers were having around 29-30%, which is coming down to 25% mark, whereas LIC VNB margin has inched up from 14-15% to 18-19%. And this quarter, we are expecting a slight improvement out there as well. If you look at price to embedded value, LIC is available at 0.7 times price to embedded value on a trailing basis, whereas others are available at 2 to 2.5 times. So very strong difference between the valuation gap. At the same time, business remains, on a constructive side for LIC of India. The only overhang has been the government of India holding out there, and that liquidation or dilution factor is a overhang. But I think that's far off the mark as of now. And going forward, we have a very aggressive target on LIC. In next 3 to 5 years time frame, we have more than 1,000 rupees stock price target for LIC of India. So there we are focused. Life insurance companies are still better than general insurance companies for the space.
Life insurance companies are better than general insurance companies. I think that's the key takeaway coming in. But I think ITC Hotels is also something, Alex, that we should talk about, because good set of numbers. I mean, it's not like, they've been bad in terms of there's margin expansion happening. There's
PAT growth of over 30%.
30%, revenue growth of over 15-odd%. And you also have EBITDA growth of around 20-odd%. But I think the acquisition that they've gone ahead and announced is where there could be a problem, because if you take a valuation at which it's been acquired, it's almost 4 times EV to sales, and that's probably the reason, because it's just one hotel, the acquisition that they've made, which is branded as Welcome Ahmedabad, and it has around 130 keys which it gets added. And in terms of where the revenues go, as far as 26 was concerned, was just 35 odd crore. So that is, I think, where the street has not liked the announcement coming in. That's why we're probably seeing that stock under pressure. But Rajesh, a quick view on the charts for ITC Hotels, because anybody who's gotten this after the demerger has been a patient investor. What would you recommend that person?
So stock is gradually recovering from the lower trajectory, but still looking at the near-term, short-term structure, there are supply pressure at higher level. 185, 190 are the major, supply zone for the stock for ITC Hotel. On the downside, 165 is the important level to watch for this corrective move. So I think if stocks holds around 165, then some pullback trade we can see around those level. But at this juncture, I think one should wait, as stock has just slipped below to 20-day moving average. So we may see furthermore, profit taking to initiate, and if it's available around 165, then one can review it.
If I'm not too far away at this point, let's see where it goes. It's up about 10% plus in the last month. Gentlemen, stay with us. We're stepping away to do a conversation with Sunil Kaul, who is a global emerging market equity strategist at Goldman Sachs. Sunil, thanks so much for taking the time. Pleasure speaking with you, and good afternoon to you. I'm looking at the recent report that you've done, and essentially it's talking about the fact that things are looking up for the Indian market. There is a sign that foreign institutions are, at least for now, halting the sales that they've done at a frenetic pace in the first half of the year. What do you see that is looking better now?
Yeah, I mean, thanks, Alex, and thanks for having me on. Listen, you're right. I mean, we do think that Indian markets could recover over the second half of this sort of calendar year, narrowing some of the underperformance it has had during the last, I guess, year or 18 months or so. I will say like a few things. Now, one, I think if you think about the main reasons why foreign investors have been sort of shying away from India for a while, I would sort of say 3 main things. One, obviously there was a lot of concern on the fundamental side in terms of growth slowdown and earnings slowdown as we had headed into the energy crisis. You also had a lot of concerns around the currency front, given the weakness we were seeing, which was obviously partly impacted by the rising oil prices. And then India was also viewed, as we know, as a funding trade for all of the AI-related pockets in the rest of the Asia and the emerging market pack. I would say on all three of those metrics, there have been some improvements that have happened. So on the growth and the earnings side of things, the economy has held up and has been much more resilient than most investors, most I guess brokerages thought, including us. You see that in the GDP numbers. We are also seeing that in the 1Q numbers. We are expecting the 2Q numbers, X of the losses from the OMCs, to be pretty resilient as well. 12% profits up for the second quarter calendar this year as well. So I think on the growth and the earnings side, things have been much more resilient than expected. On the INR side, obviously we all know the measures from the RBI in terms of taxation, capital gains taxation on the bonds, the ECBs, the FCNR, all of that should be good for flows. We are penciling in around 60 billion cumulative inflows to come through these measures. I think some of the market participants even have higher estimates than us. And so I think the liquidity picture is also looking pretty decent. And then on the last front, there is clearly some momentum unwind and de-risking we are seeing in the AI pockets right now in the markets. And I think there is a growing desire for investors to diversify. People are still kind of positive on the memory fundamentals, but there is a desire to increase allocations on India, given how low they have been. And so if you put all of these three factors together, our broader view on the emerging markets as a whole is that, look, I mean, the first half rally was very concentrated in these AI pockets. As you look into the second half, you should see catch up in some of these cyclical laggards. And India, especially the ones where you have seen some micro and macro improvements, and India kind of checks that box.
Sunil, I see that for the benchmark Nifty 50, you're talking about 26,500 as a possibility in June 2027. But the thing is, the kind of performance of this cohort of large caps has been horrible, particularly when you compare it with the broader markets, right? And so, therefore, it's a tale of two markets within this market. So, do you have a different view for the broader market stocks, those that you have looked at?
Yeah, you're absolutely right. Look, I think the 10-11% upside you're seeing on the headline Nifty level, which is what we are responsible for putting our targets on, I would say that is largely a function of what the underlying earnings growth we are looking for the market. And so we are penciling in about 10% earnings growth for calendar 2026 and about 13% for calendar 2027. And so without any major change in the multiples, that's what the upside is coming in from. But obviously, I think if you sort of position yourself in the right pockets, you can get higher sort of double-digit mid-teen upside in certain pockets. I think within the broader cohorts, you're right. I think the mid-small caps obviously have done much better given the support from the retail flows and the domestic flows there, whereas the large cap is what has lagged, and Nifty, which is kind of obviously the large cap index to a large extent, is kind of obviously down for the year. One of the views we are, as I mentioned at the upfront, are penciling in is that as sentiment starts to improve and foreign flows recover, that's where they would probably allocate money, and so large cap should catch up or rebound and recover, and therefore you could see a slightly better performance in the large caps as well. Doesn't mean that the good themes within the mid and small caps don't do well. I think we still like many of those secular themes in India. But from a pure foreign positioning perspective, which is extremely light in the large caps, we think they can recover on the back of improving flows.
Got it. Sunil, hi. Mahima also joining this side. Because you were mentioning that, because large caps have largely underperformed versus the benchmarks, is why you believe that now the rotation should turn towards large caps. But, from an earnings point of view, what we've realized that despite of what global uncertainty we've seen, earnings have been on a strong footing, right? Right? Is that one of the reasons also why you think that large caps could do better than mid caps? They have a bit of headroom in terms of where earnings could play a catch up. And secondly, in this upcycle that we're seeing, what are the sectors do you think that will outperform considering everything into picture?
Yeah, that's a great question, Mahima. Look, I would say I wouldn't sort of say that the large versus mid cap is high conviction relative view on the back of any underlying earnings fundamentals. I think the view there is that, look, as foreign flows recover, they tend to be more exposed or engaged in the large caps, so large caps will start to recover, especially at least catch up some of the performance with the mid and small caps. On the earnings front, we do think the mid and small caps do have higher earnings growth and continue to have so, but they're also slightly more expensive. So on a PEG ratio basis, both are largely similar. But what I would therefore focus on is which pockets do we like overall in the market, as you said, what was the second part of your question. And there I would say like 2 or 3 main things among others. I would say one, I think financials is something we like. Obviously, they benefit from the liquidity easing measures from the RBI. The credit growth numbers have been looking decent. It's one pocket, as we know, in the market that has reasonable valuations relative to the rest of the market. And so we think as flows come back, financials could be one pocket that will do relatively well. There's a lot of debate with clients in terms of sort of banks versus NBFCs within some of the clients. And our general sense is like, yeah, I mean, if the long end rates comes down and the cost of risk is lower, that's good for the NBFCs. But in general, I think some of the large cap banks are also giving you decent growth with a better asset quality. So banks as an overall cohort should do well. Then I would say the other bit we like is this entire theme of power equipments, which obviously feeds into some of the data center as well, but sort of feeds into the broader theme of energy security that I guess has been even more amplified after the energy crisis. And there, I think at the margin, cyclically, given the hot weather, the seasonal sort of demand for power, that also helps at the margin. But if you put all of that together, we think that sort of cohort, wherein you're talking about renewables, you're talking about power, you're talking about utility companies, some of the power equipment makers, some of them are indeed in the mid caps as well. We think that cohort should continue to do well and print decent numbers. And I think that will be number two. And I think the last bit I would say on the consumer front, again, there are pockets like discretionary, bits of discretionary. So tourism, hotels, airlines, obviously with stabilizing INR and oil prices, hopefully not going much higher than current levels. We think some of the demand there comes back as well. So I would say beyond the defense and the energy security sort of meta or mega themes, there are these pockets within the market which we also like.
Sunil, the other factor is that, despite everything that's happened geopolitically, India still trades at a premium versus emerging markets, right? And that's been the debate for quite some time now. But do you think that, one, that premium is justified? Because that will eventually decide whether FIs come into India or not. And despite valuations being high, I was reading somewhere that at a 10-year CAGR, India's, Nifty TRI and BSE TRI has given that 12.5% return CAGR, right? That's just the third amongst a lot of markets, just the Nasdaq and Nikkei doing better than our benchmark. So what is your positioning from that perspective?
Look, I think just two responses to that. I think one, I would say, I mean, we have done a lot of detailed work earlier in the year to try and answer what's the fair value multiple for India, looking at growth differentials with the rest of the world and where India has traded, keeping in fact that ROEs versus sort of PB versus ROE framework, looking at the fact that the market structure has changed with domestic flows being a much stronger driving force in the market, and so the clearing price is much higher. And then you got the AI, which you have to take into account. And so, can there be the same premium justified that it was previously? And maybe the answer to that is no. And so, if you put all of that in the blender, our sense was that from various valuation approaches, that probably at the headline MSCI India Nifty level at 20 times was more justified. I think the market was trading at like 22, 23 at the start of the year. And so we have already seen some derating happen in the markets. We are probably closer to where we think multiples are fair. And even in our models, we don't see a huge multiple derating risk for the market. I think having said all of that, I would say the second point is, I guess, more important, which is what you also alluded to, which means I think for India, it has had a premium valuation than the rest of the region for a while, for the last 15, 20 years, but that has never been an impediment for the market to do well. It has printed decent numbers on a longer term CAGR basis, as you mentioned. And so the critical factor there is growth. And I think there, as we said, if we do think that the economy is resilient and you are starting to see growth numbers come through, which is our expectation, we think flows will come back. And that should mean Indian equities do slightly better overall. We are still market weight relative to some of the other emerging markets pack, but we do think that overall you could get to a double-digit upside for the headline index and slightly more if you are in the right pockets of the market.
Yeah, certainly good to hear. Thanks so much for taking the time, and pleasure speaking with you as always, Sunil.
Thank you.
All right, let's jump straight to my colleague Soumit Sarkar now. He's joining in to tell you what he's hearing in the dealing rooms. And by the way, in the recent past, we've got a lot of chatter that has already been confirmed as news in the recent past. And Soumit, I'm curious about what you have on your list today.
And the first stock is Kotak Mahindra Bank. Now, the buzz on the street is that the new MD announcement will come on or is expected to come in along with the results of the company. Now, dealers indicate that an internal candidate will be elevated when it comes to Kotak Mahindra Bank to the MD level. For Sona BLW, there are buy flows on the PMS desk. Dealers expect some JV announcement and a positive note from a foreign broking firm very soon. For delivery, dealers are expecting a block deal to happen very soon in this counter, but block is expected to be just around 80 lakhs to 1 crore. So not a big block, just a small size block is what is expected by dealing rooms. And given the fact that it's earnings season, Piramal Finance, SBI Cards and Jaiswal Neco, that is a cash counter, there are buy flows on the large HNI desk. Dealers are expecting strong Q1 numbers to come in from these three names. And on the flip side, Wipro, there are sell flows on the large HNI desk. Dealers are expecting a weakish set of numbers from Wipro compared to other IT companies.
Okay, all right. So that's the set of stocks that you need to keep on your radar. Let's also talk about DB Corp, because that's come out with its earnings and has delivered a strong set of Q1 numbers with revenue, EBITDA and PAT growing in double digits year on year. And the company has also seen a broad-based growth across segments in terms of advertisement as well. To take the conversation ahead to understand as to how the quarter has fared, how things are shaping up, we are now joined by Girish Agrawal, who's the promoter and director of DB Corp, joining us now. Thank you so much, Girish, for taking out the time. Mahima this side. My first question to you is with regards to how the Q1 numbers have fared, because it's seen broad-based growth across segments in terms of where the advertising growth across sectors go. Just wanted to get a sense as to what sector has contributed the most, and do you expect this kind of momentum to sustain throughout the year?
Good thing is that in this quarter, except education, because education NEET exam got into the re-examination and the results are going to be out in July or August. Except education category, most of the categories have performed pretty well. So that gives me a strong indication that going forward in the quarter 2 and 3 and 4, it's not that one segment of the industry is performing and others are not. So I guess things looks pretty decent on the ground.
Girish, hi, Alex here. I'm wondering about the margins. You've actually managed to expand them on a year-on-year basis at 22.5. Is it possible to squeeze a little bit more out of the margins, or do you think that this is more or less the trajectory that you're going to see in the remainder of the financial year?
I appreciate your greed on that. But just to let you know, in good times, we were at almost 30% margin. So I think what we are right now on 26% is a pretty maintainable number. Though having said that, the newsprint is a commodity. So as of now, this quarter, we have seen a 19% growth on the newsprint pricing. Next quarter, we have an indication that it may go up slightly bit more. But quarter 3 and 4 onward, that should start coming down. So on a yearly basis, if I look the whole year going forward, I think these kind of margins look doable.
Girish, I just want to ask about the trends that you're seeing in the ad space, right? And what is the kind of spends that you're seeing? Do you see, with the improvement in sentiment, I guess that's something that you would benefit from as well. Are you more positive heading into the rest of the year?
Yes, very much. Because see, despite of all the geopolitical issues which India also faced, the market still gave us 10% growth. So I think if some fundamentals further improves, I'm pretty bullish on that.
I have to ask you this question because with the advent of social media and etc., we've seen the industry facing a lot of challenges. But despite that, you've seen growth in terms of print. There's also, healthy growth in terms of where radio goes. But going forward, from a long-term perspective of, let's say, 5 years down the line, where do you see this going? And as to what are the changes that you are adapting in order to, make sure that you are in line with what the industry is going forward with?
Two things. First of all, as you know, my entire business is based on the print and radio right now.
Correct.
95% print. So our focus is on print for the current business because there's enough money to be made on this, enough growth to be taken from this. Having said that, your point of 5 years from now, we're working on digital in a big way. As you know, our digital apps and all that we are the number one with a huge margin in India, with almost 20 million MAUs. So we are putting all our resources and focus on that also, that 5 years, 7 years down the lane, if the changes happen, then we are on top of it.
Girish, just one last point. Since you mentioned digital, and we're all in the media content space, I'm wondering what you're thinking about the accessibility online of content and the fact that search is now AI, and a lot of the content that is created digitally is now pooled, and the redirection to individual websites is getting challenged. And from that perspective, for organizations that depend on views and advertising revenue, it's proving to be a challenge. Have you thought about that at a conceptual level?
Very good question, I would say. Because see, you have to understand, in any business, there's something called right of way. Like in our newspaper business, we have a right of way to come into your home every day. You don't have to go out and pick up the paper, or you don't read us on a platform. You read it, delivered to your home. Similarly, on an app, it's a connection between consumer and me directly. So I'm not asking you to Google me or go on a YouTube and see my news and all that. No, I want to create a right of way with you directly through my app. So if that is the way what we are working on, I'll have a great connection, which I already have, with 20 million users on a monthly basis. Now, this has to go manifold. So that way, I'm not bothered about any other platform because I would have a direct relationship with my readers.
Good answer, Girish. And I guess apps are the way to go, where you have people interacting with you directly. Thanks so much for taking the time. Pleasure speaking with you. Wish you all the best in FY27.
Thank you.
All right, we have to slip into a very quick break, but we'll talk about the top buy today, sell tomorrow ideas and a lot more on the other side. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Ready for the next big IPO? Apply for it on Grow. Open your free DMAT account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
From a PwC standpoint, we actually set up criterion for each of the categories.
Welcome back. You're watching India Market Close, and we're coming to you live, of course, from the NDTV Profit Suzlon studios. On this side of India Market Close, we've got Nagraj Shetty, who's a technical analyst and derivative research analyst at HDFC Securities. We've also got Neerav Ashar, who's head of equity research at Latin Manhalal Securities. Gentlemen, thanks so much for taking the time. Good afternoon to you. Nagraj, I'll come to you first. A quiet day and pretty range bound. We've just about slipped into the red for the benchmark Nifty 50, but holding well above that 24,000 mark. Are you positive heading into the last half hour of the Sensex expiry?
Hi, good afternoon, Alex. Nifty has been moving in a range bound action over the last few sessions. To speak about today's, I think there is a possibility of lower levels recovery in today's sessions. Market is not showing any direction at this point of time. A small range movement at the higher levels. 24,200 is a strong resistance. Above that, 24,600, 500, 600 is going to be the next target. At the lower levels, 23,800 is going to be the support, which is there for a near term. And today's market movement as concerned, I am expecting a recovery towards the end.
All right. What about individual stocks that you're liking, Nagraj? Let me ask you that as well.
I have two stocks from a long side. First one is Tanla platform. Chartically, Tanla has been in a consolidation phase recently, witnessed a decisive breakout in the last few sessions, placed at the higher levels. Overall chart pattern is looking positive, moved above the 200-day EMA. One can look to buy at current market, which is somewhere around 589, and the immediate target would be around 620. One can place a stop loss at 575. Second one is Mastech. Mastech was moving in a consolidation, showed some intent to break above the consolidation phase, currently trading around 1764 levels. The RSI pattern, volume, overall chart pattern is looking positive. One can look to buy at CMP. The immediate target would be around 1850, and one can place a stop loss at 1710.
Neerav, I want to come to you on a pocket of stocks that is done particularly well, and for good reason actually. It is the EMS pack and the semiconductor related stories after the PLI update. What do you make of it?
Good afternoon and thank you for the invite. We've seen the PLI support work out very well for the EMS space in general. We've seen two key beneficiaries already in trade, I think Dixon Technologies and Keynes. And we've seen the progress of the EMS industry because we already the second largest mobile phone manufacturer across the globe, and with a significant share of exports also. So I think this 62,500 crore PLI2 scheme should augur extremely well for the sector. And there are a lot of developments which are taking place, a lot of expansion plans which are there in the anvil. So I think it should work out well. And also the semiconductor incentives also should work out very well for the sector, which is still at a quite an inception stage.
Your top picks based on what you've heard, particularly in the context of what is doing well today, right? Dixon from lows of, if I remember correctly, 9,700 on the 30th of May has now gained quite considerably. Is it still worth buying?
I think the entire EMS space is quite expensive in terms of valuation because they're very richly valued stocks. And I think Dixon and Keynes were the stocks which were lagging behind in terms of valuations because of certain hurdles which they've been facing in the recent past. certain deals which are to be worked out, certain margin pressure, etc. But I think now things should improve significantly because of these incentives and the new tie-ups which are there on the anvil.
In case you were wondering about the Semicon approval, this is Semicon 2.0. There is also the other PLI with regard to the EMS space, but this one has got a total budgetary outlay of 1.27 lakh crore rupees. It will build on the momentum of Semicon 1.0. What it is set to do is it's set to build on 6 pillars and quite a few of them. So I'm not going to go through all of them, but there's a design pillar, there's a machine and materials pillar, there's a setting up more fabs. What are fabs? Essentially fabrications which build semiconductors, and this is why TSMC is known worldwide. It is one of the, if not the largest fabricator in the world. And so the attempt is to create the ecosystem. We're probably a far way off from reaching the absolute level of TSMC, but you got to start somewhere, and a lot of ground has already been made.
And it's also interesting because in the recent tour that Prime Minister Narendra Modi did in Japan, Australia and New Zealand, I think semiconductor was one of the largest theme which was in focus, and we've signed a lot of MOUs and agreements around semiconductor when it comes to Japan specifically.
Yeah, and the other one had to do with the mobile PLI scheme 2.0. This is, of course, got a budgetary outlay of 62,500 crore rupees, and the scheme is going to be in place for 5 years. That is between 27, that's the current financial year, all the way up to FY31. It follows PLI 1 for mobiles, and that ended in March 2026. So there's expectation that this would come through. There are several benefits. The incentive support ranges from 2.25% to 25%, and Dixon is a clear beneficiary, as a result of which it is standing as the top gainer in trade today among that pack as well, 6.3% or thereabouts. Exports are likely to see a big benefit as well, and 13% of volumes currently exported. That number could well go up. Remember, for India, one of the biggest exports is now the mobile phone. But let's shift gears and talk about the banking pack. And there's one stock in particular that stands out, and it is in fact IDBI Bank. This is news that we got you yesterday. Fairfax is leading the race for IDBI Bank, but the Reserve Bank of India norms on ownership of multiple banks by a single entity could result in a few changes. And to tell you about what could come to pass and what is being considered as well is Piyush Shukla. Piyush, for Fairfax, which already owns CSB Bank, there are a few decisions that they have to make, right?
Absolutely. We are here talking about Fairfax coming out as the, likely winner for IDBI Bank acquisition. We are aware Fairfax and NBD were bidding for IDBI. Now, Fairfax is a very unique case. Fairfax already owns a majority 40% stake in CSB Bank. And as you rightly mentioned, RBI rules disallow one promoter to have controlling interest in two regulated entities. So both CSB and IDBI are both listed. So for the way ahead for Fairfax would be, they have two options. First is either they can pare down their stake below 26%, or they can pare down their stake in CSB to non-promoter level, and then they can acquire IDBI. The other option is that they will likely have to merge CSB Bank with IDBI Bank, because IDBI is the larger bank in comparison if we compare the two. After that, the bank will also retain the IDBI, likely retain the IDBI brand image, because of course it's the larger bank. And apart from that, Prem Vatsa can also request the RBI to give them time. There is, after, a promoter has to bring down stake in the bank below 26% after 15 years. So the, Fairfax may ask RBI to actually give them a little bit more time, gradual, timeline to reduce its stake in either of these, in CSB and even in IDBI, because they have two large bets already. We are looking at a very interesting picture here. Like we mentioned, NBD and Fairfax are both in the race. NBD, as we are aware, recently also acquired majority stake in RBL Bank. So Fairfax is the front runner to acquire IDBI, and after that, acquisition may be easy, but after that, how Prem Vatsa figures the group structure would be very interesting, including who will be the new CEO of IDBI.
Absolutely, Piyush. Thank you so much for getting us those details. Nirav, I'll quickly come to you, because it's been a really long time since we've been talking about how this divestment will take place, and there are multiple ways in which, Piyush was just mentioning. But what's your take on this? And considering that somebody is invested in IDBI, how should investors look at it right now?
Well, definitely. I think if one were to look at from a Fairfax point of view, I think CSB is a very regional kind of a player as far as the banking space is concerned, and with a strong focus, of course, on gold finance, gold loan funding, and NRI banking, and I think IDBI Bank is more of a pan India kind of a player. So it will be very difficult to merge the operations. So I think some middle path has to be found out with respect to this. And I think the kind of suitors which are there for IDBI, I think definitely the prospects look promising in the times to come.
Okay, all right. So that's the take coming in on IDBI Bank. But the other one that has completely, stolen the show today is ABB India, because it's buzzing on the back of ABB Global reporting an 81% jump year-on-year basis in terms of order inflow from the Indian region. And we have Parth joining by with an interesting bull versus bear case on this stock. Parth, what are you picking up?
Absolutely. So ABB Global, which is the parent company of ABB India, has reported its quarterly numbers for the second quarter of CY26 today, and in that they have mentioned the order inflow numbers for ABB India as well. So let's look at the whole bull versus bear case scenario to understand both the positives as well as the negatives. The ABB Global Group has reported an 81% year-on-year growth in the order inflows of ABB India. So that is hinting at a good quarter for the company going ahead. But on the flip side, this 81% growth has come on a lower base, because in the same quarter last year, the ABB India saw an order inflow growth of just 4%. So that 81% number might look big, but it's on a lower base. On the second side, if we look at the data center side of the business, around 14% of the entire backlog of ABB India is data center business, and the deliveries are stretching till CY28. So that means that the company has good execution visibility in the years coming forward. But on the bear case side, this data center exposure is limited when we compare it to peers like GE Vernova, TND, or even other players like CG Power or Hitachi as well. On the next side, Incred is actually expecting an order inflow of 5,500 crores in the first quarter of FY27. But on the flip side, there are some execution concerns, because the logistics are delaying deliveries for the company. Even some geopolitical issues that we are seeing in the recent months, that is going to have an impact in this quarter. Another point is that in this quarter, the order inflow will include a 400 crore order from Cochin Shipyard, that is for 2 electric tugs. So that means that the ABB is trying to diversify itself into other verticals like marines as well. But this marine business is very niche in nature, and the near-term earnings impact from this sector is very unlikely for ABB India. And lastly, the stock has seen some amazing momentum from February 2026. The stock has gained nearly 65%. It is currently trading at the highest level since December 2024. So huge momentum is what we have seen in the company. But Incred is estimating an EPS CAGR of just 13% till 2027. So that is a very small number, and compared to the PE ratio at which ABB India is trading at, that is 103 times, that seems a very small growth. Lastly, on the analyst recommendation side as well, around 7 have a buy rating on the company, with 9 having a hold rating and 16 having a sell rating. And the 1-year return potential for the stock stands at around negative 16 to 17%. So that's the entire bull versus bear case scenario for ABB India.
The stock is up and about. Thanks so much for that part. The stock is up and about, but should you use these opportunities to sell? Nagraj, first on the technical side, and then we'll go to Nirav for a view on the fundamentals. Would you use any upside in the stock to take money off the table?
I don't think so, because the chart pattern is indicating a strong upside breakout of the 5-6 weeks consolidation moment. Whenever the underlying shows such kind of a breakout with rise in volume, I think certainly that is a candidate of a more upside. There may be a consolidation here and there for at least a smaller version, but I'm expecting more upside to come from here onwards. So 8,500 is going to be the next hurdles to be watched in the near term.
Then, would that be your target, and where would you place a stop loss?
I think the support is somewhere around 7,000.
Okay, and Nirav, I'll come to you on the fundamentals, because a technical chart might indicate something, but the fundamentals don't change so quickly, right? The earnings trajectory will ultimately decide what the valuations and the multiples it attracts. So therefore, from that perspective, would you also be with the majority, which is that you should probably sell at this moment? I think you might be on mute. Okay, there's a bit of a technical issue. We'll try and fix that and come back to you. In the meanwhile, let's talk about MRPL. And the fact is that this was a strong contender for stock of the day. It is up as much as 10.4%, not too far away from the high point of the day, reacting to numbers that were better than expected. The revenue coming in at 60% higher, as much as 38,250 crore rupees. The margins coming in at 3.4% compared with 7.4%. And the PAT number at 946 crore rupees compared with 117 crore rupees or thereabouts. Now, the PAT, of course, includes a one-off income of 470 crore rupees from the petroleum division, and the calculated GRMs, and these are essentially the gross refining margins. The reason why the stock is probably doing better than anticipated, or actually moving up by as much as 10%, and why there is also a positive read-through for the oil marketing companies, is that that number stood at $8.3 per barrel, and that was better than expected. So therefore, what does this mean for the OMCs? The higher reported GRM could imply a similar beat for the other OMCs as well. So the rest of the pack in focus. Of course, Chennai Petro, which often moves in tandem with MRPL, is also gaining ground in trade today. Now, that 470 crore one-off income is something that has bolstered the PAT. There is also inventory losses that the company has faced that are driven by falling crude oil prices. The gross debt has actually fallen on the back of strong cash flow, and there's a higher forex loss that has also lifted other expenses. So quite a few other factors that have come into play for MRPL. But Nirav, I believe, is back and can hear us, and I hope we can hear him as well. Nirav, you were making a point on ABB.
Yeah, Alex, sorry for the interruption.
No problem.
As far as ABB is concerned, I think the recommendation is to hold the stock, because the company has been doing quite well on the electrification front as well as the motion business. The automation business continues to be a little soft, but overall, I think the order book continues to be quite healthy. We are expecting some strong orders, and good amount of traction is expected.
We seem to have lost Nirav's audio,
Again.
but I think we'll get back to Nirav on his view on MRPL. But I think the other counter that's made significant moves today is Mrs. Bector's, after Abacus buying nearly 1% stake in this particular counter. Let's try to pull up the chart and see as to how it's done. But Alex, we were discussing about this, right? It's been a good candidate in terms of where revenue growth stands, because 3-year CAGR has been around 16%. But in the last 3 years, if you take a look at the PAT numbers, it's not moved much.
Why is that,
and,
though?
It's also because a lot of things are playing out, right? In terms of volumes, it's been under pressure. There's also inflation playing its part. And I mean, I'm not exactly sure as to how the price hikes have taken place for Mrs. Bector's, but I think they've not passed it on completely, and that eventually weighs on the bottom line. And that's why the PAT number has not moved much. But despite that, a top line CAGR of 16% is something that is probably what Abacus has spotted, because no other FMCG's company has been able to do that.
And
right?
it was trading very close to 52-week lows as well, right?
Correct, that's true. And in terms of valuations also, I mean, if you take a look at as to how it fares as compared to something like a Britannia, it's fairly, I mean,
what are the multiples like?
I'll try to pull the multiples up, but in terms of especially for Mrs. Bector's, it's at 42 times versus that. If we can try to pull up the Britannia PE, it's around 50 times. But 1 year forward probably looks more attractive, and that's why probably Abacus has gone ahead and just coming back to the VAMM episode where we did a comparison between Abacus and Helios, and where the strategy that Abacus generally adopts is slightly more aggressive as compared to Helios, and probably that's the bet that they've taken in Mrs. Bector's also.
Very interesting. So just for people who are not aware of Mrs. Bector, it was listed in 2020, and it's been not the best journey so far, because it's been a tough 3 years, as Mahima just pointed out, on the bottom line front. This is a company that manufactures biscuits and
Correct.
also bread, I believe,
Yes,
right? So
yes.
it sells bread to a lot of companies that utilize that bread for fast food chains, etc. also utilize that bread. Since listing, the stock is down about 33%. It was started by Mrs. Bector herself. Let's move on and talk about Wipro, which is set to announce its Q1 numbers today. Of course, the IT pack as a whole gaining ground, and Wipro was one of the top gainers. It continues to trade with gains of about 1.8%. Just me joining you with a quick take on what you should expect from the numbers. Wipro has been traditionally the weakest of the pack. Just me, what are the key numbers to watch out for?
Well, you're looking at another weak quarter for this particular counter. If you look at the CC growth, we're estimating anywhere between negative 1.5 to a negative 1% growth in degrowth in this particular quarter. Well, the management had guided earlier negative 2 to 0%. So the overall CC growth is coming in that range itself. Now, in terms of the key numbers, we are estimating the overall revenue to see an uptick of 2%, while the overall EBIT will see a downtick, expected to see a downtick. Well, the margins could again decline by nearly 77 BPS. That is on the back of that wage hike and the deal ramp up that we saw in this current quarter. In terms of net profit, even that could see a downtick. Now, in terms of the key watch out in this particular counter is the guidance. While some brokers like Nuvama and Jefferies are estimating the guidance could see a slight uptick from negative 1 to positive 1%, and something like Citi expecting anywhere between negative 0.5 to a positive 1.5. So guidance become key crucial as Wipro gives a guidance of 1 quarter in advance. So they'll be guiding for the Q2. Now, apart from that, the key things that will be in focus for this counter is the overall AI-based revenue, if they are disclosing that, the AI deflation, the environment, and how the overall slowdown is panning out for the company. And last, the BFSI segment as well, as we did see slight softness in the previous quarter. How has BFSI changed altogether?
Got it. All right. While you're with us, there's also Tech Mahindra to talk about, right? So what are the key numbers to watch out for there?
Well, for Tech Mahindra, we're expecting slightly better than flattish result in this particular quarter, and the focus here would be the overall margin growth. The company has been increasing its margin for 10 consecutive quarters, and they want to reach that 15% margin goal, and the commentary around margin will be a key focus. Apart from that, we also make a note that Accenture had a good telecom business altogether, so as a cross-state, we are expecting the telecom business to do well for Tech Mahindra as well. Apart from that, the non-telco business is something that will be in focus and commentary around that, and we'll also, as the management gets some information all around the deal wins. We're estimating deal between 800 million to 1 billion and how the deal wins have panned out in this particular quarter.
Got it. All right. So those are the things to watch out for. Nagaraj, it must be said that the IT pack as a whole has done reasonably well today. Of course, it's off the high point of the day. What trading strategies, if at all, would you suggest for this cohort of stocks?
I think IT seems to have bottomed out, and we have seen some decent bounce back from the lower levels. Important bottom formation is also there. And if you talk about the Wipro has bounced back very well from the last two sessions of weakness. I think the overall chart pattern is for the IT stocks as well as the Wipro is looking positive. One may look to create positions at this point of time, and more upside is likely for the IT sector as well as the stocks in the near term.
Nagaraj, the other pack which has seen profit booking for the last 2 days is real estate, because a lot of analysts were penciling that this move will continue. Is this just a short-term pause that we're seeing and rally will continue for the real estate space, and anything in specific that you like?
In real estate, I think this is just a healthy correction after a stellar move. This just correction is likely to end very soon, and chartically higher bottom formation itself indicates the strength of an uptrend. I think more upside is likely to come in the real estate, and I think DLF, Oberoi Realty are the one they are looking very positive at this point of time at the lower levels.
All right, Nagaraj, thanks so much for taking the time today, and pleasure having you as always as we wrap the day today in the markets. Let's pull up the intraday chart because we've come off quite substantially from the high point of the day. In fact, if anything, we will be ending near the low point of the day for the Nifty 50 at 24,064. It almost feels like deja vu because we've been here not too long back. For the IT index, and this was the one key outperformer, pull that up as well because we've come off very substantially towards the end of trade, and maybe some money being taken off the table for those relatively short trades, Mahima.
I think the bank Nifty is also something that is interesting to watch out for, because yesterday it was PSU banks that was putting pressure, but it's a combination of both PSU and private banks today. It's taken a knock and down by about 0.3%, but it's come off from the day's low point, at least for the Bank Nifty, but below the 58,000 levels for the Bank Nifty, because that's the crucial level that we were watching.
It is. As we're winding up, let's take a look at the heat map for the Nifty 50 just to see whether we've moved at all. We were even Stevens at the start of India market close. We are more or less even Stevens with regard to the green and red, even as things stand right now. Let's talk about some of the losers, though. You've lost a little more ground here, and that I think is the reason why you've slid. Eternal is the underperformer. HDFC Bank losing a further 0.1% or so, ending with cuts of close to 1% or thereabouts. Larsen & Toubro has been a rank underperformer in the recent past as well. It loses another 0.33% today. Kotak Mahindra Bank, where there's a little bit of news flow. Axis Bank. So the entire cohort of private banks losing ground today.
Yeah, the mid cap 150 and the small cap 250 also. Let's see as to how the broader market is ending. Mid cap 150 down by about 0.4% at the day's low point, but the small cap 250 has recovered and is now trading just by about 0.6% or 1.5% of gains. I think this list would be interesting to watch out for because it is very stock specific, right? There's either news flow or earnings which is causing that movement coming in counters. MRPL still up by about 11%, ending 11% higher on the back of strong numbers. We'll see as to how other OMCs also do on account of that. But ABB is the other one which has stood out. Of course, down from the day's high point, but still trading 6% higher. Dixon on the back of the mobile PLI being announced. But on the flip side, you have ICICI Lombard significantly under pressure, closing almost 11% lower. Weak set of numbers is what's caused that pressure. SW Solar also similarly weak set of numbers. Nuvoco Vistas now probably seeing profit booking coming in.
You know, for HDFC EMC, the numbers were actually pretty good.
Pretty good,
but
yeah.
But having said that, a lot of brokerages coming out today and one or two of them reducing their call. They have actually increased their target price, but they've reduced their call in the stock. So from a buy, they've moved to an add, and they've said that the upside potential for the stock is not very significant from this point.
So risk reward is
as a result of which people have taken money off the table. UTI Asset Manager, a few other asset management companies losing ground alongside HDFC EMC. But it's been an interesting day of trade. You've had the equity markets come off the high point of the day, pretty range bound for the benchmark Nifty 50. It's going to be interesting to take a look at the earnings in the IT pack. A couple of them posting numbers post-market hours. That's Wipro and Tech Mahindra. You'll find all of that action right here on NDTV Profit. But in the meanwhile, from Mahima and myself and the team that put the show together from the NDTV Profit Suzlon studio, it's a wrap. Thanks so much for tuning in. This is NDTV Profit.
Co-powered by CoinSwitch.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin remains range-bound near the $65,000 mark. DTCC starts SEC-cleared tokenization soft launch. Bitcoin ETFs breaks 8-week outflow streak. And lastly, Japan's upper house committee has backed Bitcoin ETFs. Well, let's also about some of the myths that should be debunked about crypto. Now, the myth is Bitcoin has an infinite supply. The fact is Bitcoin's total supply is permanently capped at just 21 million coins. Now, one of the biggest misconceptions about Bitcoin is that more coins can be created whenever needed. In reality, the Bitcoin protocol limits the total number of Bitcoins that can ever exist to just 21 million. Once that limit is reached, no new Bitcoins will be created, and this becomes a built-in scarcity, and this is one of the Bitcoin's defining features and is often compared to gold. Unlike traditional currencies where central banks can increase the money supply based on the economic conditions, Bitcoin's supply cannot be changed. A simple way to think about is it's a prime real estate, say in Bombay or Bengaluru. The amount of land is fixed. As more people want it, the scarcity can increase its value over time. Now let's see, the Bitcoin works in a similar way. Now if there is a demand for Bitcoin and it's growing globally, its supply cannot expand to meet that demand because the 21 million limit is built into its code. Now importantly, you don't need to buy a whole Bitcoin. Each Bitcoin is divisible into 100 million smaller units, and guess what? It's called Satoshis, making this impossible, or I could say possible, to invest even the smaller amounts. Understanding Bitcoin's fixed supply helps people to view this as a digital store of value. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस तेल में।
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have really fared today, viewers. So markets have ended marginally lower but sharply off highs in a volatile session, and Nifty has managed to hold the psychological 24,000 mark for the second straight day, aided by heavyweights like Bajaj Finance and also ITC. If you look at the broader market, so they have ended lower too. Here's consumer durables and IT shine in an otherwise volatile session, while realty, financials and defense have led the losses in trade. And overall, market breadth, however, remained negative at close as declines have outpaced the advances in trade. Let's look at some key buzzers. First up, we have BHEL, which has delivered a strong set of first quarter results, comfortably beating the street estimates across all key financial metrics. Revenue has surged on the back of robust execution in the power business, while improved operating leverage has helped the EBITDA return firmly into positive territory. Now, better project execution has also drove a sharp turnaround in profitability. Next up, we have electronics manufacturing services stocks. So they were in demand with Dixon Technologies, Keynes Tech and Cyient DLM rallying up to 7%, and the gains came after Centre has extended customs duty concessions on key machinery and also components used in electronics manufacturing until March 2029, and this move is expected to lower the input cost, improve long-term cost visibility and even encourage fresh investments in domestic manufacturing. So brokerages believe that the policy will support capacity expansion, localization efforts, and also strengthen India's competitiveness as a global electronics manufacturing hub. Here's agricultural linked stocks are in focus as analysts have turned selective amid a widening monsoon rainfall deficit across parts of the country. While weak rainfall could really weigh on the crop output and also rural demand, brokerages believe that the companies with diversified businesses and also strong pricing power, they remain better placed. So analysts continue to prefer select names in the agrochemicals, irrigation, and also farm input space, while advising caution on businesses heavily dependent on normal monsoon. Next counter to look at is ABB India. So the shares have surged nearly 10% to a fresh 52-week high after parent company ABB Global has reported stronger than expected second quarter results and also raised its full year outlook. And the strong commentary from the parent has lifted the sentiment for ABB India's growth prospects as well, with the market also expecting sustained order inflows and also healthy execution in the quarters ahead. Next counter to look at is MRPL. So the shares have surged 13% after the company has reported a strong set of first quarter earnings. And this has been supported by improved refining margins and also healthy operational performance. So the sharp rally also came after technical analysts, they flagged a breakout pattern there, suggesting that the stock could really see further upside if momentum really sustains. Next counter to look at is HDFC Asset Management. So the shares, they've fallen nearly 5% despite reporting better than expected first quarter earnings. And this decline came as investors have booked the profits after the recent rally, while some analysts have pointed to rich valuation despite the strong performance. So the AMC has posted healthy growth in profit, and this has been backed by higher assets under management and even steady inflows. Here's ICICI Lombard General Insurance. The shares have tumbled nearly 10% after the company's first quarter earnings have fallen short of the market expectations. So this weak performance, was driven by higher claims, also pressure on the underwriting margins and even softer profitability. So while analysts remain constructive on the company's long-term franchise, they believe that the margins, recovery will be the key factor to watch in the coming quarters. And Axis Bank will be in focus as it announces its first quarter earnings, with analysts also expecting another quarter of steady profit growth. The street is expecting healthy loan growth to really support the earnings. And although net interest margins or the NIMs are likely to remain under pressure due to higher funding costs, investors will also closely watch the asset quality, deposit growth, and even management commentary on the credit demand. So another key focus will be whether the private lender really announces an interim dividend following recent speculation around a possible payout. Here's next counter to look at is Polycab India, which has reported a strong set of first quarter numbers with revenue rising 39% and net profit also growing more than 32% annually. So the performance was led by robust growth in its wires and cables businesses, while the FMEG segment has also delivered a sharp improvement in the revenue and also operating profit. However, the EBITDA margins have seen a modest decline there, indicating some sort of pressure on the profitability despite strong top-line growth. Next counter to look at is ITC Hotels, and it has reported a strong first quarter performance with net profit rising over 35% annually on the back of healthy revenue growth. So EBITDA has also grew nearly 20%, while operating margins have improved to over 31%. So the results suggest continued strengthening in the hospitality business, and this has been supported by robust travel demand and even higher other income. Next counter that was buzzing away in trade was Himadri Specialty Chemicals, and it has been in focus after reporting a strong first quarter performance. So the company has posted 28% revenue growth and also a 27% rise in the net profit, year-on-year basis. And while also announcing a 240 crore of capex plan to expand its business, the positive earnings and also the growth outlook have really helped the stock rally more than 30% over the last 2 months. And your next counter is Powerica, which continues to see strong buying interest after securing a 100 megawatt wind power project. So the company has emerged as a successful bidder with a discovered tariff of about 3.85 per unit. So this order win has really added to the positive sentiment, with the stock now up more than 35% over the last 24 trading sessions and also extending its winning streak for a second consecutive day. Viewers, next counter to look at is Mrs. Bector's Food, and this is in focus after the stock has extended, its winning run for a second straight session, and the shares have climbed to their highest level in 2 months, recording their biggest single-day gain since February 2026. And the sentiment has received a boost after, Abacus investment acquired 29.74 lakh shares in the company, also attracting fresh investor interest. Next counter to look at is Jupiter Lifeline Hospitals, which is continuing its strong up move, with the stock extending its winning streak to a fourth consecutive session. Shares have really climbed to their highest level since November 2025 and are really up more than 22% over the last 24 trading sessions. Sentiment has also been supported by promoters, releasing the pledge on 1 crore shares, which is a move often viewed positively by the market. Viewers, Uber has launched a public takeover offer for Germany's delivery hero in a deal valued at around $14.8 billion. Now, if this is completed, the transaction would really create the world's largest food delivery company outside China. And this move marks Uber's latest push to strengthen its global delivery business as competition really intensifies, particularly from rivals such as DoorDash, which has been rapidly expanding its international presence. Viewers, TSMC has announced another $100 billion investment in its Arizona operations, reinforcing its long-term commitment to US chip manufacturing. Now, the world's leading maker of advanced AI chips has also said that demand driven by artificial intelligence is really expected to remain robust through 2030. Now, backing its optimistic outlook, TSMC has also raised its capital spending forecast for this year. And this is signaling continued confidence in the global AI boom. Your SpaceX shares have fallen below their IPO price just over a month after the company's market debut. The stock has now retreated sharply from its post-listing high, and also highlighting continued volatility in the technology sector. The decline means that investors who bought the stock around its market debut could really be facing losses, even as the broader Nasdaq has seen far more modest moves. Let's look at some national news now, viewers. The Enforcement Directorate has carried out searches at 13 locations across Uttar Pradesh as part of a money laundering probe linked to an alleged terror funding and illegal infiltration network. Now, the case really stems from an FIR registered by the Uttar Pradesh's ATS. Now, they have alleged an organized syndicate which has helped Rohingya and Bangladeshi nationals really enter India illegally, also procuring forged identity documents and also settling across different regions. So the ED has said that it is also examining the flow of foreign funds through a charitable trust and even other entities suspected of really diverting the money through layered banking channels. Because the centre has released the draft Case 3 norms for public consultation, proposing tougher fuel efficiency and also emission standards for passenger vehicles from April 2027. And for the first time, viewers, the draft has also offered special recognition to ethanol and other biofuels, allowing automakers to really claim lower than actual, tailpipe emissions, while also assessing compliance. And this is a move which is aimed at encouraging cleaner alternative fuels. US Prime Minister Narendra Modi set to visit Punjab on Friday to unveil major road infrastructure projects worth over 5,200 crores. Prime Minister will inaugurate the completed Zirakpur-Kurali Greenfield Highway. I beg your pardon. And also lay the foundation stone for Zirakpur Bypass and the Chandigarh Airport Aerocity Greenfield Highway. So together these projects are aimed at easing traffic congestion across the Chandigarh Tri-City region, improving intercity connectivity and also reducing travel time for commuters and freight movement. Here's the BJP's top leadership has kicked off deliberations on a major organizational overhaul. Prime Minister Narendra Modi, Home Minister Amit Shah and other senior leaders have met to discuss a proposed reshuffle and the appointment of key office bearers. The exercise is expected to shape the party's organizational strategy and even the leadership structure ahead of the upcoming political challenges. Whereas the IMD has issued a fresh warning of an intense monsoon spell with heavy to very heavy rainfall expected across several states over the next few days. The forecast has raised concerns over flash floods, waterlogging, landslides and transport disruptions, especially in hilly and low-lying regions. Authorities have urged residents to follow weather advisories and even avoid non-essential travel in areas expected to receive extreme rainfall. And the Arunachal Pradesh administration has restored connectivity to strategic border outpost of Dam Huri after flash floods have washed away a key bridge earlier this week. Now, working alongside the 85 Road Construction Company, officials have installed a makeshift bridge despite heavy rain, difficult terrain and even challenging conditions. And the restoration has reopened access for residents, emergency services and even essential supplies, while quick response teams continue to relieve and even damage the assessment operations in the affected areas. Here's the US-Iran conflict continues to escalate, with American forces launching a fresh wave of strikes across Iran, including targets near Kesh Island. Now, Bandar Abbas and also Chabahar. Now, Iran is saying that it really activated the air defense over Tehran and even claimed to have shot down a US MQ-9 drone. So meanwhile, the US military is saying that it has disabled an oil tanker heading towards an Iranian port in the Strait of Hormuz. And as tensions are mounting and even risk to global energy supplies are growing, oil prices have now risen for a fourth straight session. Whereas the Middle East conflict has escalated further after Iran has said that it targeted military bases in Kuwait and Jordan in response to a fresh wave of US strikes. Air raid sirens sounded in Bahrain. Now, while Kuwait has said that it was responding to hostile drone threats, Iran's top negotiator has described the crisis as an existential war and also reiterated that control of the Strait of Hormuz remains central to Tehran's strategy. Meanwhile, US President Donald Trump has said that Iran wants settlement but insisted that Tehran would be ultimately defeated. Because the International Energy Agency has warned that the global economy could really face a fresh shock if the Strait of Hormuz crisis isn't really resolved within weeks. Now, attacks on shipping, thinner vessels and traffic and even disruptions to oil and gas and fertilizers flow are really keeping the markets on edge. Now, with one of the world's most critical energy routes under pressure, concerns over supply chains and even global growth are once again moving to the forefront. Whereas the United States has announced a 25% tariff on most imports from Brazil effectively from July 22nd. And this is marking the first major step under the Trump administration's new trade strategy. Now, the move follows investigations into alleged unfair trade practices under Section 301 of the U.S. Trade Act after the Supreme Court has struck down the centerpiece of the earlier tariff regime. And the new framework could really eventually be expanded to other trading partners. Whereas England's wait for a first World Cup final since 1966 continues after a dramatic late collapse against Argentina. Now, Thomas' side looked on course for victory after Anthony Jordan have really, gave England the lead early in the second half, and they were still ahead with just 5 minutes of normal. Now, time remaining, but Argentina produced a stunning turnaround with Zero Fernandez, leveling, I beg your pardon, with Enzo Fernandez leveling in the 85th minute before substitute, really headed home a stoppage time winner from Messi crossed to seal a 2-1 victory. Now, Messi has assisted both goals as the defending champions have booked their place in the World Cup final, where they will face Spain in New Jersey, England. Meanwhile, will take on France in the third place playoff in Miami. Viewers, we are getting to know that Wipro is out with its quarterly results, and let me just take you through the numbers first. Net profit stands at 3,352 crores versus an estimate of 3,423 crores. Revenue, if we look at, stands at 24,479 crores versus estimate of 24,601 crores. And they're also going to pay an interim dividend of 2 rupee per share. EBIT margin stands at 16% versus estimate of 16.4%. EBIT is at 3,829 crores versus estimate of 4,037 crores. My colleague Jasmeet is here. Jasmeet, I think it's a miss on the estimates front. What do you have to say on the numbers that you're getting?
Well, as rightly said, the numbers are missed in terms of the estimate. The revenue has come in line with the estimate. We were estimating the revenue to see an uptick of 1.5%, and it is seen an uptick of 1%. So revenue is in line with the estimate, but the EBIT, the picture changes over there. The EBIT we were estimating to be down about 3%, but the EBIT is down about 8%. That's a huge miss on terms of EBIT, and even the margins. In this quarter, we had the wage hike, and we also had the other aspects of deal ramp up. So that's why we are seeing the miss on the EBIT margins as well. But we also have analysts joining us, Mr. Mayuresh Joshi. Hello, Mr. Mayuresh. What's your first take on the numbers here?
Absolutely in line with estimates. In fact, a little bit on the lower side as far as the IT services revenue is concerned. And therefore, I think the trend that Wipro probably has been going through in terms of numbers, in terms of earnings delivery, has largely been very, very sound.
But in terms of the overall margin aspect, we were penciling in anyway margin for the entire company, anyway margin downtick of about 70 to 80 BPS on the back of that wage hike and the deal ramp up in this quarter. But the overall margin downtick is about 160%, 160 BPS points, and the margins are back to that 15.5% level. So what's your comment on the overall margin front?
So it was expected that wage hikes will take sheen off the margin and in some element in terms of the deal ramp up aspect as well. But it is a little bit worse off than what the worst analysis and estimates on the street were. And therefore, one will really have to dig in whether there were one-offs in the margin as one sees it. But again, I think traditionally, I think this has been a strong area of concern, that there has not been a ramp-up either in client acquisition or in terms of the margin performance. That is where I think Wipro is clearly lagging its peers.
Got that view. Now we're also getting some information on the guidance aspect. In the Q4, company had guided anywhere between -2 to positive 0.5. But in this quarter, for the coming quarter, that's Q2, they have guided between -1.5 to a positive 0.5. A slight positive tick here we are seeing from earlier flattish expectation to a positive 0.5. So what do you make of the guidance? Do you see the street will like this kind of guidance update?
No, so Jaspreet, I think it's hardly a difference, right? Even if they probably meet the higher end of the guidance, let's assume that on an annualized basis as well, that's not going to create a huge impact in terms of how growth is probably expected to peg out. They have to significantly ramp up their IT services and the other businesses with better margins. And in my opinion, again, I think even if the higher end of the margin is probably achieved, it might be something of relief for Wipro, but it really doesn't satisfy the vectors that one looks at in IT companies.
Rightly said, the 0.5 won't not make a difference to the street, as we had also few people estimating they would turn to a positive 1% growth. But I would like to also throw some light in terms of the overall deal win. We have seen the overall deal win in this particular quarter, the total deal booking has seen a downtick of 2.4%, whereas in the previous quarter it was quite healthy for the company. And the ramp-ups are something that has impacted the margin in this particular quarter. So how do you see the deal win trajectory, given the company also had slowdown in BFSI in the previous quarter?
No, so I think last quarter was relatively better. And again, I think you come back to the same story. If you analyze this and then spread out how Wipro's performance has been over the last 8 quarters, every quarter has a story of its own. And that is what creates uncertainty in terms of investors probably trying to assume a steady state growth that comes through, which probably does not happen because after a couple of quarters, you will have one quarter where you'd probably see a miss. And that too from a significant one, both in terms of expectations of the margin performance as well as bottom line growth. And therefore, I think the inconsistency in terms of reported numbers probably is one of the major pointers as far as Wipro's underperformance is concerned compared to the index and this year.
Well, got that. We have also a few numbers on the BFSI front. We did note that the Q4 was a little weak for company in the BFSI front, and the Q1, the major focus was on the BFSI angle. And even in this quarter, we are seeing a downtick of about 1.2% in terms of the QOQ figures of the BFSI. But on the other hand, we also have engineering and manufacturing. Even that has been quite weak for the company. So how do you see the BFSI being the major bread and butter for the company going ahead, given that it has been weak for Wipro over the last 2 quarters compared to other competitors?
It's as simple as that. I think they need to ramp this up pretty robustly, and they have to ramp this up in a more consistent manner. Unless that probably happens and that gets translated into reported numbers, along with better margins, I think to make a base case scenario in terms of an improving profile, both from an earnings perspective and a return ratio perspective, seems to be a little bit on the softer side. So I think it's the onus is up to the management to probably ensure that they execute well and they ramp up more consistently in terms of the largest verticals that they have to offer.
Right, Mayuresh, Himakshi joining here. Mayuresh, Wipro has seen valuations consolidate over the past few months after this phase of consolidation. What could be the next trigger for a re-rating? Will it be a stronger earnings or better execution margin expansion? What is it really that you're picking up?
I think a combination of both, right? In terms of revenue accretion, in terms of their key segments, ramp up in terms of the client offerings that they probably have to deliver. Some element of AI also in terms of getting added to the mix, which probably will lead to a better margin profile as well. And they have to execute well. I think execution is key in terms of ensuring consistency in numbers that probably come through. You always have a quarter or two in terms of headwinds for the sector as a whole, headwinds in terms of how they are probably addressing client needs as well. But this probably comes to in the key verticals, along with value adds that they probably give to their clients, leading to margin improvements. I think that inconsistency is something which is causing a heartburn, in my opinion.
Got that point, Mr. Mayuresh. But I would like to also get your understanding and views on the overall AI revenue front. So we have seen few companies get pressurized, as per few reports, they're getting pressurized to report the AI revenue. While at this point, we have seen 2 out of top large 5 companies give out their constant AI revenues. So what's your view? How important is it for the companies to come out and give out the AI or the advanced AI revenue for the matter of fact?
So I think that's where the entire space has been, and therefore I think number is one good thing, because I think that becomes a mapping point in terms of how the AI revenues are progressing over the next few quarters. The companies which will be outliers is where I think these revenues will show consistent trend on the upside every quarter. And therefore I think with the kind of that you're probably seeing by the platform companies, the innovation as far as enterprise software is concerned, our IT companies will no doubt play a role. But I think they need to ramp this up organically, inorganically, both. And therefore, I think the reported numbers, though in mid-single digits and higher single digit for a few of the companies, become a benchmark. And I think that's a good sign for the sector as well, because that will keep the competition intensity extremely high and their own targets in terms of ramping this up quite significantly when competing with global players.
Thank you so much, Mayuresh, and also Jasmeet for breaking down those numbers for our viewers there. And clearly, there's a miss on the estimate front, but let's see what really pans out for Tech Mahindra now, which is about to report its results very soon. And with that, viewers, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
I got blooded in the stock market in the early 90s when Narayan Murthy and Infosys went public, and forever after that we've been spoiled. We look for businesses run by entrepreneurs like Narayan Murthy who have boldness, who have vision and have a great sense of corporate governance. So some of the qualities that we admired in the stocks we invested, we also look for those in the entrepreneurs that we invest in. So those are the best qualities to look for.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup.
Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar and with me is my colleague Jasmeet. So Jasmeet, Wipro results just came out. They missed the estimates, and what I missed the most in their numbers so far, and of course the commentary will be something very important to watch out for, is the AI contribution. Because TCS has already mentioned the contribution figure in terms of the percentage of the revenue that TCS has really got in the first quarter from the artificial intelligence business. Though they said that they are short-term in nature and every quarter the team will be working on getting more AI deals struck. So that was one important aspect. When we talk about other mid-cap companies also in the IT space like LTM, they have also given an important figure and also the pathway towards the AI thrust in terms of the percentage of the revenue. revenue. But what we are looking at is Wipro's numbers, and Jasmeet will tell us more. Jasmeet, do you think that the absence is conspicuous when it is about the AI contribution, at least from the numbers that they have shared?
Well, Nisha rightly said, we just spoke to the analyst right now about the similar information that, how important it is for the companies to report its AI revenue, given everyone is just tracking the company's AI success by its AI revenue figure.
That's the most important thing in this particular earnings season, and Tech Mahindra results are also out, and Jasmeet will be talking about that. Net profit at 1,465 crore rupees in the first quarter for Tech Mahindra. Revenues coming in at those particular figures, and let's take a look at those numbers and what was the estimates when we talk about the Tech Mahindra numbers. The EBIT margin have come in at 14.4% versus the estimate of 14.1%. So a slightly higher tick when it comes to the Tech Mahindra's EBIT margin numbers when we compare it to the street estimates. Revenue figures, they are also looking like slightly higher than the street estimates. On the EBIT front, 2,264 crore rupees is the amount, and estimate was slightly lower than that. But especially EBIT margin is something that we are watching out for, 14.4%. We just saw Wipro's numbers, which was a miss on all parameters versus the street expectations. But for Tech Mahindra, the numbers in terms of net profit, revenue, as well as EBIT margins on all three counts have been a slightly better number than what the street was really expecting. We are also looking at is the figures about the guidance in terms of the revenue growth. There is that figure that will really define the future course of action for Tech Mahindra and how they see this particular business. Aditya Shah, the founder of Hercules Advisors, joins in now. Aditya, good to have you on NDTV Profit. With the first print that is really coming in from Tech Mahindra's results, seems like it is slightly better than what the street was expecting. What is your first reaction on these numbers?
So I have not been able to look at the numbers, but if you look at the numbers, the constant currency growth is at about 1.3%. The revenue growth is at about 17%. The EBIT margin is at about 14.4%. So from my perspective, on the first look, the numbers look steady. In fact, a little bit positive on the positive side of it. Nothing to complain about that.
So when we talk, Aditya, about the numbers from Tech Mahindra in terms of the guidance, we just saw that Wipro has already given a minus 1.5 to plus 0.5% kind of a growth figure in terms of the Q2 revenue growth. So that is something that we are looking at. When we talk about Tech Mahindra, what are you expecting? And in terms of the AI thrust, again, that has been one of the commentaries coming in from most of the tech companies, IT services companies, which the street seems to like. So what are the expectations coming in from this particular number, and what will you look out from the management commentary?
For Tech Mahindra, deal ramp-up continues to be one of the most important things that we need to watch out for. The EBIT margin should have been closer to 15%. It has come to 14.4%. We need to see what affected the EBIT margin performance per se. Deal wins, I expect this quarter also to be in the range of $1 billion. So we need to see what is the deal win number. Management had stated that FY25 would be, FY26 would be a stable year, and FY27 would be where they would see better growth. So I expect better growth guidance from Tech Mahindra going forward.
Aditya Shah, it's Jasmeet Singh joining in here. Well, I would like to ask you a few questions with regards to the overall margin aspect. The management has guided for a 15% margin band by the end of this year, FY27. And in this particular quarter, we have seen they've expanded the margin of nearly 24 basis points, which is in line with what we were estimating. So do you see the management achieving the 15% band by the year end, or will it be sooner?
Of course, the deal wins will guide how the margin moves. I expect the margin to be in the range of 14.5 to 15% per se. That is where the margin should be over the period of next year.
Well, got that view. With regards to the overall business split, we had also seen that Accenture had reported a good set of numbers when it came towards the communication segment of the company. And given Tech Mahindra has majority of its revenue coming in from the communication segment as a telco, how do you see the telco panning out from here? And also, non-telco business was flattish for the company in the previous quarters.
So the telco, I have to look at the segment-wise numbers, but I expect Tech Mahindra to perform better than all the other companies, as telecom is a space which is performing relatively better, as you said, from the Accenture numbers as well. So I expect better performance from Tech Mahindra with respect to its exposure towards telco.
Well, got that view. For this particular quarter, as we are seeing, the overall BPS segment has stayed flat for the counter, while the overall revenue sees an uptick of nearly 4.2%, which is well above our 2% range, which we were estimating. But I would like to get your more views in terms of the overall geographical split. We have seen lately company has been focusing more towards other geographies as well. And as they had already mentioned that FY26 was more of a stabilization year for them, and FY27 will be a turnaround for the altogether company's operation. So how do you see the overall top line move from here on for coming 3 quarters, given generally H2 is a little weaker for the IT companies, and also on the back of that segmental split, how do you see the company panning out to other locations as well?
So we have seen the Asia Pacific region record a growth of 7.7% quarter on quarter. So that is where a lot of growth for the company is coming in. America continues to be fairly stable, and Europe has reported about 1% growth. So from my perspective, across Asia Pacific, that is where the growth for the company really is.
So Aditya, I wanted to understand, is the AI contribution going to be one of the most important things as you set out to really analyze the IT services performance for this particular earnings season, and vis-a-vis other competitors who have really given out the contribution of revenue from the AI and also the roadmap going forward, and given the importance of AI thrust in this sector, how will you assess both Wipro as well as Tech Mahindra on that respect?
So if you look at this, Tech Mahindra does not specifically disclose their AI-led revenues per se. We've seen TCS report about 8% of their revenues coming from AI. This was about 4.5% for HCL Tech. And for Wipro, this revenue was somewhere close to, for Wipro, this revenue was somewhere close to 4 or 5% as well. So from my perspective, going forward, market will see how this revenue continues to keep moving forward. For TCS and HCL Tech, they were high-growing areas. The AI revenues were high-growing areas. And the market will monitor if AI is growing higher, then the falling of this stock will abate, and growth, as market will see if the growth is coming back, the market will try to give some breather to these stocks.
Point of overall AI aspect, but I would like to also get some understanding with regards to the segment. As we're estimating, the communication segment of the company expected to do well in the Q1, but we do see a slight downtake. The overall communication is down about 1.3 odd% on QOQ basis, but on the other hand, we have manufacturing, which has grown about 9 odd% and taken the lead in this quarter. Is there anything to worry on the communication aspect front, given it's the largest segment for the company?
I don't think so. The communication segment continues to remain very strong. We need to understand from the management why the growth for communication segment was weak. The management will surely tell us, but I don't think there's something to worry about.
Got that point. And we have also seen in the Wipro that the Americas as a location was a bit soft for the Wipro company. While even for TechM, we have seen the Americas is down about 0.1% flattish. And for most of the companies, it has stayed flat in the Q1. So how do you see the growth in that trajectory? Do you think Indian companies are losing the market chunk from Americas, given that's the biggest location for the company?
So it has been flattish for Tech Mahindra. It has been flattish for Wipro as well. We have seen AI-led companies do much better in US. That's how it is. So America is a cause of concern for all of these companies. We need to hear out from the management as to what they guide for. But from my perspective, yes, America continues to be a concern for both these companies.
Well, got that point. Now, in terms of the deal win, I would like to also get some lights on this. If we're estimating anywhere between $800 million to $1 billion, and the company has crossed that mark and recorded about $1 billion or $1 billion of deal wins in this particular quarter, do you see the ramp-ups which are coming? Even the Q4 was a strong deal win. Q3 had a strong deal win as well. So do you see the ramp-ups coming in the Q2 and Q3 might have some impact on the margins?
Absolutely. As I said, on the margin front, the margin will ramp up as more and more deal wins come in. So from my perspective, I expect the sustained momentum of deal win to continue in Q2 and Q3 of this year as well.
Yeah, looking at these particular numbers, does it call for an upgrade or a downgrade of the stock? How will you assess the stock after these numbers from the print that you've seen?
So Wipro, a tad bit disappointing numbers. So I will stay away from Wipro. Second, good set of numbers. No buy, no hold. My top pick in this sector continue to remain TCS and HCL Tech as of now. We'll wait for the numbers of Infosys and then take a call.
All right, Aditya Shah, thank you so much for joining in with your first reactions on the numbers of Tech Mahindra. And of course, Wipro as well as Tech Mahindra. It's an evening for the IT sector results, it seems. And Jasmeet has been working overtime for these numbers and giving us all the update. But of course, we'll wait to hear out from the management a few key highlights when we talk about what are we looking at and what's the market really looking at when it comes to both Tech Mahindra and Wipro's commentary from the management.
Absolutely. Now we have two companies out with the result. Wipro being in the negative side, we have seen flattish to miss on the overall estimates. On the other hand, we have Tech Mahindra, which has beaten the estimates. The top line has grown more than the estimated, while even the EBIT had expanded. We were estimating the overall EBIT margins to expand by about 4% and EBITs have expanded by 8%. So that's clear winner in the aspect of the EBIT, but in terms of the margin, while that's the main gameplay for the company, we're estimating an uptick of 27 on BPS, but in this quarter we have seen the company has achieved over 58 BPS of growth in terms of the overall EBIT margin. Well, lastly, net profit was something that was expected to rise by 18% in this quarter, but we'll see a slight miss in terms of the net profit, but again, we'll wait when the management get more understanding. The main concern I feel would be around the communication segment, given that's the largest segment for the company. Yes. Any commentary around that of how that has panned out for the company and how are the deals ramping up would be something to watch out for. And second thing which I will be asking the management would be in terms of the margin commentary. Yes. Once they achieve the 15% mark by FY27, what are the next goals? Are they planning to further expand the margins, or are they planning to increase the top line, or they might achieve the margins a bit early? So all of that questions will be answered once we have the management with us.
All right, so those are the important aspects to watch out for from the management of both the companies, IT companies, which have just given out the results. But of course, Wipro will be on our watch with the numbers on almost all parameters really missing the street estimates. Let's also take a look at the equity markets today and how they fared. And the markets ended marginally lower, but sharply off the highs in a volatile session. And Nifty really manages to hold the psychological 24,000 mark for the second straight day today, aided by the heavyweights like Bajaj Finance and ITC. In fact, the broader markets, they end lower today. Parth is right here to give us a complete roundup of all the market action. Parth, tell us.
So Nifty has ended on a flat note today as well, with Indigo and Wipro being the top gainers of the index, both gaining around 1.8%, while on the other side, Eternal was the top loser of the index, down over 3% today. On the broader market side, they have ended on a mixed note as well, with Nifty Midcap 150 underperforming the benchmark, down almost 0.5% today. This downside was led by ITC Hotels and HDFC AMC, both of which were the top losers of the index. ITC Hotels saw a downtick of almost 5.5%. This was on the back of a weaker set of Q1 results, and HDFC AMC also saw a downtick of 4.5%. On the other side, Nifty Small Cap 250 has ended on a flat note, with MRPL and Chennai Petro being the top gainers of the index. MRPL gaining over 10.5% and Chennai Petro gaining over 7.5% today. On the sectoral side, they have ended on a mixed note, with Nifty IT being the top gaining sector today, up over 0.75%. The top gainers of the index were HCL Tech and Wipro, both of which gained almost 1.8% today. On the losing side, we saw Nifty Realty being the top losing sector, down over 1% today. This down move was led by Prestige Estates and Phoenix Mills, both of which were the top losers of the index, both seeing a downtick of 2.5%. On the trend side, Nifty IT has snapped its 2-day losing streak, while Nifty Auto has ended in green for the second day in a row. Nifty FMCG also has snapped its 4-day losing streak, while Nifty Metal has ended in red for the second consecutive day. Also, Nifty Realty has ended in red for the 4th day in a row, while Nifty Oil and Gas has ended positive for the second day in a row.
All right, thanks Parth for getting us the full roundup of the market action for the trading day today. We also have one development on IPO-bound NSE, National Stock Exchange, which is expanding its derivatives basket. In fact, starting 12th of August, the exchange will be launching futures and options on the Nifty India FPI 150 index following SEBI's approval earlier this month. Now, the move is aimed at helping the foreign portfolio investors hedge their India exposure onshore in rupee terms. Nimit takes us through the details of this particular launch and why it's significant for the foreign investors. Nimit.
FPIs now in India will have another option to trade derivatives onshore, not just in GIFT City, but onshore and in rupee terms, as the National Stock Exchange of India has announced that it's adding derivatives to the NSE FPI 150 index starting August 12th. Now, this comes on the back of the SEBI approval received to launch these derivatives on July 8th, and essentially the NSE's idea is to provide another option for FPIs to trade and hedge in India using the rupee, not just in dollar terms at GIFT City as is being done currently. This is part of the larger, broader mechanism and larger policy move to bring more FPI money back into India. There's been an exurgence of late, but it's slowing down now. July, in fact, saw net inflow as well. This is going to help that and help bring more volume, especially in the derivative space, back to India. It's a first of its kind mechanism, and it's going to be launched from August 12th.
All right, thanks Nimit for all the details. Now, in a big boost for the electric vehicles, hybrids and also flexi fuel vehicles, well, the Power Ministry has proposed CAFE 3 norms from the 1st of April 2027. In fact, Sesa is here with all the details on what it means for the push towards alternate fuel-led vehicles.
Right, the Power Ministry has released the draft CAFE 3 norms proposing to roll out the next phase of fuel efficiency standards from April 1st, 2027 for a period of 5 years. The draft proposes progressively tighter fuel efficiency targets till FY 2032 and also proposes incentives for cleaner technologies. For the first time, it offers carbon neutrality benefits for ethanol, biofuels and compressed biogas, along with compliance benefits for approved fuel saving technologies. It also introduces super credits for electric, hybrid and flex fuel vehicles, a credit debit mechanism for automakers and also compliance credits starting at rupees 2,500 with the price increasing by rupees 500 every year. Now, automakers that fail to meet the targets could face penalties. However, manufacturers selling fewer than 1,000 passenger vehicles a year will continue to remain exempt. The CAFE 3 norms, have been debated since the first draft was released in June 2024. Maruti Suzuki opposed the original proposal, saying that it penalized small cars, while Mahindra and Mahindra argued against any preferential treatment. Now, a later revision introduced, weight-based relaxation for small cars, but even that drew objections from automakers such as Tata Motors. The latest draft now aims to balance fuel efficiency and climate goals with affordability concerns, although it now remains to be seen whether it can address the industry's concerns. The ministry has invited stakeholder comments on the latest draft until August 6, 2026.
All right, Sesha, thanks so much for getting us all those details. Completely out of time on this edition of Profit 360. But watch out for the management commentary coming in from both Wipro as well as Tech Mahindra in minutes from now. So stay tuned to NDTV Profit. Thank you so much.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the